And even the sectoral indices are bearing the brunt, right? Because from their respective highs, the real estate index, the PSU banks, the PSE index is all down between 20 to 25% from their respective peaks, which they had hit somewhere in June or in July of last year. Then in all of this broader market mayhem, we have completely forgot about the Nifty Bank, because that too has broken key technical supports, then almost broke the 48,000 mark as well in yesterday's session, and that too is down almost 6,000 points from its record high, or 12% in percentage terms. Now the key questions for the day though is that if there is a bounce, can that be sustained? More importantly, the comfort though comes from the fact that the December CPI was better than expectations. The dollar has cooled off, although the crude prices remain elevated. And how long can this bounce be sustained? The GIFT Nifty for now is indicating a relief. There was relief last Tuesday as well, but we know what happened after that. The bulls would hope that this would sustain.
Okay, Hormaz, thank you so much for that. That's how the market setup is looking like. But which are the important stocks that you should be keeping on your radar this morning? We have Vamakshi here to tell us about that. Good morning, Vamakshi.
Well, good morning, Vinny. Let me first start off with HCL Tech. The company reported numbers largely in line with estimates. CC revenue growth came in at 3.8%, slightly lower than expectations of 4.1%. The CC revenue guidance for FY25, the lower band of it has been revised from 3.5% to 4.5%. Margins came in line with estimates at 19.5%. Angel One reported net broking revenue downtick of nearly 10% sequentially, mainly on account of impact from F&O norms and weak sentiment in the cash segment. EBITDA margin declined to 39.3% due to higher OPEX. In addition to that, the board has approved an interim dividend of 11 per share and has appointed Ambarish Kenge as the group CEO with effect from March 6, 2025. Delta Corp, in an otherwise strong quarter, reported a weak set of numbers with revenue seeing a downtick of 7.5%, margins contracting from 26.6% to 16.6%. Anand Rathi has raised its revenue guidance to 980 crores and its net profit guidance to 295 crores. The PBT margin has improved sequentially to 43.9% due to lower operating expenses, and in addition to that, the board has gone ahead and approved a bonus issue in the ratio 1:1. Apart from that, United Spirits on our radar. Hina Nagarajan has resigned as the MD and CEO of the company. She will be replaced by Praveen Someshwar, who will be taking charge from 1st of April. JSW Energy has received an LOI for 3.6 gigawatt KSK Mahanadi thermal power plant. The company's resolution plan for this power plant has been approved, and the bid amount was 15,985 crores. BL is also in focus because they've received orders worth 561 crores since December 23rd, 2024. And lastly, we'll be watching out for Z Media. They will be raising funds up to 400 crores via various routes. They also approved increase in shareholding limits of FPIs and FIIs from 24% to 49%.
Okay, Vamakshi, thank you so much for that. Keep an eye out on those stocks in trade. But on that note, we're going to step into a very short break. But up next, inflation in India drops to a 4-month low in December. We bring you the highlights after the short break, so stay tuned in.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
My dad has won a medal for bravery. He's a major in the army. He protects everyone. Karan, what does your dad do?
Rohan, your daddy.
Karan, tell us now.
He's an LIC agent.
That's great. Imagine what if something untoward happens?
So?
Well, Karan's dad provides proper guidance to protect our family's future.
We are proud of our million-plus agents who continue to protect countless lives. We welcome you to LIC. Visit your nearest LIC branch.
The brightest minds the boldest ideas. From game-changing innovations to actionable strategies, meet the speakers who are convening to shape the future of climate tech in India. Environmental Defence Fund and CNBC-TV18 present Climate Tech Convening India 2025 on 14th January in Mumbai.
The greatest tool for transformation is education. And education is Chief Minister Bhagwant Singh Man's priority, especially for those who are deprived and backward. The Post-Matric Scholarship Scheme is an initiative that provides opportunity for the higher education to the students from scheduled castes.
If I would not have got this scholarship, then I might not be able to continue my studies.
For the year 2024-25, 245 crore rupees have been allocated for this purpose. The scholarship amount is directly transferred into the students' accounts.
There is no worry about where the fees will come from and how to get books. Our job is to study and succeed.
Under this scheme, 231,000 students have registered and 92 crore rupees have already been disbursed to them.
I am very happy for my parents because they don't have to struggle for my educational expenses.
Not only that, the outstanding amount of 366 crore rupees from 2016 to 2020 has also been paid, so that their dream for a bright future can be fulfilled.
I'm now able to learn artificial intelligence and machine learning, and thank you so much Government of Punjab for providing me this opportunity.
Their confidence comes from the Honorable Chief Minister of Punjab, whose relentless efforts are turning Punjab into Rangla Punjab.
Welcome back and thanks for staying tuned into Power Breakfast on CNBC-TV18. And on to the big macro data of the day. India's retail inflation moderated in December, coming in at a 4-month low. Lata Venkatesh is here to give us the details and decode the CPI data for us.
It's the best news that we have got for the economy in quite some time, that the December CPI has come in at 5.22% compared to our poll of 5.3%. And there were quite a few people, respondents, who were expecting even 5.4%. And now it's 3 months in a row that the inflation has fallen from 6.2 in October and 5.48 in November, now to 5.22. The average of October, November, December now is a little lower than the RBI forecast. So there will be a little bit of expectation that the Reserve Bank will look at the falling trade and show it as a reason why it can cut rates in February. The best part was the fall in vegetables, especially the tomato, onion, potato, top as it is called. That's fallen sharply, and economists tell us that if you looked at the January numbers, they are looking like falling very sharply in the first January as well. So that rekindles rate cut hopes. But overall, the worry is that food inflation is still at 8.39% compared to the 8.3% poll that CNBC-TV18 did. The only negative point was cereals inflation is not falling month on month, and even year on year is still at a high 6.5%. Likewise, edible oils, after the import tariffs were raised, that is still a 14% year on year inflation. Those are the two difficult points. But to counter it, core inflation, which is the non-food, non-fuel inflation, has fallen to 3.6 compared to the expectation of 3.7. So all told, a good inflation number rekindles hopes of a rate cut from the Reserve Bank in February.
Okay, Lata, thank you so much for that. But moving on to some earnings, tech giant HCL Tech posted a largely in-line set of numbers for the third quarter. This was post-market hours yesterday. Now let's go across to Rima, who's here to give us the highlights in terms of what this quarter was looking like.
Thanks so much for that. So HCL Tech's numbers were largely in line with street expectations. Revenues were slightly lower. Constant currency revenue growth came in at 3.8%, lower than consensus expectations of about 4.1%. But margin expansion is intact. The company's margins expanded to 19.5% versus 18.6%, and that drove an 8.5% increase in the company's profitability. So margin and profit performance was in line with street expectations. The company has also raised the lower end of its full-year revenue guidance. The earlier guidance was 3.5% to 5%. Now they're talking about 4.5% to 5%. And one of the reasons for the upgrade at the lower end is on account of the HPE asset acquisition that the company concluded in just December. Margin guidance remains unchanged at 18% to 19%. Deal wins are steady, a little over $2 billion. The management commentary is also fairly upbeat. They're talking about their deal pipeline being at an all-time high. Large deals were signed in AI and generative AI led. The average tenure of the signed deals is getting shorter. So overall, the commentary is fairly positive, and they also indicated the clients are looking to increase their IT investment in calendar year 2025.
Thanks so much for that, Reema. In fact, let's listen into what the CEO, C. Vijay Kumar, had to say on the deal win pipeline during the press conference.
Our pipeline continues to grow and remain strong. It's broad-based, and it is back on several deals led by our digital application business, engineering and R&D services, and digital process operations. Both Americas and Europe have seen a healthy growth in pipeline. We have a number of big deals across verticals and geographies and service lines, a really very robust and well-diversified pipeline.
And with less than 3 weeks to go for the union budget, we learned that from the government, considering that tweaking several custom duties is what is something that we could be expecting. Timsy is here to give us more details on this one.
Well, that's right. What we are given to understand from sources is that the government is considering a customs duty rejig on as many as 200 plus items to protect domestic companies. Sources say that currently the government is reviewing import duty exemptions that are given to these 200 plus items. The exercise is understood to be underway to assess to remove import duty exemptions that create an inverted duty structure scenario. Sources said that the customs duty rejig under this review exercise is likely to benefit sectors such as solar, EV, pharma, electronics and mobile phones, steel, etc. And yes, all of this is under active consideration. Sources added that the government is keen on having WTO compliant support mechanism for domestic companies and is eyeing some measures to protect the domestic companies from the Trump administration's protectionist policies. As of now, no decision has been finalized as yet, but definitely a detailed review is on the cards, and now to be seen is what all does the upcoming budget unveil for the industry when it comes from the custom duties side. Back to you.
Thanks so much for that, Timsy. But on that note, we're going to slip into a short break. But countdown to the budget 2025, India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be NDA government's first full budget after election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from the budget 2025 by submitting your wish list to CNBC-TV18's budget box, and tune in to your budget headquarters, CNBC-TV18, for unparalleled insights and coverage on Budget Day this 1st of February.
I want to soar above the skies and fulfill my responsibilities with LIC. Paid your LIC premium? On time. दिल की सुनो, LIC चुनो.
LIC, हर पल आपके साथ.
The brightest minds, the boldest ideas, from game-changing innovations to actionable strategies. Meet the speakers who are convening to shape the future of climate tech in India. Environmental Defence Fund and CNBC-TV18 present Climate Tech Convening India 2025 on 14th January in Mumbai.
Hyundai Creta Electric. Over 1 million have driven their dreams, and millions can't wait to. Hyundai Creta Electric. Electric is now Creta.
We have Kirloskar brothers at our earlier plants. What would your preference be this time?
Only Kirloskar brothers.
पापा, सिर्फ किर्लोस्कर ब्रदर्स ही क्यों?
यही सवाल मैंने भी तुम्हारे दादाजी से पूछा।
बाबूजी, किर्लोस्कर है क्यों?
क्योंकि किर्लोस्कर ब्रदर्स है।
सदियों से भारत का भरोसा किर्लोस्कर ब्रदर्स लिमिटेड।
हम मूंगफली बेचते हैं, अपना अकल नहीं। ये मैसेज देखिए, कहते हैं लॉटरी लगी है, लिंक क्लिक करके यूपीआई पिन।
You've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand.
Welcome back, and you're watching Power Breakfast on CNBC TV18. Now it's time to get you what's happening in the world of commodities. And Manisha is joining in with us to tell us just about that. Good morning, Manisha.
Morning, Vinny. Thank you for that. Well, I'll start with the crude oil prices because that was really buzzing yesterday. And while the prices are holding on the higher side of the range, we seem to have seen some profit taking from those kind of levels. So we are off those 4-month highs, but the concerns just about continue. The markets do believe that you could be looking at higher prices from here. The street will watch out for the U.S. inflation, weekly jobless claims, and retail sales. All of this data comes in for this week. And the point is that you have seen gains continue even as the dollar index is holding around those 2-year highs. So not just crude, but you have the metal prices which have seen some strength as well. So copper is now trading at around 2-month highs, and we also are looking at aluminum prices trading at a 4-week highs. Well, the Chinese numbers have come in on the stronger side. There is an expectation that you could be looking at stronger stimulus measures coming in from China as well. So those are a few factors which really seem to be supporting.
Okay, Manisha, thank you so much for that. So that's the update coming in the world of commodities. Now, bringing you some updates on the Los Angeles wildfires. Fire crews are making headway against the deadly fires that have scorched the Los Angeles area, which have crossed more than 60 square miles so far. Winds are expected to pick up through the next few days, and this will make the firefighting efforts more challenging again. More than 15,000 first responders are helping respond to the fires across Southern California. Investigation into how the fire started are underway. Reportedly, at least 24 people have died in the fire. And with that, we're absolutely out of time on this edition of Power Breakfast on CNBC TV18. Thank you so much for tuning in. But up next, Bazaar Morning Call will take the action forward.
Up to you. They also need to understand that yes, you know, she has done a lot for the country, and that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare, and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task. But I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but you know, maintaining that level is a different thing altogether, and it takes even more you know, time and hard work, and you know, it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back even harder.
I think the belief is very, very important. Just believe in yourself.
Bibi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, you know, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think
India's market news headquarters. Cutting-edge analysis. Influential insights. Market-moving intelligence. Broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. It's a Tuesday morning. We're getting to the thick of things. Yesterday was painful. Today, Gift Nifty is indicating perhaps could be a little bit of a respite. Let's see. I'm Prashant. With me, my colleagues Rupee and Nigel. Guys, hi, good morning.
Hi, morning, folks. I call it the day after, the morning after, right? Because after the manic Monday that we got, I think some semblance of just peace and sanity and even range-bound trade, you know, 50-point range. I think traders will be relieved even with that today.
Well, that's right. And wishing all our viewers who are joining in a very, very happy Makar Sankranti. And I think it's Pongal as well today. So happy Pongal, happy Makar Sankranti. And hopefully, you know, I think there's that saying, Til Gul Gyani God God Bola. I think the market participants will say, God God Bola Ani Karapan. That's the hope, I guess so.
Well, absolutely. And, you know, best wishes to all our viewers on this auspicious day and those who are celebrating. I mean, really the best from the CNBC-TV18 team. Just hoping that on a day like today, the market also gives us a bit of a break, right? I mean, I think that's the best that one can hope for after the relentless fall that we've seen over the last sort of many sessions now. Actually, in the last 4 days, you got about a 4% fall in the Nifty Bank. That's been the extent of the quick, swift downdrift. So let's start from the beginning, right? I mean, and the problem, of course, was US and the big macro markets, yields, rates, etc. We've not seen anything huge or humongous like what we sort of same time yesterday we were talking about big things. It's more settled. So equities, US equities mixed. S&P was up a little bit. NASDAQ ended about 0.4% lower. The 10-year it was up, but only 3 basis points. We are now up to almost 4.8%. And the dollar index is still there, about 109.42. So, a little bit of a cool off is essentially what we have seen here. Oil prices, we already saw this price in Asia in the morning. So 80.87. This is not good news. We were at about 80. This is not sort of bad news because we were at 81 when we started this morning yesterday. So it's just that, I mean, the change from last Friday shows you up about 1.5%. So in that sense, I mean, the dollar, equities, the rates, everything is not sort of cooling off or correcting in the favorable direction, but they're all right. I mean, things that you can live with, especially after what we've already seen yesterday. Later today, you've got the two things. The US CPI numbers will be top of mind. Of course, jobs numbers last Friday, the non-farm payrolls data was the big blowout data point, and can this pull in the other direction? We'll see, but don't keep hopes high. Fed speakers, there are 2 Fed speakers on schedule. Remember, the market has already kind of cut back rate cut expectations in 2025 to maybe 1 or 2. I mean, if you are to look at consensus expectations. Some, of course, are saying, well, no cuts this year, maybe a hike. So it's kind of moved in that direction. So in that sense, the speakers and what they say should be interesting and important as well. Now, just to sort of, look at the levels and where we left off things yesterday. So we ended below the November lows on the Nifty of 23,263. This is the level that we put out yesterday, but it just sort of went hot knife through butter kind of situation. Markets are oversold in the very near term. If you look at simple things like the relative strength index and other indicators, we are oversold. Look at the swing. We are oversold. On the downside, the next levels are to watch out for are 22,935. So, which is the 22,935 and 22,320. These are levels which are going to be important. Resistance comes in at 23,383 and then at 23,490. I think there is, these are the levels, the resistance levels, which one needs to keep an eye out on. Bank Nifty, resistance comes in, again, simply put, at the 20-hourly moving, 20-hourly average, which is 48,799. And then the 40-hourly exponential, which is 49,293. I'm not putting downside levels for the Nifty Bank because it's looking really, really weak. And I mean, if you start to project levels down, I mean, you're looking at 46,000, some putting levels to about 45, which is about 6% away from where we left off yesterday. So not doing that for now. We'll see how things progress. We've already kind of corrected quite a bit. And in the next, 4 days, 5 days, we have the big event of the Trump swearing in. And lots of things are moving, lots of moving parts really here. But the backdrop is the market, which has kind of cooled off quite a bit over the last few trading sessions, especially 110 points higher. Let's see if this lasts. Rupee.
Okay, absolutely. The markets will just hope for some sanity to prevail. At least, like I said, some range-bound trade also would be perhaps welcome after the mega fall yesterday. So Asian markets are actually mixed. The bias is positive in most of them. Barring Japan, you can see some green on Taiwan. Hong Kong is actually one of the better performing markets today. Japan is now down 2% because it's playing catch up. Japan was shut yesterday while the world was taking in the onslaught of the reality of the US jobs report. So now the catch up in Japan is taking that market, the Nikkei, down almost 2%. Otherwise, things are okay. The US dollar and the US 10-year yield both are still near the recent records that we're talking about, 14-month high for the US 10-year yield. So still around that level, so it's still a bit jittery. For us here, yesterday's slam dunk has now wiped out all of the gains that this market made after the general elections, and we've come back to the level of around 7th of June. So we had that major volatile day, the day the results were announced, and then the recovery. After that, 7th of June was the intraday low, was where we are pretty much at. So let's see if there's going to be a reversal from here or not. The flows picture reiterates one thing, that aside of the FPIs and the domestic institutions, there's still obviously a very large market out there that's not captured in the institutional data. Because despite this kind of domestic institutional buying, which is more than offsetting the FPI selling, look at what the market did yesterday. That's telling you what HNI is doing, ultra HNI is doing, what family offices are doing, and even what direct retail is doing. And that's where the panic is. And that explained the absolute crackdown in the mid-cap market yesterday and over the course of 2025, really, with the mid-cap index sliding well over 10%. So this is where the pain is. It's not the institutional segment. It's a non-institutional participation that's really hurt in this market decline. Anyway, let's now talk about some good news. And I have 2 points here to sort of, bring out. One is inflation. The inflation number that we got yesterday is showing a bit of a cool off, 5.22, which is also a little lower than what our poll was. And there is some respite in both food inflation and in core inflation as well. Food inflation has moved, at least it's moved away from that 9%, ugly headline kind of a number to about 8.39. But we have to keep in mind that these are numbers looking at the rear view, right? We know what's happening with oil prices right now, here and now. So is this really going to cheer the market? No one really knows for sure because we have tariffs to deal with, we have oil prices to deal with, we have geopolitics to deal with. So let's see if this is a sustained trend or not. But for what it's worth, it was at least a decent number. No shocker on CPI inflation. No shocker from HCL Tech either. Pretty decent, more or less in line with numbers. Constant currency, growth is about 3.8%, little shy, just a shade below what the estimates have been, but not too bad. The margin has improved 90 basis points, but that is on expected line, so it's not a very huge positive surprise. Rima was telling us, and this is exactly in line with the poll that she did. What is the management saying? The management is cautiously optimistic. I always look at commentary a little more, especially with IT companies these days. They're saying there is improvement in demand. Discretionary spends are picking up, but they're saying that smaller deals are getting converted quickly while larger deals are still taking time. So yes, it's positive commentary. With also a slight tweak of the guidance. The lower band of the guidance has been increased. So now the new guidance is 4.5% to 5% versus 3.5% to 5%. So they've narrowed the guidance and bumped up the lower end of it, which is also good news. So hopefully, once again, it's going to be tech to the rescue, offering some leadership, some respite, and maybe some green to the screen.
Well, just going by all the data points that we have, I think select large cap names will start outperforming from here on, and quality mid cap names as well will see a fair bit of interest. Let me go to the ball and, in fact, tell you more about that. I think that there could be the smaller cap names that have gone up, not backed by fundamentals, that will still see some pressure. But a large part of the market, which is quality in nature and which will deliver, will do well from here on. However, the global backdrop is a bit of an issue because you have Brent crude prices, the US yields and the dollar index, they're at elevated levels. But just talking about the institutional numbers yesterday, I don't think it is that bad. And I think yesterday and day before as well, the weaker hands got taken out. And I have 2 big points out here. One is, as you all mentioned, the institutions, they were net buyers in yesterday's trading session. Looking at the FI data, we've been looking at the index futures. Well, yesterday, surprise, surprise, they added more longs than shorts. And in fact, it was quite a sizable number as well. So 2 longs were added for every 1 short position in stock futures. And both these two give me some kind of confidence that maybe today could be a relatively better day. The FI short positions, they have been building onto their shorts and they continue to do that. Even in yesterday's trading session, they added close to around 18,000 short contracts in trade. Clients, they're going the opposite direction. They have been net long and they continue to add those long positions. And just looking at the net long position on the client side and the FI net short positions, there's a similarity to what we saw in June. And that's the level from where the Nifty did bounce up. So the clients in June, well, they were close to 3.3 lakh contracts on the long side. You had them right now, they're at around 3.2 lakh contracts. And the FIs, they were net short by around 3.5 lakh contracts. We're not yet there, but we're still at around 3 lakh contracts odd. So normally when you have both these two extremes playing out, then you get a bit of a bounce just in the near term. The trend is weak, but I think there's a strong case that we see a bit of a bounce, particularly on the headline Nifty index. The FIs, well, in the stock futures, as I said, 2 long contracts added for every 1 short contract. And that data point as well is quite a positive from a stock-specific perspective. The PCR, that's moved to the lower end of the range. So that's another indicator that in the near term, we are relatively oversold. And if you look at the options data as well, 2 strikes come up for you on the screen. Call writing has become too easy, right? 23,200 call. Well, that's a fair bit of interest. But what's giving the bulls some kind of heart is that there's 22,800 to around the 23,000 odd mark should hold out. And that's where the crucial support comes in at. This is a very, very important mark. The bulls will have to put in a fight. This technical indicator is extremely important. Resistance, going by the options data, comes in at around 23,350 or thereabouts. The soar point for the markets has been the Nifty Bank. And on a day-to-day basis, it's making lower highs, as you can see, the last few days. And if you look at the lows, well, it's making lower lows as well, on a day-to-day basis. So the Nifty Bank needs to give up this relative underperformance that we've seen. And let's just pull up the lower highs, because for today's trading session, the important mark that you're looking at is around 48,600. The bulls will want the Nifty Bank to get above this mark to break this trend that we've seen.
Okay, all right. Hopefully the bulls will get some sort of a fighting chance today. Let's kick things off with the equity call of the morning. Lawrence Belanco of CLSA says the lack of follow-through buying in December has left the Nifty oscillating around its 200 DMA and threatening support provided by the November-December lows at 23,263 to about 23,460. A break below these support levels will be a bearish signal. Such a move would also support a downside target of 22,000. From a sector perspective, Lawrence adds that IT is the NSE banks. It's the NSE banks price action that is a concern for the broader market, as Friday's close has resulted in the sector's breakdown from its June 2024 to Jan 2025 trading range, with a close below 49,700 to 50,000. This breakdown supports a downside target of 45,000 for the Nifty Bank, which is around a further 7% downside.
Okay, well, that's Lawrence Belanco. It's a closely watched technical analyst, and we'll be speaking with him in the days to come as well. But that's the view, the latest view coming in from Lawrence. Jeffrey Dennis is independent emerging markets commentator. He's with us now to take some questions. Jeffrey, great to have you with us here. It's not so much, markets have been roiled a little bit, especially here in India and EMs, etc. US may be starting its leg lower, I don't know, because that's been the strongest market by far, by some distance. So what's the dominant driver? Is it Trump and what he could do with tariffs, or it's just the underlying strength of the US economy, which has brought back fears that perhaps 25 will see no rate cuts?
I think it's both, frankly. I think the market is very uncertain about quite what Trump will do in terms of the scale and the breadth of tariff increases. At the same time, we need to know what tax cuts he's thinking of doing. Obviously, the most likely thing is to prevent the sunset of the income tax cuts that he put in place when he was previously president. But the bottom line here is that if you look at what the market is concerned about with these potential Trump policies, they lead, in theory, everything else held constant, to higher inflation and a wider budget deficit. And if you combine that now with also this blowout employment report for December that we got on Friday, this is just contributing to higher bond yields and a stronger dollar. And as you say, significant risk now that the Fed may not cut rates at all in 2025. Now, I put my outlook out about 5 days ago on the 8th of January for the year, and my call is that bond yields go considerably higher from where they are now into the 5 to 5.5% range. I see the dollar continuing to strengthen from here for a while, and remains to be seen what they'll do on the interest rate front. So I'm not surprised we're seeing this decline in the early part of the year, especially for emerging markets. But obviously, as ever, it all depends on what Trump does, and it depends on what the economic data in the US will look like as well.
Jeffrey, just one point on Trump, and this was an interesting, I don't remember where I read it, but it stayed with me. It's essentially said that what we're seeing now is peak Trump. So he's not president yet, so he can say whatever he wants, and, he can make all kinds of claims, I'm going to do this, I'm going to do this. But once he's in that seat, he's then president, and then he's bound by actually, first of all, doing things which will affect things, and there'll be, first order, second order implications. There'll be a team around him. So in that sense, this is the peak. And in that sense, it'll get a little better once he assumes office. Does that make sense broadly?
Yeah, I hope you're right. It didn't happen last time when Trump came into office. Of course, he carried through a lot of the things that he was threatening. But one of the famous, as you will all know, market expressions is you sell the rumor and you buy the news. And when Trump comes in, it could well be that this signals a change of direction. But my worry here is that almost whatever he does, or indeed doesn't do, we have a major budget deficit problem developing in the United States. And I do think that while the economy stays strong and the budget deficit continues to widen, it's around 6% of GDP now, I don't see any alternative but for bonds to remain somewhat under pressure over the next several months. And I think that's going to be the big driver of markets generally. Sure, we don't exactly know what Trump will do. It's a shot in the dark. It's a gamble. But frankly, the macro trends generally are towards, as I say, wider budget deficit, inflation leveling out. I don't think this is good for bonds. I think it's strong for the dollar. And I think it's a tough environment for EM, as I said, I think on this program the last time I was on.
Mr. Dennis, hi, good morning. Absolutely. So therefore, my next question, given that it's getting so complicated, right? Now with the inflationary concerns in the US, these rising bond yields, we're seeing the rotation out of tech stocks, for instance. They're not rising in a straight line anymore, and the specter of maybe fewer rate cuts. So where does money move? Where do you see money moving in the next couple of months? Because, I mean, I would ask you whether it's going to come back to EMs because there are problems in America. But then EMs, we don't know who gets slammed with what kind of tariffs. So that's another complicating factor. Where do you see the money moving over, say, the next 3 months?
It's very hard to be sure about that. I mean, one of the interesting things is that we've had a very contrarian move in some of the big emerging markets so far in 2025 compared to 2024. So Korea is up a lot, having fallen sharply last year. Taiwan and India, as you know, and also China are down a fair amount. Brazil has started to rally. And so you've seen a bit of a contrarian move, which in some sense is sort of consistent, although different from what we've seen in the US with a rotation from tech stocks to elsewhere in the market. Through all of this sort of complicated, challenging start to 2025, what you've got to remember is that EM is still underperforming DM. EM's down about nearly 3% year to date. US is down a little bit, DM's down a little bit. So we need a complete change of direction, in my opinion, in terms of bond yields and the dollar. And in case of India, I think oil prices for, the markets, the people to start putting money to work in EM, which could, of course, happen later in the year. But right now, I think finding pockets of strength is difficult. I would take a look at Brazil. I would take a look at Korea. I would take a look at other markets in Latin America, which did so poorly last year, although probably not Mexico. I would look elsewhere in EM, in South Africa, in Turkey. And I think despite the volatility so far this year, I still see the US outperforming Europe, where the macro situation is so poor now and seems to be getting worse.
Okay. All right. Well, let's see. We do live in fairly complex times. Thank you for joining in for a quick chat today, and we hope for more in the coming few weeks as well. Well, let's quickly move on and talk about what's lined up on the show today, and it's a packed show as always. Coming up at 8:35, we will be in a conversation with Anil Yadav of IRB Infrastructure to talk about the December toll collection trends. At 9 o'clock, we look at the currency full throttle after the huge weakness yesterday. What lies ahead? We get chatting with Jayesh Mehta of DSP Finance. At 9:20, Samiran Chakrabarti and Surendra Goyal of Citi are our market masters. We get the Citi view on India, the economy and the market in just a bit from now. At 9:40, it is all eyes on HCL Tech. We'll look at the commentary and see how HCL Tech is reading the picture for the rest of the year. At 9:50 a.m., Pranav Gundapalli of Bernstein joins in with the key expectations from the banking sector this earnings season. And towards the end of the show, in our special segment, It's the Economy, Lata will be in conversation with the Forex rates expert, Kamaksha Trivedi of Goldman Sachs, to talk about the rise and the rise of the US dollar and, of course, what lies ahead in the currency universe.
Well, time to slip into a short break. We've got a lot of stock-specific action that we're tracking for you in our special Top 10 segment. For the time being, I'll run you through the list. We're looking at JSW Energy, Anand Rathi, Himadri Specialty, PEL, Adani Green, Piramal Enterprises. All of them will be reacting to positive news flow. On the flip side, HCL Tech, United Spirits, Delta Corp, Angel One will be reacting to the negative news flow overnight. Slip into that break, come back. We'll get into further detail on all of these names.
Do I play? Is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that there are a lot of youngsters who are doing really well, but not able to prove themselves. I think leagues now, if you see, there've been Coco, and then there've been tennis and pickleball. A lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, a lot of people get a recognition in terms of they get to see a lot of athletes who take them as an inspiration and prove themselves.
Welcome back. Well, the cues are a little more even this morning. The implied open is suggesting that we'll pull back by, who knows, at least 100 points or so. Let's look at individual stocks now, and there are plenty to track this morning as well. Our team is standing by with the CNBC-TV18 list of top stocks to watch. Let's kick it off first with HCL Tech. Rima joins in. Rima, so on point?
Thanks so much for that. So HCL Tech's numbers were largely in line with street expectations. Revenues were slightly lower. Constant currency revenue growth came in at 3.8%, lower than consensus expectations of about 4.1%. But margin expansion is intact. The company's margins expanded to 19.5% versus 18.6%, and that drove an 8.5% increase in the company's profitability. So margin and profit performance was in line with street expectations. The company has also raised the lower end of its full-year revenue guidance. The earlier guidance was 3.5% to 5%. Now they're talking about 4.5% to 5%. And one of the reasons for the upgrade at the lower end is on account of the HPE asset acquisition that the company concluded in just December. Margin guidance remains unchanged at 18% to 19%. Deal wins are steady, a little over $2 billion. The management commentary is also fairly upbeat. They're talking about their deal pipeline being at an all-time high. Large deals were signed in AI and generative AI led. The average tenure of the signed deals is getting shorter. So overall, the commentary is fairly positive, and they also indicated the clients are looking to increase their IT investment in calendar year 2025.
Thanks a lot for that, Rima. In fact, we'll have the management who will be joining us here on CNBC-TV18 at 9:40 a.m. Well, let's move on to the next stock that we're looking at. Sudarshan joins us to tell us about JSW Energy. Morning, Sud.
Morning, Nigel. So I'm going with green for JSW Energy. His company has acquired KSK Mahanadi Power under corporate insolvency resolution process for the total bidding amount of nearly 16,000 crore, that is rupees 15,985 crore, and company had outbid NTPC and Adani Power. Adani Power's bid was around 15,008 crore, and closure of this deal will be subject to regulatory approvals, that is NCLT and CCI. So currently KSK Mahanadi Power owns total thermal power plant capacity of nearly 3600 megawatt, of which 1800 megawatt is operational and another 1800 megawatt is under construction. So what will this deal do to JSW Energy? Post this deal, JSW Energy's lock-in thermal generation capacity increases to 7.5 gigawatt, and company believes this deal will help achieve the target of total power generation capacity of 20 gigawatt much before the company's target of 2030, and that's the reason I'm going with green for JSW Energy.
All right, so thank you very much for that. Coming back to you for more in a bit from now. Well, United Spirits is in focus, and so is Delta Corp. Mangalam is here with to tell us why. Mangalam, morning.
Good morning. So for United Spirits, another day, in fact, after a surprise exit of Neville Narona from DMart, United Spirits also will have an exit. Hina Nagarajan will step down from March 31st of this year itself. And the reason why she will is because she has to take over other responsibilities in the Diageo group itself. So maybe a promotion up as against, just a resignation. The company will have Praveen Someshwar, who will take over as MD CEO starting FY26. Praveen Someshwar has been the MD CEO of HT Media for the last 5 years. Prior to that, he was with PepsiCo for the last 24 years. This is typically a risk for MNCs where key leaders are moved out into different geographies or at the global leadership itself. So smooth transition is something that the street will eye. Until then, there will be some bit of uncertainty, see red out there. And also see a lot of red on Delta Corp because the company reported what was a weak performance in a seasonally strong quarter. And that tells you that, structurally, the demand for casinos may have been dented a little bit because of the GST regime at 28% for all the bets. Revenue is down 7.5%, and that's played out in the operating performance as well. EBITDA down 42%, and the net profit has shown a minor growth only because there was a tax credit of 6 crores versus a tax expense of 15 crores. There was, decline in the casino business revenue, down 3.5% in terms of revenue, operational performance as well. The EBIT down by 20%. For online business, while the revenues increased by 16%, the EBIT loss increased from 1.7 crores to about 18 odd crores. Yes, the company has admitted that there is a relief in terms of a stay order to the claimed GST, but then again, they hadn't made any provisions for that. The bigger trigger for Delta would be any change in the actual GST, implementation of 28% across all face values of bets.
Okay, absolutely. So we're going to watch out for this, see the impact on Delta and, of course, United Spirits as well. With that, let's quickly move on. We have Vamakshi joining in. She's looking out at some of the results and updates we've got in from Angel One as well as Anand Rathi. Vamakshi, good morning.
Well, not a great set of numbers coming in from Angel One. Revenue saw a downtick of almost 17% sequentially. EBITDA margin too saw a dip of nearly 507 basis points to 39.3%, and the net profit was down by nearly 34% sequentially. Largely, the decline in revenue was being led by the net broking, which was down nearly 10% sequentially, and this was mainly on account of impact from the F&O regulations on F&O brokerage and weak market sentiment on the cash brokerage. The net interest income too saw a downtick of nearly 6%, and this is largely better than what the analysts were expecting. But it is the higher OPEX that has led to a decline in margin as well as the company's profitability. The cost-to-income ratio has risen to 60.71% as compared to 55.6% in Q2 of FY25. In addition to that, they've appointed Ambarish Kenge as the group CEO of the company with effect from March 6, 2025. So overall, a weak set coming in from Angel One. Anand Rathi is the next counter I'm watching out for, going with the green for this counter, and that is because they've gone ahead and raised their revenue guidance to 980 crores from 910 crores and raised their net profit guidance to 295 crores as compared to 280 crores. AUM for the company, the growth was rather subdued at 1.76% sequentially. The AUM guidance, however, remains unchanged at 80,000 crores, 95% of which has been already achieved in the first 9 months of FY25. The net inflows, however, saw a good uptick of almost 47% sequentially. Revenue from operations were down nearly 2%, but the operational performance of the company was better because the PBT margin improved by 180 basis points to 43.9%. The net profits saw an uptick of nearly 2% sequentially. In addition to that, the board has approved bonus shares in the ratio of 1:1, so expect some uptick on that front as well. So going with the green for Anand Rathi.
Okay, all right. Thanks a lot for that, Vamakshi. But let's wind this down then with Upasana, who's here to tell us about Himadri Specialty Chemicals and BEL. Upasana, take it away.
First up, let me start with Himadri Specialty Chemicals. Well, overall, the company has reported a good set of numbers. The revenue saw an uptick of 8% on a one-web basis, and EBITDA stood at 221 crore with a growth of nearly about 27%. Now, company's key segment, that is carbon material and chemicals, has expanded sharply. That is nearly about 370 basis points at 16.3% is what the expansion has come in at, leading to an overall margin expansion of nearly 290 basis points. So overall margin started at 19.4% versus 16.5%. Company's PAT stood at 142 crore with an uptick of 30%. This is mainly because of company has taken various cost optimization measures. Now, mind you that the board has also approved a new capex of 120 crores for manufacturing of specialty products at its Singer facility. Hence, this stock will remain in focus on back of the results. And next up is BEL on back of its order wins. Now, company has secured additional new orders worth 561 crores since the last disclosure of 23rd December 2024. While these orders with these orders, BEL has now accumulated orders totaling up to 10,362 crores for the current financial year. Hence, even this stock is what we'll be keeping on our radar.
All right, Upasan, thank you very much for that. Adani Energy and Piramal Enterprises are the next two names we want to focus on. Vamakshi is standing by with details. Vamakshi, morning.
Well, good morning, Prashant. The Adani Energy Solutions will be in focus, going with the green for this counter, and that is because Q3 transmission network length stood at 26,485 circuit kilometers. This is an uptick of nearly 30% year-on-year is what they've witnessed. Q3 power transmission transformation capacity saw an uptick of almost 54%. The Q3 average system availability was more or less flat at 99.69%, and the transmission availability stood at 99.21%, slightly declining on a year-on-year basis, but going with the green for this counter. Piramal Enterprises is the next one that I'm watching out for. Keep in mind that the company earlier on June 26, 2018 had informed about the divestment of Piramal Imaging SA, which is a step-down subsidiary to Alliance Medical. The company has now been informed by Life Healthcare, which was a part of the group that acquired Piramal Imaging, that they have entered into a binding agreement for sale of Life Molecular, which is a member of the imaging group. Resultantly, on completion of this proposed transaction, the company will become eligible to receive nearly $140 million in FY26. The company may also receive further amounts in subsequent years from any eligible profits and future earnouts relating to the imaging group. And this, amount has been capped at $200 million over the next couple of years. So going with the green on this counter on the back of this development.
Okay, all right, Vamakshi got it. So we're going to keep Piramal Enterprises on our radar as well. Let's quickly recap our list of stocks to watch this morning. The ones that have positive news flow are JSW Energy, Anand Rathi, Himadri Specialty Chemical, BEL, Adani Energy, and Piramal Enterprises. Stocks with negative news flow are, well, HCL Tech, maybe negative to neutral, you can say, United Spirits, Delta Corp, and Angel One. Okay, let's talk about something positive that came in after market hours yesterday. India's December consumer inflation came in slightly lower than expectations, also lower than the previous reported print. And there was some cool off in both food inflation as well as core inflation. We have Lata joining in with the details. Lata, I don't want to be a pessimist, but the thing is, this is data, rear view looking data, given what we're seeing on crude oil prices now. But anyway, what does the fine print tell us?
No, I think it's a very good set of numbers at 5.22. I had got an average of 5.3, but there were quite a few on the street expecting 5.4, poll numbers which came after I completed my poll. So I was worried that it would overshoot, and actually it's undershot considerably. As well, it's now 3 months in a row falling. It was 6.2 in October, 5.48 November, 5.22 December. And if you looked at the nowcast numbers for January, it is expected to be much more sharply down. So we are going to be 4 point some decimal point average for Jan, Feb, March. So I would consider it a good number. The big contribution has come from core. That was expected to remain at 3.7 or go to 3.8, non-food, non-fuel. That's actually come at 3.6, largely because of gold and silver, though not only because of that, but that's again an important contribution. And then let me come to food. Now, food is good in the sense it's 8.4 compared to 9.04 in November. But, our poll still threw up 8.3. So even the economists were kind of disappointed by the food prices not falling enough. Now, vegetables actually did the heavy lifting. they are still 26% higher year on year. But, look at the way it has fallen. All the way from September, this is one of the lower numbers we have got. And if you only took tomatoes, onions, potatoes, the top set, it's actually fallen considerably and is expected to really crash in January. Where is the pain coming? Edible oils. Edible oils, we raised tariffs for the benefit of farmers. And global edible oil prices have been going up, and that's getting transferred. So look at that, a year-on-year rise of 14.6. Fruit and eggs have also hinged up. I'm giving you all the numbers where the inflation is above 6.5%. And that's cereals. See, you wouldn't expect that there will be a month-on-month rise in cereals as we enter the post-Kharif season harvest coming in. But wheat prices have gone up. So I'm a little worried about this part of the food inflation. Nevertheless, veggies are going to be the big relief going forward in Jan. And therefore, the expectation that inflation will finally come down to 4.5 by the time come to, March and then to 4 is very much alive. Just one more detail I must point out. Month on month inflation falls in November, December, Jan, Feb because vegetable prices fall. It usually falls by 0.4%. The expectation if it was 5.3 was it will fall month on month by 0.5. And you know how much it's fallen actually? 0.6%. Now imagine if you get a 0.6% fall month on month in the remaining 3 months, that would be a good number. So my sense is that the Reserve Bank governor actually gets some space to cut rates as early as February. The street is divided. There are some who believe that he will wait because of even the interest rate differential. But clearly this inflation number, gives space. The former Governor Das was saying that it must align to 4%. But the new governor may say that, so long as it is showing a direction, there is space. So clearly today there's something to cheer for the bond markets.
Okay, all right. So that's something to cheer. And also in the last, 12 hours or so, we have the dollar index that yesterday when we were closing trade, it had breached the 110 odd mark. That's cooled off. I think the last count is around 109.6. That as well will be a little bit encouraging. Looking at some positives, so a couple of them, as Lata said, inflation data looks pretty okay. You have the dollar index that's cooling off a wee bit as well. Let's find out what's going on in the commodity space. We have Manisha who joins us to help us out with that. Morning, Manisha.
Morning, Nigel. Thank you for that. It's not just the dollar index that's cooling off. The crude oil prices also are off their highs and at least have paused on that rally where we saw 6% of gains in the crude prices in the previous week. So that could be some good news for the Indian markets as well. While we are trading very close to the 4-month highs and most of the fundamentals are still supportive and positive, there is some profit taking. So after hitting almost 82 on the higher side, we are trading below 81 right now for the Brent crude oil prices. Well, the street will also watch out for the U.S. inflation, weekly jobless claims and retail sales. All of that data comes in this week as well. The markets also have seen strong U.S. jobs report coming, and it is really going to be important to see on what China does going forward, because that would tell you in sense of stimulus on how many of these commodities would perform. So even as there is some profit taking across, metals is a sector to watch out for. After that sharp fall, we have seen iron ore prices trade at a 1-week highs. Copper is right now trading at a 2-month highs. The China unwrought copper and product imports has surged by 18% for the month of December. That is a 13-month high. And not just iron ore and copper, aluminum also has continued to surge. We're looking at a 4-week highs in case of aluminum as well. So ferrous, non-ferrous metals have started Asia on a positive note today.
Okay, all right. Manisha, thank you very much for that. That's Commodities in Focus. We're going to take a quick commercial break here. We're going to come back in just a bit. Hemang Jani will be with us with some fundamental stock conversation that's lined up on the other side.
Yes, even we can do it, because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not able to have that platform where they can prove themselves. So leaks like these will definitely help them to come up and think that yes, we also have something to actually look up to.
Welcome back. You're tuned into Bazaar Morning Call and hope you're having a good morning. Well, let's focus on the first corporate on the show, IRB Infra. That's the first management. The company reported 19% year-on-year growth in the toll collections for the month of December. The total toll collection for the month amounted to around 580 crore rupees. To discuss this, what are the trends witnessed currently, we're joined by Mr. Anil Yadav, the Director, Investor and Relations at IRB Infra, who joins us on the show. Hi, Anil. Good morning, and thanks a lot for joining in. First time we're speaking this year, so wishing you and your team all the best for 2025. Let's talk about December, though. Good toll collections, 19% increase. A lot of people traveling, so that could have helped you all. What caused this, according to your analysis, and how do you see the trend going ahead? Expect to keep up the momentum?
Thank you. Good morning, and thanks for having me here. In terms of the toll collection, we have seen a robust and healthy growth in the month of December on backdrop of the festive season and year-end traveling. And with respect to, I think the momentum has continued in this month as well. And we are seeing the healthy growth across the portfolio.
So can you, Mr. Yadav, can you show some more color, throw some more color on this? I think your collections were up about 24% in December. What are the trends so far in January, and what are you seeing? I mean, which are the assets across which you're seeing the maximum traction?
I think in terms of the toll collection, we have seen a healthy growth in terms of, if I will talk about only the traffic, 6-7% kind of traffic growth is there, and plus tariff revision, whatever we have got in the last year. On backdrop of that, we are seeing a very healthy growth in the month of Jan as well. Though on the north side, because of the heavy winter, there is some softness in the traffic, but as compared to the last year, still the growth is very healthy.
6-7% is the traffic growth, and the remainder is the price increases. Is that correct?
Yes.
Okay. In terms of tariff, revisions, are any more immediately lined up, say in the next 1 quarter or so, for any of the other assets that you're operating?
Yeah, tariff gets revised from 1st of April every year. It's the polar-driven tariff revision. It's a 3% fixed plus 40% of the WPI. So from 1st of April, we will get that tariff revision across our portfolio.
Okay, so across the portfolio, it's the same date, 1st of April. Got that. Let's talk about then, the increase you're seeing across the order book. Give us a sense what's happening with some of the EPC projects as well, and what you've penciled in for FY25.
I think if you look at IRB today, well, 85-90% value comes from the asset. EPC business is just complementing our asset business. And in terms of the EPC, we have approximately 30,000 plus kind of order book. Out of that, around 28,000 crores order book is the O&M order book, and roughly 4,500 crores is the EPC order book. Total order book is 32,000 plus crores. And we have next 6 quarters execution available. And gradually we are moving from the EPC. Our EPC is tilting towards more O&M. From 10-12% kind of execution of the O&M in earlier years, now it's gradually shifting to around 25% kind of execution of the O&M. And O&M, you can have a long-dated order book. We have roughly 20 years visibility on the O&M order book. Now, in terms of the EPC, we have visibility for 5 to 6 quarters. And as you are aware that in this year, because of the election, the award activity was pretty low. And we believe that, as we have witnessed in the past as well, this 2 months will be heavy in terms of award activity.
All right, Anil, final question before we let you go. You've given us an insight in terms of your business. But what about CapEx spend? The cry from everyone is that the CapEx spend hasn't been enough. And that's why all eyes are on budget 2025. Hopefully, there's going to be that much needed booster shot. Your analysis, what's the, what have you been seen on the ground? Is the CapEx spend picking up? And what's your expectation from budget 2025?
So I think in terms of capex, as there is talk from the all sectors, the capex was very slow. And in terms of our sector, also, if you look at award in last 10 months, is hardly 20-25% of the overall target what government has targeted to be awarded. But typically in our sector, last quarter typically sees roughly 50 to 60% kind of award coming in the last quarter of the financial year. And we are hopeful that the award activity will pick and there will be award in the Jan, Feb and the March. And in terms of the budget, I think we don't have much expectation from the budget. And we are basically, we spend the money. So we have partners like GIC and Ferrovial, and we execute the project in the ratio of 51-49, where the 51% equity is brought in by IRB and balanced by the two partners. So that's why we are only bid for the BOT and TOT, where the capex mainly comes from the private sector like us, then the government is spending on the capex.
Okay. All right, Mr. Yadav, we'll leave it on that note. Thank you very much for joining us this morning. That's IRB saying that traffic, has improved by about 6-7%. The rest is the higher toll revision, and all put together, it's been a good December, and so far looks like a decent January as well. Let's move on and say good morning to Hemang Jani, who's joining in for some fundamental ideas. Hemang, hi. Been a really tough market, right, last couple of days. Let me start actually with some of the bigger stocks that are in news today. HCL Tech, the numbers look okay, but the issue is with this guidance revision, only the lower end of the band has been increased, not the upper end. I don't know if that's going to weigh on the market sentiment. Commentary seems cautiously optimistic. How would you look at it?
Morning, Surabhi. Thanks for having me. So yes, I think the numbers have by and large been in line, and more so the margin has been a bit of a positive surprise, and the outlook continues to look good. While we would have expected the guidance to be much better, it's been a bit lower than the general expectations. The interesting aspect about HCL Tech is that for past many quarters, they have done much better than its peers, namely Infosys and TCS. And now there is a bit of a parity between the valuations, between HCL Tech, Infosys, and to some extent TCS. And we do think that going forward, given the diversified portfolio of HCL Tech, it will deliver much better growth. So definitely, it should be a core allocation stock. And we do think that there is a case for 18 to 20% kind of an upside. It might pause a bit because the entire sector has done well over the past few days. But from a medium term to 12 months kind of a perspective, this would do much better than its peers.
Okay, all right. Hi, Hemang. Good morning and good to see you in. Hemang, I want to talk about market participants. And in that backdrop, what do you make of numbers? If you looked at Angel One or Anand Rathi, what do you make of them? And also BSE. Jefferies has come out with an interesting note. Everyone's talking about volumes falling, but they have highlighted that the premiums actually, which is the one that is related to revenue, that's fallen by less than expected. How do you play this theme?
So, Nigel, as far as Angel One is concerned, I think, a large part of their revenue is coming from the options or the derivative side. And which is why we've seen, a significant cut on a quarter-on-quarter basis. Now, they are facing two challenges. One is that the overall volumes have been on the lower side. Two, when the ticket size has been increased, the company will have to decide on its pricing strategy going forward. So I believe that Angel One as a theme has done very well over the last 2-3 years. But from here on, it would make sense to go with either PSC, which is relatively better placed, and despite the new F&O norms, if you look at the absolute growth, even in December, when the volumes were down, they did much better because their income is linked to the premium, and the premiums have been relatively better off. So I do think that, BSC surely, because on the one side, it's, gaining the market share on the weekly side, and its premium income is remaining strong, and their margins are improving because their cost is related to the exchange cost and not relating to the volume per se. So BSC surely is a better bet. Anand Rathi consistently has been delivering better results. I think if you look at last 4 to 5 quarters versus the guidance that they put out, they are doing much better. and their dependence on the brokerage income is much less. So I think that within the capital market theme, one will have to really figure out which are the pockets where you will continue to see a decent growth despite this new norms being in place.
Okay, Hemang, stay with us. We're going to come back and discuss more stuff, but we have to take a break here because we want to get into technical perspective as well. Mitesh Thakkar and Sudarshan Sukhani join in for that on the other side. Stay tuned. Okay, welcome back. There is, of course, 6 minutes to go for the pre-open session. Mitesh Thakkar and Sudarshan Sukhani are with us. What they'd want you to do with today's session. GIFT Nifty indicating, pointing towards a 100-point pop. Mitesh, yesterday was a really waterfall kind of a day. Ended pretty much at the day's lowest point. If you manage a slightly higher start, 100 points is what GIFT Nifty is indicating. What should be the strategy?
Yeah. So, Prashant, I think the structure will not improve with a 150 point kind of a pullback. Two, we are oversold and extremely so. I think, what can happen is that possibly a choppy range can evolve. The key factor here would be how does the market reacts as it kind of approaches the November low. So 23,350, which was broken yesterday. That zone is very important. So I think a bounce back to about 23,300, 350 would be very normal. That is when I would attempt some kind of short with a 70-odd point stop loss. In case we start getting past 23,350, then we'll assume that, one leg of downtrend is over and we might be in for a short-term bounce back.
Okay, all right. So some factors on board for a temporary pullback, but that pullback could be a shorting opportunity. Well, Mitesh, to back up that view as well in terms of a bounce, inflation is a little bit cooler, so that's good news. The dollar index is a little bit softer and Brent crude price is a little softer as well. So hopefully that bounce has come about. And then, as you said, the trend is still weak. What about individual stocks, Mitesh?
On the stock side, I have more of buy calls today. Of buying on Bajaj Finserv with a stop at 1654 for targets of 1750. And the FMCG pack was a BTST yesterday as well. HCL today morning can also be bought again with a stop at 2425 for targets of 2500. Kalyan Jewellers extremely oversold at a very key support level. So buy here with a stop at 560 for targets of 595. And one sell call, KI Industries, on a bounce back to about 3950, 3965 zones. Try and get into some short position with a stop at 40.50 for targets of 37.80.
Okay, all right. Mitesh, thank you for that. Coming back to you for more because individual stocks have taken a big plunge, so I want to address those as well. We're going to come back in a bit We'll have Ayush Mehta of DSP Finance joining in. The rupees, of course, we have Jayesh Mehta of DSP Finance joining us. The rupees, of course, fallen sharply. What to expect from here on? That's coming up.
Welcome back. This is Open Exchange. We're coming to you live from the CNBC-TV18 Motilal Oswal studio. Well, we've heard Mitesh's call on the markets. Let's get in Sudarshan Sukhani as well. Morning, Sudarshan. Thanks a lot for joining in. Well, how do you view market setup for today? Are you expecting a bit of a pullback, or do you expect things to slide from here? So your call first on the Nifty. Please go ahead.
Sure. I see. Good morning. And the 100-point rally that we are seeing in the GIFT Nifty is not relevant. We fell 100 points yesterday afternoon in just half an hour. So this is no big deal. But what is important and much more significant is the behavior of the US markets yesterday. The US markets, the S&P 500 opened significantly lower with a big gap down. But during the day, it recovered all its losses and actually closed in the green. That's the interesting part. So I think it is quite possible that India may follow the US markets, which we usually do. But today is a day when we look for buying. Now, this is only intraday. There is no change of trend. But whatever we get, we should be happy. So I would be a buyer today after the first 15-20 minutes of cooling off, and then see where the market goes. Your stops should be tight about 150 points from where you enter. But it's worth taking a long trade.
Worth taking a long trade after the initial sort of action, whatever has to happen, and maybe then. Sudarshan, in terms of individual stocks, what's on your list?
Well, it's mainly on the long side. Bharti Airtel is a buy with a stop under 1450. Infosys is a buying opportunity with a stop under 1800. I must add that Infosys is also a positional buy. The charts are suggesting a significant up move is coming. Now, given the market conditions, we can't say when that will come, but it should sooner or later. Apart from Infosys, Tata Consumers is a buying opportunity. Stop under 940. You see how FMCG stocks are doing well when the broad market goes down. And I have one intraday short, that is Manappuram. That was a disappointment yesterday. Intraday short with a stop above 178. But today we should be looking to see some cheer in the markets.
Okay, all right, some cheer in the markets. So that's something that we'll be hoping for. Thanks a lot, Sudarshan, for joining in fact, giving us that call. Hemang Jani is still with us. Hemang, I wanted to ask about United Spirits. This alcohol theme seems to be finding momentum and seems to be finding favor with investors as well. Unfortunately for United Spirits, there's a change on the top, which could make the street a little bit nervous. What's your view on the stock, United Spirits?
I think operationally, Nigel, the company has done well, particularly on the premium and above category where the volume growth is high single digits. Also, unlike UBL, where, in Andhra and few regions, there were some pricing related issues, United Spirits is relatively better off. And typically this second half tends to be much better for the spirit companies. So overall positive view on United Spirits. I don't think the management change per se is going to be that relevant, but the transition part is something that, the market will keep an eye for. Overall positive view there.
Overall positive view being maintained. By the way, any thoughts on IndusInd Bank, Hemang? There was that MSCI news flow yesterday, some $200 million worth of stock needs to be bought, but that's passive. I think Bernstein has got IndusInd in its portfolio. High was, I think, 1700, stocks at about 900 around levels now. Q3 won't be good, but it's corrected quite a bit. Any specific thoughts?
So Prashant, most of the negatives are already priced in. After last Q2, the stock is down almost about 22%. As far as their microfinance portfolio is concerned, I think, they're trying to get rid of that and that would surely be a positive. I do think that for those who are looking out for a bit high beta kind of a play, this would be one stock that I would be comfortable buying into because of better valuations and now the worst seems to be behind. So yes, positive view there as well.
Positive view there as well. SW Solar, any thoughts, Hemang? It's one of those names which is cracked, and how? I think high was, I'm not sure. Let me just quickly take a look at this. So yeah, 828 was the high. Stock's at $400 now. After yesterday's 6.5% fall. Wow, it's up 10% this morning in the pre-open session. I'm not sure if there's any news flow, but that's a big pop coming through. Hemang, any thoughts?
So I would stay away from some of these solar and related theme because I think there has been an overhype, and globally if you see, things are not looking that encouraging. And here, despite the fall that we are talking about, the fact of the matter is that when you compare the valuations vis-a-vis their underlying performance, they are still looking quite stretched. So I would not, try to get into any of these names at this point. Let them settle down. Let's have more clarity about the growth, and then probably it would be good to kind of, enter into these names.
Okay, all right. You may want to listen into this currency view as well. Jayesh Mehta is with us now to talk to us about what the currency market will do. The rupee is open. Dollar rupee will, I think we'll have, we'll talk about this with Jayesh Mehta, who's with us, Vice Chairman and CEO at DSP Finance. Jayesh bhai, good to have you with us here as always. Thank you for your time. So where are we headed near term? You think the worst is, we've seen the worst for now, or this is going to be a gradual painful sort of move lower?
So I think it's more to do with U.S. equity and, like yesterday you guys were talking about U.S. exceptionalism. So that would continue at least till the election, and maybe, maybe then it's a hope rate that maybe it continues for another 1 month, 2 months, or whatever it is. But it has to change. The narrative on U.S. equity will change, and the narrative might change for higher rates and lower equity in U.S. And that will still fuel a little bit of the dollar strengthening. But that would be good. That's when you will start getting the EM flows, and that's when the things would reverse. But till that time, another 1-2 months, we don't know. Hopefully just 1-2 months, and we should be okay. But it's nothing dramatically different. It's only U.S. trend. Of course, we should let it go where it was to settle. And then its only time is when it is changing back. We should not intervene much and let it appreciate when it is changing back. But we don't know what is the timing when it is changing back.
Okay. The only problem, Mr. Mehta, is that, in the past when there's been a problem in the US, investors look out for EMs. And now you don't know what this new administration is going to do to EMs also with all this tariff talk. Which is really my next question. I mean, the depreciation is not just the rupee's problem alone, right? We've seen that play out across a lot of currencies, including the Chinese yuan. What's the chatter in the market right now, Mr. Mehta, with respect to the RBI's approach towards this? Because this is a new beast that we're looking at, right, in terms of what happens on the tariff front. So could the RBI adopt a slightly more different approach and let it drift to where it wants to drift, given that we could be looking at some sort of tariff war, trade war, etc., till things settle?
So that will come to know only post 20th, or maybe not even immediately. 20th is just the swearing, right? So that's why I keep on saying 1 month, and hopefully, political rhetoric and actual tariff war maybe not that bad, right? Because at the end of the day, every politician in the world knows that inflation is the biggest loser, right? So if you put too much of tariff war, the country suffers, right? And therefore, inflation would suffer, and therefore, you still will have higher rates with so much of fiscal deficit. So that doesn't make sense, hopefully. But we'll have to wait because nobody knows what he's going to do. Let's be very clear. Everybody's just guessing what he's going to do, right? And from that perspective, even nobody knows what he'll be allowed to do, because at the end of the day, he can right now say many things because he's still not the president. But once he becomes president, there will be a lot of things he will be guided by. And I think he has a pretty good team he's building up on the treasury side and on the fiscal side and all that. So hopefully that should not be that dramatic. But that's a hope trade, as I said. But till the time U.S., one is right now U.S. equity versus EM. So that is continuing. Once that euphoria particularly gets over, it will be U.S. dollar rates. That will continue. It's only after that when people start looking at EM market, which will happen. We don't know the time, but that's the thing.
All right. Good morning, Jayesh. Always good to see you in. Thanks a lot for joining in. Well, could you give us some levels on the rupee? If you have in mind, if you could give us some rupee, some levels, point number one. Point number two is, we got into the year expecting the Fed to cut a couple of times at least in this year. Now it seems, the global backdrop has changed. In this backdrop, what do you expect the RBI to do? How many rate cuts are you factoring in, and from when?
So I think from a level perspective, very difficult to say. As I said, we can't even predict what the timing, right? It's like whether things change in 1 month, things takes 2 months to change, right? So it becomes very difficult. But ballpark gut feel maybe at around 88, 89. So to start feeling the value into currency, other EMs, including India, right? So at some point of time, people will start feeling value in EMs. So that's where the things can change. In terms of more than India, I think the U.S. rate cut expectation has gone off. And that's where the longer for higher rate kind of situation. And so even if their equity market falters, which people feel it is, overshooted their earnings and stuff, then it's the people will say, okay, U.S. bonds, right? Because it's very attractive at 480 and stuff like that is very attractive U.S. bond market, right? Mm-hmm. So that kind of things will keep on coming. I think for India, I think we will have to wait for the new governor's stance. Traditionally people may say it is stupid to cut rate when your currency is under pressure, but currency is under pressure for a different reason, right? Currency is under pressure, not that people are doing an interest rate arbitrage between India and US. So if you cut rate to fuel growth, it's perfectly fine.
A lot of complicated moving parts over here. Jayesh, we'll see how this plays out over the next couple of weeks. Thank you very much for joining in. For what it's worth, the rupee's pulled back at least a little bit from yesterday's lows. I mean, there's a mild appreciation. About, I think, 15 paise or so from yesterday's levels. There we go, 86.49 on the screen. Make that now just about 8 paise. Okay, back to the equity screen, which is suggesting that we will get a bounce in equities as well. About 80 points higher is what the Nifty is saying. Watch out for HCL Tech. The stock's down 2.5%, reacting to the numbers. The difference between TCS and HCL Tech is the fact that TCS went into earnings very weak, and therefore you got some positive commentary. So there was an uptrade. HCL went into earnings super strong. The stock was almost at a 52-week high, and then you're not getting a major upward revision in the guidance, and the market doesn't like that. Explains the reaction. Quickly getting to our technical experts. Sudarshan, 910, what's the call?
Well, consider buying Tata Consumers. Buy Tata Consumers with a stop under 940.
Okay, Tata Consumers. Mitesh, what about you?
I'll go with the buy on Kalyan Jewellers for targets of 595.
Targets of
95.
595. Okay, so that's it's in a very, very sharp correction, Kalyan. Mitesh, just a few more names coming your way. If you can just look at Novama, fell about 8-9% yesterday. K Fintech fell sharply. All these capital market plays, I mean, if the underlying market starts to look a little shaky, they may for a while be able to protect earnings, etc. But will it lead to some P contraction? Of course, we're talking about market staying a little sideways. KFin, there's Novama, I think Dam Capital, which is recently listed, that also saw a bit of a knock yesterday. Of course, we've been talking about names like Angel and other brokers. Any thoughts here, Mitesh?
So I think, again, the fall has been vertical, which means that the structure is still negative, and on the weekly charts also now I'm finding weakness. The idea is that if you get a bounce back, and which you most likely will, I think try and exit, I think, on some bounce back. They might need some strong base building before they recover. For Novama, for example, I think, if it closes the week below 62, 70, 80 zones, then I think good chance that we will see the stock head towards levels of 55, 5400. Look at the rally. I think this will be a mild retracement to the entire rally. So for the timing, I think my advice in the short term, people who are trading with about 2-4 weeks kind of bias is to exit on every bounce start.
Very quickly, two more names, Amber and Policy Bazaar. Policy Bazaar has now fallen under 1700. Amber was down 10% yesterday.
Amber, Prashant, I don't have a view right now. Policy Bazaar has got strong support around 1640, 1620 zone. So I think this decline might get arrested.
All right, fair enough. 2 minutes to go for market open. JSW Energy is what we want to focus on. Sudarshan is here with details. Sudarshan, morning.
Morning, Prashant. So JSW Energy is in focus for today because company has acquired KSK Mahanadi Power under corporate insolvency resolution process, and total bid amount by the company was around 15,985 crore. But apart from JSW Energy, two companies that will be in focus are PFC and REC, because both these companies had given loan to JSW Energy, and by PFC had the biggest exposure of around 4,500 crore, and followed by REC, which has the exposure of 3,500 crore. So we are expecting that both these companies might reach amount once the deal is completed by JSW Energy acquiring KSK Mahanadi Power.
Okay, all right. Thanks a lot for that, Sudarshan. Just to give you a number, earlier the street was factoring around 27,000 crores. Now, if you put together the bid of 16,000 crores, add to it cash and receivables, another 16,000 crores, it's in excess of around 30,000 crores. That's why it could have a positive rub-off on those lenders, which includes PFC and REC. Higher than expected.
All right, we'll keep an eye out on this one. We've got the first tick starting to come up in just a bit from now. What do we have? 80 points higher in line with what the GIFT Nifty ended with. So there's a bit of a bounce, some green at least. Nifty Bank is up about 0.75%. That's clearly the weaker of the two indices. The mid-cap index is up 1%, and you've got the small-cap indexes, which is up about 1% as well. So there is a bit of a bounce which is starting to appear up on your screens. On your screen, right? I mean, you've got about 46 names in the green and about 4-5 names which are in the red at this stage. So 23, just under 23,200 with that 100 points to boot at this point in time. PB Fintech, we were just discussing this with Mitesh. So DG, Director General, GST Intelligence, I mean, I think there's some news flow there which was just flashing out there. But yesterday there was that sell side note downgrading their rating, but the news has come in this morning. Stock's down about 3/4, but it's already seen a very sharp correction. Rupee.
HCL Tech, 5%. That's what happens when market expectations are running really high and the market doesn't get what it wants. I'm just reiterating, numbers were okay. There's a 90 basis points quarter-on-quarter margin expansion. The top line in constant currency terms is up about 3.8, 3.9%. Commentary is all right, but they haven't walked the talk in terms of revising the guidance higher in a more substantial manner. The market doesn't like it. 5% down on HCL Tech. It's taking some of the others down with it. Tech Mahindra, Wipro, Infosys, and even TCS has a tinge of red. So Tech is actually not supportive. It's pulling on the downside today. Almost 6% gone on HCL Tech. Anyway, let's look at what's moving higher. Then some of the PSUs are managing to pull back. BEL, 2.5% up on that stock. NTPC, SBI, these are some of the names. Some more metal stocks actually doing well this morning. Hindalco, Tata Steel, JSW Steel, all are looking quite decent. There's some buying on Maruti, Bajaj Finance, Titan. These are names that are holding up. BPCL is still going strong, after yesterday's complete slam dunk. You've got a 1.5% sort of a pullback on BPCL. Let's pull up HPCL and IOC as well to see what the other oil refiners are doing. All of them were down between 4 to 6% yesterday. Mild pullback underway. Other big stocks like Reliance are supportive for what it's worth right now. HDFC Bank is supportive, about 0.6% higher. Overall, the Bank Nifty is not bad at all. The Bank Nifty is outperforming the Nifty with a gain of 0.8%. So the only problem for the market right now is tech.
Well, and just take a look at the big mover this morning. BSE seems to be the stock of the morning. There's an upgrade that's coming in from Jefferies. So that's why that stock, in fact, is flying away. The important point out there, option volumes are down by 70%, but premiums are down by less than 10% in January. And Jefferies had anticipated a fall in premiums of around 25%. Because of that, the street likes it, and that's why after downgrading it initially, well, it's been upgraded again. That's why that stock is up close to around 3.5%. The ones that are feeling the heat, though, are brokers. You have Angel One, that's reacting to its numbers. Plus, in fact, they'll have to take some price hikes to offset this loss in volumes. That one's down close to around 4%. Anand Rathi is another one that's lower in trade. So that one as well is lower in today's trading session. Transrail, that's the newly listed company. Well, that one is bouncing back in today's trading session. It pulled back with the market yesterday. And as we said earlier, JSW has gone ahead and backed that deal from KSK in the resolution process. That means that recoveries are higher than what was expected, which in turn will play out for stocks like PFC and REC, and both of them are up by 2 to around 3% in today's trading session. They've pulled back big time, so any kind of glimmer of good news could help them pull back, and that explains that. Give you the levels you're looking at. On the Nifty, 23,350. On the Nifty Bank, 48,600, which incidentally is yesterday's level that we saw. So keep an eye on that.
On the capital market stocks, just wanted to point out, while Angel is reacting to its update and is weaker, Anand Rathi is weaker, look at Motilal Oswal. So it's not all things for the same brush. Motilal is, shooting higher, 5% higher, so it's slightly different. And while PSUs continue to pull back, Mazgaon is a big one that's seeing buying this morning. Almost 5% up on Mazgaon stock.
So just a few other names here. So 100 points, by the way, so holding steady so far. And BSE, by the way, is with that 4% pop. Volumes are, very, very large. Volumes are by far the top traded volume gainer in the market right now. About 2 lakh shares, as you can see right there. Mazgaon is at number 2 in terms of volumes. Transrail is up 6%. It fell sharply yesterday. Adani Green and RVNL and MGL. MGL is up 3%. JSW Energy, we highlighted 4% higher. Inox Wind is up about 5%. So everything got sold indiscriminately yesterday. There will be bounces. So don't go looking for a specific news flow or reasons here or there. So there will be, a buying which will emerge if the market starts to look a little steady. On the downside, apart from HCL and Angel, Amber was down 10 yesterday. It's down another 1% this morning. Shakti Pumps, the big winner, was down yesterday. It's down another 1.5%. EPAC Durables is down 4%, so 518 on EPAC. And look at Delta Corp. Delta Corp is starting the day down about 3.5% as well. So that's the overall picture for now. 100 points is what you have on the Nifty, 23,200 or so. Well, let's welcome in our guests to who are going to take us through what the view for 2025 is. We are at a bit of a crossroads, aren't we? Samiran Chakrabarti is with us, Chief Economist India at Citi, and Surendra Goyal is Head of India Research at Citi India. Gentlemen, great to have both of you here. Thank you very much for joining us. So, gentlemen, we got Mr. Trump was ready to take over in less than a week. We got the budget which is lined up on the 1st of February, and you got the market which is weakened substantially going into these events. Surendra, if I can start with you, what's the top-down kind of view that you hold from an equity sort of research point of view? Has the market adequately factored in some of the fears? Has some of the overvaluation been corrected already?
Yeah. Thanks for having us on the show. In terms of, if you look at various parameters, firstly, from a valuation perspective, I think the valuations have moderated quite a bit. Now we are at close to in fact, slightly below 5-year averages, which like we have not been in the last, I would say, 18 months or so. So valuations to that extent for the broader market have moderated. But again, I would point out that this is more so for the large caps. Mid and small caps were kind of running ahead, and that's why we have seen a possibly bigger pullback. So large cap valuations are now kind of back to 5-year averages. From a flow perspective, on at least when we look at the EM funds and we track a bunch of funds, there when we look at it, the underweight for India as of end of November was already 180 basis points, which is like a 20-year low in terms of positioning. So I think EM investors are already underweight India by 180 basis points. The valuations have moderated. So from that perspective, the setup is a lot better. Having said that, obviously this year's earnings growth is also relatively muted. And I think some recovery is required to act as a catalyst to kind of take the market higher. So that's how we are really set up for this year. We will need some support, and Samiran can talk more about it. So as we get that, if growth improves, that's what the expectation is, that in FY26 earnings growth will be well ahead of what we saw in FY25. That, I think, is what will really help the market do better from here. From a market upside perspective, we are seeing around, say, 12-13% upside from current levels. That's what our December target for this year is.
Sorry, that point, Surendra, you said the underweight is 180 for EM investors. It's still 180 basis points.
This is as of end of November. The underweight has been increasing, and as of end of November, it was 180 basis points. This is based on a sample of EM funds, which our regional team tracks on a monthly basis.
Okay. If you look at the MSCI in Asia, ex-Japan, India weight is about just under 20% right now. It used to be 19.7 or something. And foreign weighting here is, I think, September on, I think FIs have sold another $20 billion, right, in India. So that number would be much bigger now.
No, I'm talking of the November number. And as I said, this is based on a sample of funds that we track on a monthly basis. So that's that underweight has been increasing, but as of November, it was 180 basis points.
Okay, just reiterating, Surendra, so 12 to 13% upside in the market, and this is largely, you're saying the large caps, right? That's where the bulk of this recovery will happen.
Yeah. So what we are saying is, from a valuation and growth perspective, large caps look a lot better compared to mid and small caps. In fact, the excitement we saw in mid and small caps last few years has taken valuations to really high levels. And a lot of the large caps are looking quite okay, even in the historical context on valuations. So as growth outlook improves a bit, I think that's where we see more upside. But yeah, at a market level, when I say it's a Nifty target of 12-13% upside.
12 to 13% upside on the Nifty. The investors and our viewers will love the sound of that. Everyone can do with some good news, right? The market's been slammed so hard last couple of weeks. Let me come to Samiran as well. Samiran, while, there's no point trying to second guess beyond a point what happens to flows and what happens to tariffs, I think the question I have for you is the local question, this whole growth conundrum, the slowdown that we've been in the sort of midst of. Where do you see things settling? And are you expecting any significant action, either from the monetary side or from the fiscal side, now that we're looking at the budget, to get us out of this funk?
So thanks for having me on the show. Our sense is that out of the 4 balance sheets in the economy, the corporate balance sheet, the financial system balance sheet, the government balance sheet, and the household balance sheet, 3 of them are just fine. It's only the household balance sheet which is under some stress. And that too, there is a somewhat of a different track going on between the urban consumer and the rural consumer. In particular, we think that the reason for the urban consumer slowdown has been twofold. One is that we are finally seeing some impact from the monetary tightening, the credit tightening on urban consumer. And secondly, the fact that the fiscal expenditure, particularly on capex this year, has been slower than usual, has probably led to some cash flow squeeze on urban consumer. So in some sense, the recovery paths will have to come from these two sides. Monetary policy will have to gradually ease. We think it's going to be a three-stage process. The first stage is going to be more liquidity easing. The second stage will involve modest 50 to 75 basis point of rate cuts. And the third stage probably could be some relaxation on the tightening of macroprudential measures that we have seen. On the fiscal side, while the government has committed on the 4.5% fiscal deficit number for FY26, and we think that commitment will be kept, if for the next 3-4 months we see the capital expenditure pick up to meet the budgeted amount, then that itself could act like a mini stimulus. So to that extent, the bulk of the policy side intervention will have to come from monetary over the medium term, but in the short term, the fiscal can also help. That would probably make the urban consumer recovery. And we are quite confident that the rural drivers are still strong. And that's why probably we get up to about 6.5%, 6.6% GDP growth for next year is what our forecast is right now.
All right. Hi, good morning, gentlemen. Good to see you in. Samira, and let me push you a little bit on that point then. When do we see the first rate cut? I think you're talking about 50 to 75 basis points for the entire year. But when do we see the first one? And also, what are you making of this rupee fall? You know, it went one way to around that 86.5 odd. It's pulling back a little bit today. So what are the levels you're looking at on the rupee?
So we have still our baseline as the February to be the starting point for the rate cut. We think that the inflation numbers are moderating quite nicely. Yesterday's print has been slightly below expectations. January print is probably going to be below 5, maybe something around 4.7. And in second half of the year, we should see inflation trending closer towards the 4% medium-term target that RBI has. So that opens up space for some easing. Unfortunately, global factors have not been that conducive. We've seen Fed rate cut expectations being deferred. The dollar is strengthening globally. And on top of it, the new challenge has been the rise in oil prices. So we'll have to observe these three factors from here to the policy date to farm up the view on whether we see a rate cut in February or it gets delayed by one more policy. And also we'll have to see to what extent RBI is taking the liquidity easing measures, which are very much required right now, because that will act as a signal for rate easing in February. In terms of the rupee, our near-term target was that 86.5, which has already been reached. Our more medium-term target is to move towards 88. But this is a bit of a moving target because it's partly a function of where the dollar is going to be in general and how the retaliation to all Trump policies are from other countries. Say, for example, our China economists think that there is a substantial 6 to 7% CNY depreciation possibility if as a retaliation to the Trump policies. And in that case, we could see more weakness in rupee also to some extent negate the effect of the CNY weakness. So at this moment, it's difficult for anyone to put a hard number on where we are going to be. But it's a good thing that finally the bit of a misalignment on a valuation sense that was there on the currency, that misalignment is getting corrected.
Samiran, just to check, you said 88 is your medium-term target and it could head lower depending on what China does. So when you say medium-term, is that end of the current calendar year? I mean, just to get a time sense?
It's about a 9 to 12 months ahead view.
Okay. All right.
Samir, on interest rates, and Surendra, this is for you as well, it's kind of become... so, for example, I think the Citi Global view was that we'll see numerous rate cuts, I think 6 or 8 this year in 2025. And I was reading post the NFP, it's suddenly looking very different now, right? I think another global bank, Bank of America, is now saying maybe the next move is going to be a hike and no cuts in 25. Has it become tough to kind of forecast? We can all, the one view is that, what we're seeing in terms of rhetoric is kind of peak Trump. And once he gets into office, he's going to be pragmatic and businesslike, and he'd not want to do things which will eventually cause pain for the US as well. But who knows? So just your thoughts there, Samiran.
So I guess one part of the discussion that you were highlighting is with respect to the Trump policies. But even if you take that aside, the US economy is showing a pretty strong growth outlook, different from what the market expectations have been. So our US economists now think that the next rate cut is starting in May only, and they think that the labor market weakness by that time will be more visible, and then we would see about 125 basis point of Fed rate cut this year. So they have kind of pushed back the rate cut expectations a bit because of the inherent strength in the economy. How Trump policies affect this, the most obvious channel is whether these tariffs increase the inflation in US. There, our US economists have estimated that if the tariffs are reasonable around 10-15% increase and not really 50-60%, then with that 10-15% increase, the inflationary impact will be quite manageable. So inflation will not play a spoil sport in the Fed rate cut view. But it all boils down to what extent the labor market softens from here. The inherent strength of the US economy, also known as US exceptionalism, I think that's the big driver of Fed going forward.
But it kind of is so wide now, right? I mean, there are those who are expecting, Citi, for example, is expecting 125 basis points of cuts. There are others who are saying the first move will be a hike. So it's really out there and directionally as well. I mean, the views are absolutely opposite. And that's what the market strength is, the surprise that you're talking about. Surendra, so how, for markets to do well, I think one way to put it is you don't need rate cuts necessarily, but you certainly don't need hikes. Is that the way to look at it, Surendra?
See, I think rather than focusing on just one variable, I think there have been a bunch of things which have resulted in slowdown in earnings, right? You look at it sector by sector, there are various reasons. You have seen it in banking, you have seen it in consumption. And I think some of it are driven by more temporary issues. And I think as those things resolve, right, and Samiran mentioned kind of some of the policy measures which will really help there. I think as those issues resolve, we should come back to more the kind of growth rate that we typically get on earnings in India. If you take a 10-year view, Nifty earnings, 11.5% growth CAGR. And that's like among the best in the world. And that is what really kind of drives the market. In this year, there has been a moderation. In the current year, we have seen a moderation. And I think if some of those factors kind of come back next year, we get back to a better growth rate. And that's what is really required for that upside to come through. In the meanwhile, I think the market will focus on sectors where there is growth visibility. And at the same time, valuations are relatively reasonable. So that's how we are kind of thinking about this year.
So, Surendra, I was coming exactly to that because, you're giving us optimism. You're saying that at a headline index level itself, the market could be up 12 to 13%. The question is what to play. So we've discussed, Samiran laid out the RBI roadmap, the expectations on easing. I think a lot of people are wondering whether to continue with CapEx themes, industrials and CapEx, given the expectations that there's going to be a pickup in government spending, or whether to start looking at staples. Wondering whether the government will have a more populist tilt to soften the blow at the lower end of the pyramid. So top down, just take us through the portfolio construct.
Yeah. So see, at this point of time, given where we are kind of focused on sectors where we see decent growth visibility, and at the same time, valuations are relatively reasonable. So if you look at the key overweights that we have, select large banks, and again, large banks where growth has been relatively better. At the same time, asset quality, given the diversification, is relatively better. And obviously, sentiment is weak on the entire banking space. It's been tough for a while. So valuations in that context are attractive in the context of history. So that's kind of one part where we are overweight. Secondly, telecom is more around kind of good trends continuing. So we have seen healthy trends in the sector. So a couple of our top picks are in that space. Healthcare, we like both hospitals and pharma selectively. Again, decent visibility, kind of decent compounding. So for now, those are the categories we are overweight on. Staples, we are neutral. I think stocks have corrected a lot and risk reward has become favorable, and they can be defensive in this kind of a market. On rest of consumption, as well as IT services and metals, those are the sectors we are still underweight on.
Okay, all right, gentlemen, we appreciate you joining in. Thanks a lot for giving us the update in terms of your outlook for the markets for this year in the near term, both in terms of monetary policy as well as on the markets as well. Well, let's hop across to Nimesh. He's gone through a brokerage report where Bernstein, they are giving 11 bottom-up ideas. Nimesh, fill us in with the list.
That's right, Nigel. They've done some changes to the model portfolio and they've identified 11 bottom-up ideas. In terms of additions, they've added IndusInd Bank, Coforge, Bharti Airtel, Adani Ports and Jubilant FoodWorks. Some of those names are purely because of the sharp correction that we've seen of late. In terms of deletions, they have Reliance, HDFC Bank been deleted, REC and Zomato. These are the 4 names which have been removed from their model portfolio. Now coming to individual sectors and stocks, they've actually increased their allocation on IT services and consumer names. Within consumer basket, while they own DMart, they've added Jubilant FoodWorks and they've removed Zomato. So that's the change in the consumer basket. Within the industrials, they've added Adani Ports, largely because of the sharp correction that the stock has seen in the last few months. Same is the case with Bharti as well. After the recent correction, they like telecom, and within that, they've added Bharti again into their model portfolio. Within the financials, that's interesting. While they've retained ICICI Bank, they've added IndusInd Bank into the model portfolio purely on back of the sharp correction that the stock has seen in the last few weeks. They also like REC within utilities, but they've removed REC and they continue to own NTPC in that utility basket. In the insurance space, they continue to like SBI Life, and within the other utilities, they own NTPC as well as L&T as well. So these are the few changes that they've made to the model portfolio. The key to me was adding some beaten down stocks like IndusInd Bank and Bharti Airtel and the likes of Adani Ports, which have seen very sharp corrections in the last few weeks.
Right, Nimesh, thank you very much for that interesting list there. And, we'll sort of invite Venu of Bernstein to talk about some of these changes as well over the next couple of days. But thanks for that. Well, HCL Tech is, of course, the one in focus, largely inline set of numbers. But, of course, expectations were higher. And the stock is reacting accordingly. My colleague Rima caught up with the management of HCL Tech, began by asking them about the company's decision not to raise their organic growth guidance. Listen in to a slice of that conversation.
Our earlier guidance was 3.5% to 5%. Now we have raised the upper end of the guidance from 3.5% to 4.5%. So the new guidance is 4.5% to 5%. So 0.5% increase in the lower end is due to the organic improvement, and 0.5% is through the contribution from the HPCTG asset that we acquired. So overall, it's 4.5% to 5%.
But CVK, the asking rate for Q4 is minus 1.3 to plus 0.6%. Which means you aren't expecting any pickup, even if you account for the reduction in seasonality in your products business.
Yeah, so the software business, as you know, will have a big seasonality in, we had a big peak in December. Now that will come off in JFM quarter. And as I discussed yesterday as well, I think our momentum across all the verticals is continuing to pick up. And there will be some impact because of a large program coming to an end in the retail CPG segment, where we had a 14% sequential growth last quarter. Now, to backfill that project with new projects, it will take some time because some of the deal wins have happened towards the end of the in December quarter. So that pickup will happen towards the second half of the March quarter, and that will continue into the Q1 of next year.
And what would be the loss in Q4 because of this large retail CPG program coming to an end?
I think that will be roughly $30 million.
About $30 million. In the current quarter, you also spoke about some delay in signing certain large deals and renewals. Can you tell us a little bit more? Was it one specific deal or is it a little more broad-based? And what's happening on the client corporate conversations now?
No, I think overall the conversations, the lot of good interest in using generative AI for both innovation and efficiency. And that is directly leading into a lot of conversations on data application modernization, some more cloud migration and transformation kind of opportunities. So I think the conversations are getting a little more productive in terms of good programs that could materialize for us. We saw that in end of September as well. We did indicate there is some green shoots of growth in financial services and tech as well. We saw some improvements, and that is reflected already in our broad-based growth in Q2 and Q3. Now Q4 as well, across most verticals we will grow, except the some of the specific things that I called out will have an impact in Q4.
So Q4, all verticals should grow, ex of retail and CPG?
It would be more broad-based. There could be some could be flattish, but I think the way you should interpret this is, every vertical has some dynamics that plays into every quarter, but is the new additions adequate enough to kind of offset some of those reductions is what we should see. We are quite positive of an all-round growth in Q4.
Positive of an all-round growth in Q4. Shiv, in Q4, typically you have the wage hikes for senior management. So Q4 margin should be lower than Q3, and what would be the impact of hikes?
So as we announced last quarter also, the impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
But if client conversations are positive, your deal wins have been stuck in this $2 billion band.
Yes, I think there is a little bit of mechanics there. If you see, the ACV has grown very nicely, and the tenure of deals are becoming a little shorter, from 3 years to 2 years. Now it's about 1.6 kind of tenure is what we are seeing. I think there is a good momentum in a number of small deals, and that has a potential to convert to revenue quicker. Some of the large deals conversions continue to be a little slow, but we expect that to pick up with some of the uncertainties behind us. We think the large deal momentum should come back in this quarter and maybe Q1 of the next financial year.
And how would you qualify, CVK, discretionary demand as you see it right now versus what it was 3 months ago?
It's definitely better.
Okay. And it would be better across which verticals?
I think barring life sciences and healthcare, all verticals, it looks good. And maybe a little bit in energy and utility, some softness, but financial services is good. Tech vertical is looking good. Telecom also, there is a lot of efficiency-led improvements that clients are looking for. That is also creating good demand. Then manufacturing is also looking good, retail CPG as well, barring some one-off things that might happen quarter to quarter. But the general theme is positive across most segments. And you were talking about large deals, and we announced one deal. I mean, of course, it is part of our IR pack that we released yesterday. This is a strategic partnership between HCL Tech and Microsoft on transforming the contact center space using generative AI and cloud solutions. So I think there is a lot of interest in using generative AI to transform different aspects of business, and contact center transformation is a big theme, and we are very well positioned. And this partnership with Microsoft will give us significant capabilities in conversational AI, conversation design, and things like that, which are going to be very instrumental in driving the true leverage of generative AI in the contact center business.
And this would be a large deal? Would this be the first large generative AI-led deal?
Yes, I would think so.
Just getting back to the vertical-specific outlook, what is ailing life sciences and healthcare? Even the TCS management sounded downbeat on that particular vertical. So what is the exact, regulatory headwind that you fear? Or what's holding back the clients?
I think some of the firms, especially in the medical devices, they're also going through certain inflationary challenges and cost increases in their own supply chains. I think that's kind of putting a little bit pressure, and I think that should also ease. That's the way we see it. Maybe it's a quarter or two away, but definitely we have a good pipeline even in life sciences and healthcare.
Shiv, what's the outlook on hiring, for calendar year 2025 or the current quarter, and the view on attrition? Is attrition going up or is it going down? What's the visibility?
I think on hiring front, I think this quarter we hired around 2,000 freshers and added at a company level over 2,200 or so. And for the remaining next quarter, the plan is to hire at least add another 1,000 freshers. And given the uptick in slightly, broad-based situation, so it looks like I think next year we think that we would increase our fresher intake substantially, but it's going to be more the specialized skill hiring than the numbers. That's the plan we have for next year.
Okay, that's HCL Tech, and now we know that it seems like the ramp down of one contract, a reasonably large size contract in the retail vertical, is making them a little cautious, and that's why they've not increased their guidance, the upper end of the guidance, and that is the disappointment that's playing out on the stock price. Otherwise, the earnings were fine, commentary is largely positive, but right now 9% down on the stock. Let's take a break, come back on the other side, and it'll be time for our special segment, Quarter Se Quarter Tak. Today, we put the spotlight on the financial space.
Welcome back. Well, the IT index actually is letting the markets down today because HCL Tech was a little bit soft. But I'll tell you what, there's a positive trend playing out on Nifty Bank. And I say this because that's been the big drag. It's bouncing back from bombed out levels. And if you just pull up a chart on a day-to-day basis for the last many sessions, it's been making lower lows and lower highs. Take a look at what's happened today. That's January 14th. Now it's made a higher high for the day. That's after a long while, because otherwise it was trending down. And even on the lows, it's made a higher low as well. So hopefully, at least in the near term, there's a sense that maybe in fact the Nifty Bank could be seeing some kind of a bounce, and that's precisely the reason that it's outperforming today. Talking about banks, well, it's time for our special segment, Quarter Se Quarter Tak. We're bringing you earnings expectations from each sector. Abhishek joins us to help us out with what are the expectations from the banking sector. Abhishek, take it away.
To begin with, in Q3 FY25, you saw the deposit growth on a year-on-year basis being at 9.9%, and sequentially, that is quarter-on-quarter, the growth was at 2.6%. So the deposit growth on a year-on-year basis is the lowest that you are seeing since March of 2023. Advances growth was healthy at 11.2% YOY and 3.6% sequentially. Loan growth was higher than deposit growth, as RBI has brought down the cash reserve ratio requirement in the previous MPC meeting. Hence, you saw loan growth outpacing deposit growth by the end of Q3 FY25. So the credit deposit ratio as a resultant has been at the highest ever that you are seeing from the industry of about 80.4%, reflecting a more aggressive lending stance by the lenders. This augurs well for some lenders in case to maintain their net interest margin at healthy levels. So if they are able to curtail or bring down their slippages. So the net interest margin is expected to remain largely stable for most of the large banks in case they are able to hold on to their slippages. Now, we may see marginal decline for some of the lenders. Net interest margin will also get impacted for lenders with higher slippages, especially in the unsecured portfolio in Q3 FY25. So the net interest income over here, the growth of NII is expected to be sluggish, especially for PSU banks. Why PSU banks? PSU banks have largely raised deposits at higher cost while their loan growth is lower than the industry levels. So the credit cost for certain sectors, especially those with unsecured lending like personal loans, credit cards and microfinance, they are expected to face higher credit cost in Q3 FY25. This could be as a result of higher defaults in that segment and hence incrementally increased provisions that needs to be made over there. Now, there is a need for more evidence to confirm whether these higher costs or higher credit costs are stabilizing. So earnings outlook, overall, the earnings are expected to remain weak, especially for PSU banks. Now, PSU banks over the last few quarters had been drawing their profits largely from the treasury gains, and this time around it may not be there. So for some lenders, higher credit cost can also impact their earnings momentum. Overall, earnings momentum expected to see weak momentum for the banking sector in Q3 FY25. Talking about asset quality, while asset quality is generally expected to remain stable, the concern remain around the unsecured portfolio, which are expected to witness continued deterioration like they did in the previous quarters. So X of unsecured loans, largely the asset quality is expected to remain stable for the sector or improve for the banking sector. Back to you.
Okay, all right, got it. Abhishek, thanks very much. Some of the highlights that we need to watch out for in the third quarter earnings season. Well, let's quickly move ahead and say hi to Pranav Gundapalli, Senior Analyst, India Financials at Bernstein. He's with us now. Pranav, thanks for joining in. So let's start with your sort of big picture expectations, because I think everyone knows, and the issue here is that is the best behind. Now we'll start seeing credit costs rising. Eventually, there might be pressure on margins, and that's showing up in the way investors are looking at financial stocks as well. Let's start with the large banks first. What could be the best, and what could be some of the worry points that you'll watch out for?
Good morning. See, I think you rightly said it's the best is behind us. I think what we are now looking for is an earnings reset, right? So we know the current level of ROA is much higher than what I would call the sustainable level. So there will be a decline in NIM, especially with a rate cut potentially coming in, and credit costs will inch up at the broader sector level. So it's not a significant deterioration that we're talking about, but still the credit cost will inch up. So yes, the ROA will decline. We've already seen the growth drop from near 16% level that we saw last year to about 11%. So overall, a weaker set of numbers with growth dipping and potentially profitability dipping as well. But that's largely priced in. So if you say where would be the surprises, I would say most of the surprises will come from the asset quality trends. While there's only been a gradual increase in credit cost, the trends have been mixed amongst the various banks. some of them have seen a sharper rise, while others like say ICICI and HDFC have seen pretty much a flat credit cost over the last few quarters. So any variation to that trend would drive a positive or negative surprise, depending on which way the surprise comes in.
Pranav, hi, good morning. Prashant here. And good to see you back on the channel. Now, for players like, I mean, if you can sort of talk about specifics, IndusInd, for example, would you have coverage on the name, IndusInd?
Yes. So on IndusInd, for example, would be one of the banks where the West is largely priced in for the asset quality. And hence, any improvement in trends or even a clear signal that we are at the peak credit cost would be the major positive surprise to watch for, right? Whereas for others like, say, ICICI or HDFC, I think the expectation is that the current trend of almost unimpacted credit costs continue, and hence even a slight deterioration would be a big negative surprise.
So, because this has got the microfinance bit as well, so you're saying you're expecting a turn, or you're saying, well, the price, stock price is already factoring in, even if the third quarter turns out to be a poor one for IndusInd?
The stock price is factoring in the worst case scenario. I mean, I think even if you assume they have eventually losses of well over 15% of their microfinance portfolio, even that has been priced in, with the stock trading almost at book or slightly below book in terms of forward multiples. So the worst is priced in. I think it's only a question of how long does the pain last. And in that sense, and given that MFI tends to be a shorter duration cycle, any signs that we are close to the bottom would be a positive. So nobody expects a big improvement soon, but a sign that we are at the bottom is probably good enough for this quarter.
From the banking space, is that the one that you would, because it's all, we were discussing earlier, Bernstein's sort of 11 ideas, and IndusInd is part of it. Is there anything else there?
Yeah, I think we like it because at the current valuation, like I said, the worst is priced in, and we know that the pain in MFI will be short-lived.
I was asking anything else from the financial space apart from IndusInd.
We continue to like HDFC because against the trend of ROA decline across banks, we see that as one where the ROA could remain stable or even see an improvement. So that's the other place that we would be bullish on.
Okay, you'll be bullish on HDFC Bank from these levels, is that correct?
Yes.
All right, what about PSUs, namely SBI? That stock had a one-way run, and then it's gone through a long phase of consolidation. PSUs as a basket, only they have fallen a little bit out of favor. But from the PSU basket, how do you approach it? And SBI would be top of the list?
Within the PSUs, yes, SBI would be top of the list, but we would still wait for a while for the PSUs before jumping into PSUs, because we believe the loan growth for the PSUs is still much higher than what I would call the sustainable levels. We expect their loan growth to converge with their deposit growth, which remains significantly behind the private sector peers. So to illustrate that, if you look at FY24 numbers, the PSUs were growing their deposits at 8-9%, whereas you had the private sector banks growing deposits at 17%. But when you look at the loan growth numbers, they almost were very similar. So I think that loan growth gap has to diverge. And until that plays out and the slower growth is priced in, we would remain almost neutral on SBI. No reason to jump in at this point.
Pranav, just curious, you said that you also like HDFC Bank, right? But I think in the note that Prashant was alluding to, in terms of the additions and deletions, IndusInd Bank is an addition, but HDFC Bank, I think, is a deletion. Correct me if I'm wrong.
Oh, yeah, so that, I think you're referring to the overall portfolio, where I think the factors were slightly different around the size of the bank and therefore impact on index. So as for those who are looking as a standalone idea, we remain bullish on HDFC Bank.
All right. So that's one clarification out of the way. What else? We've discussed some of the larger lenders, but if we talk about asset quality issues, I mean, MFI is well documented. We know that. Any other specific names where a rise in credit costs or any sort of asset quality deterioration could be a fresh sort of worry for the market. Where else would you watch out for these trends to show up?
See, I think we think it'll just continue. We don't see a scenario where it worsens significantly from the levels we saw in the last couple of quarters. So for the likes of Bajaj Finance, for example, or SBI cards, we don't see an immediate improvement in credit costs, and hence we remain on the sidelines on both these names. But any signs of further deterioration would be a significant negative. Our assumption right now is this pain continues for a few more quarters, and therefore the growth resumption happens again after a few more quarters. So we could see the stock go sideways for a while before seeing any meaningful re-rating.
Okay, that's an important one as well, that at least it should not get any worse, maybe just stay sideways and, expect some of these lenders to pull back on growth till the asset quality issues improve. On margins, Pranav, just give us a broad big picture, because that's also a wide open debate right now, what the RBI does, how many rates, etc., given everything that's happening in the international markets. But on margins, largely, what is the kind of compression that you've started penciling in for private names, for PSUs, just across the board? What should we expect?
Right. See, I think there are two factors here. One is the rate cuts, and even if you ignore the rate cuts, there's probably going to be a slight dip in margins because you have a slowdown in unsecured growth, which used to be a big driver of margin improvement. So until the rate cuts kick in, we expect a marginal decline in NIMs, maybe about 5 basis points here or there. With the rate cuts, the private sector banks will see a sharper dip in margins. We're talking about 15 to 20 basis points dip in NIM if there is a 50 basis points of rate cut. Now, our base case assumption is for a 50 basis points of rate cut this year, which should drive between 15 to 20 basis points of NIM decline. That number would be a lot lower for the public sector banks, maybe closer to 10 to 15 basis points. But almost all the banks will see a decline in NIMs. And in terms of rank order, IndusInd once again will stand out as probably the least impacted, just given it has a very high share of fixed rate loans. But for most of the others, the impact will be quite similar. Not a lot to drive a big preference simply based on the rate cut impact.
Pranav, do you have coverage on the MFI space?
We look at IndusInd and therefore track the others.
So that covers it, kind of. But yeah, names like Credit Access, etc., from the pure MFIs, or you think, the best way to play it is through IndusInd?
I think with pure MFIs, there are probably one or two names where you could look to gain exposure. And there again, I think our view is, one, you have two paths to this whole re-rating. One is the asset quality trends where, you could probably see a bottom soon. But the second leg of re-rating will require growth to come back, which we think is at least a few quarters away. So yes, closing in towards the bottom of asset quality, but recovery in growth seems to be much further away. And hence, the extent of re-rating might not be as sharp as probably what is being expected.
All right, Pranav, we leave it there. Good conversation as always. Thank you very much for joining us and running us through the perspective on financials and as they start to report numbers for the third quarter. So it's going to be an important one. We'll take a quick commercial break here. We put the focus back on commodities. Manisha is going to be here with that. Manisha, on the other side. Stay with us.
We don't make arguments in a vacuum. It's always relative. So a company has to do what it needs to do to be competitive. And that, unfortunately, is dictated by the marketplace. But having said that, my point of view to start with would be simply this, that putting in enough work is obviously important, be it 70 or 90 hours or what have you. But at first, to be clear that the hours we are putting in, what is the quality, the efficiency and effectiveness of that? I think that is more critical than the sheer number of hours. For me, qualitatively, it is a more important issue than quantitatively.
So today I'm announcing that the federal government will cover 100% of the cost for 180 days. This is going to pay for things like debris and hazard material removal, temporary shelters, first responders' salaries, and all necessary measures to protect life and property. And folks, I want to underscore, I told the governor and local officials, spare no expense to do what they need to do and contain these fires and in their communities that have really been devastated.
Welcome back. So the markets are managing to hold on to that green, though it's 65 points now. So again, the slight drift down from the top of the morning has already started. Let's see where it goes. We've got Mitesh joining in for some ideas. Mitesh, welcome back. Index, any trades, otherwise stocks?
Well, I think that while we have seen some selling off from the higher levels, the Nifty, if it can, get past 23, 180, 200, there could be a bounce back of about another 120 odd points. So I'm waiting for that 23, 180 to be taken out. Once on this spot, the Nifty clears that, buy with a 40, 45 point, maybe 50 point kind of a stop and look for another 120 points on the upside, which is 23, 300 plus levels. So that's the way we're approaching it. And now, I think it does look like that this could be a bounce back, though I think we have seen some tapering off from the higher levels. A lot of stocks, a lot of index indicators are now turning up on the upside on the 15-minute, 30-minute charts, etc. So I think there's a good chance of a pullback happening. But again, as I said, I think I'm waiting for 23, 180, 185 to be cleared on the Nifty spot, and then I would take a long position.
Okay. Stocks, Mitesh?
On the stock side, I have a buy on TCS. I think, after good numbers and then gap up, we had some kind of a pullback today. So buy here with the stop below 42, 45 and look for a target of around 4,400. And SBI card is the other one, which I would recommend buying with the stop below levels of 709 and look for targets of 750.
Okay, all right. Got that, Mitesh. Let's quickly move on and look at the commodity markets. Now we've got Manisha joining in with the latest. Manisha, so how is it looking after this, 8% surge in crude prices, right, so far in January?
Well, I'm looking at the sugar prices today, where we have seen the US sugar prices decline to a 4-month lows. The London sugar prices are trading at around 2-year lows, and the Indian sugar prices in the last 1 year also have seen a decline. So much so that the ex-mill prices are almost at cost of production or below cost of production for many mills in India. Well, the dollar index at a 2-year highs and improved global supply outlook is what's weighing onto the markets. So if you look at the prices in the last year, we saw sugar decline by 8%. In 2025 until now, the sugar prices are down by 2% as well. But the markets are looking at India perhaps allowing sugar exports. That review, of course, will come in by the end of this quarter, but that could really increase supplies in the global markets. India, remember, has restricted sugar exports since October 2023. Before that, we saw 6.1 million tons of export, and then, of course, it was a record exports of 11.1 million tons in the year 2021-22. It also is about supply outlook getting favorable with other producing countries. Brazil, which is the largest producer of sugar, is also looking at a higher production. Thailand, which is the third largest producer, also is looking at nearly 18% of a run. And US sugar production also is expected at a record 9.4 million tons. Is the reason you have seen the sugar prices continue to decline here. Well, for the Indian markets, we still are waiting for minimum sugar price being revised. And of course, the ethanol pricing, which has not been revised since 2000. 2022-23 is something that these markets are awaiting, and that perhaps is impacting these margins as well. But apart from that, while our current sugar production is down by 15%, but this data is as on 31st of December, the street will wait for 15th Jan. That is when the newer data will come in, and of course the reactions would come in for that as well.
Right, thanks very much, Manisha, for that. Angel One, back to stocks, is down 5.5%, 6% now, almost at the day's low. Vamakshi is here to revisit this one. Vamakshi.
Well, absolutely. It's a weak set coming in from Angel One. When you look at the revenue, that saw a downtick of nearly 17% sequentially. The margins contracted by nearly 507 basis points from nearly 44.4% to 39.3%. The net profit too saw a dip of almost 34% sequentially, coming in at 281 crores, and this is below what the street was expecting. Now, the decline in revenue is largely being led by the net broking revenue. Now, this saw a dip of nearly 10%, and this is mainly on account of two factors. Firstly, the F&O regulations that came into effect, which had an impact on the F&O part of the brokerage, and the weak market sentiment had an impact on the cash segment part of the brokerage. Net interest income came in nearly 6% lower, but this was largely better than what the analysts were expecting. As far as the margins are concerned, higher OPEX led to the decline in the margins. The cost to income ratio stood at 60.71%, which is much higher as compared to 55.65% that we saw in the previous quarter. So given that, we saw a dip in the net profit, but apart from that, they've also come ahead with a few announcements. They've appointed Ambarish Kenge as the group CEO with effect from March 6, 2025, and they've also declared a first interim dividend for FY25 at 11 rupees per share. But overall, it's a weak set coming in from the company.
Okay, all right, Vamakshi, thank you very much for that. MGL is something we want to address once again with Sud. Sud, morning.
Morning, Prashant. So MGL is in focus. Today's stock is higher, around 4%, because Morgan Stanley has initiated coverage on the stock with an overweight call, and target is rupees 1606 per share, implying an upside of more than 25% from current levels. Morgan Stanley believes Mumbai is an ever-expanding city with rising travel and energy needs, with natural gas being Mumbai's fuel of nature. It goes on saying that it is both MGL and Mumbai's Tesla-like moment for the gas adoption. And MGL has fifth of its gas sourcing linked to LNG. And because of this, while margin will be lower, volume growth is expected to be structurally higher, which is going to be the key for re-rating of the stock going forward. And that's the reason you are seeing an uptick in MGL today.
All right. Okay. Got that. So some green on MGL. Thanks for that note, Sudarshan. Appreciate you joining in and filling us on the latest. Right now, we have to take your leave. That's Prashant and me. But Lata is in the house, and I'm sure what else? But it's the currency that's captivated your imagination, Lata.
I just want to make a brief point. The rupee has strengthened, as have all Asian currencies. But over the past week or so, especially yesterday and today, this week, very clearly the rupee is an underperformer. All of last year, the rupee fell, but we fell only 3% all of last year, whereas the won, Taiwanese dollar, IDR, Malaysian ringgit were all falling between 5 and 10%. I think one of them was even double digits. This year, it's the other way around, and I think the difference is the India growth story. Even today, we have appreciated, but we have appreciated by 0.04%. Some of them have appreciated 0.2, 0.5, 0.4. The others. So again, we are underperforming even in the appreciation. The difference is we were seen as a growth story last year, whereas now we are seen as, okay, let's wait and see whether the growth is coming. And until then, I think this underperformance will continue. Otherwise, we moved with the dollar. Yeah. In any case, I think the overall depreciation is not very serious. I went back 5 years. We are depreciating a year 3.3%. Yeah. Okay. So, to that extent.
One other change, Lata, from last year, new governor. I'm not sure how much of that is.
I don't think global currencies take that into account.
No, some chatter that they're a little more allowing off.
All governors can allow. Under the same governor 2 years ago, that is under Shaktikanta Das, the currency depreciated 5%. We just forget it. It happened during a COVID year. We forget that. It was not as if we stood against every wind. But this year, that is 2024, the Reserve Bank was a little more stubborn, thinking that the India growth story is good, and they're fighting speculation.
$60-70 billion, actually, right?
Yes. So, but they also earned $100 billion, so they did both things.
All right, well, that's the discussion which is going to come up, and Lata will take you through that on It's the Economy, which will come up in just a bit from now. So we'll have Kamaksha Trivedi of Goldman Sachs to discuss all of this and more in a bit.
Well, they called for an appeal, and as you know, they acknowledged what the judge said about no penalty, and there's no penalty. But we're going to appeal anyway, just psychologically, because frankly, it's a disgrace. It's a judge that shouldn't have been on the case. He's a highly conflicted judge, and
Welcome to HC Economy. We have some relief from the relentless dollar climb and the very sharp rupee fall that we saw yesterday. But where do we go from here? Has the dollar got more strength, or will it peak in the first few days of the Trump presidency? And what about the US yields, the rupee, India's own Reserve Bank's ability to cut? For all these, I'm joined by Kamaksha Trivedi, the head of Global FX and EM Strategy at Goldman Sachs. He is joining us from the sidelines of the Goldman Sachs Global Macro Conference in Hong Kong. Kamaksha, thank you very much for finding time for us in between your conference. Well, news hit us this morning that the Trump administration may not rush with tariffs. They will space it out, and the dollar index has gone down from about 110 to 109.6. Do you think the dollar has peaked in the near term?
No, I don't think so. I think our view is very clear on this. We think the dollar is going to be stronger for longer. We've just marked our forecasts in that direction. We think there's another 4-5% upside still to the broad dollar trade weighted index. So, this is a combination of continued firm U.S. growth, U.S. exceptionalism, and shifts that are occurring on the rate side, but also tariffs. Tariffs are coming, and I think that's a key part of our view of dollar upside from here.
You said 4 to 5% appreciation from here. So can we say you see 115 as the peak for the dollar index?
I think that there are still risks to the upside even from that level. I think that, our baseline expectation is of tariffs that are reasonably targeted towards China, towards certain specific industries. And certainly, the report you mentioned that has been in the news, suggests that some of these might even start more gradually than we are factoring in. But I think one shouldn't lose sight of the other tail. It is still possible that tariffs are much more broad-based, more universal. Certainly members of the president-elect's camp have talked about that. If we get something of that nature, that has a bigger impact on underlying inflation in the U.S. that puts the Fed on hold for an extended period. I think that's the kind of scenario that gets you to, further dollar upside than even we are targeting. So I think we are going to be living in a strong dollar world for some time to come, and I think, one should be prepared for that.
Oh, that looks serious. Okay, what about the rupee? It fell, 3% versus the dollar in 2024, but the last 2 days, in fact, last week, the rupee's had a rough patch. Do you think we should prepare for just another 3% depreciation this year?
I think that what you're seeing with the rupee is that, this used to be, roughly a 6-7 wall currency. Through parts of last year, it became almost peg-like in its behavior, a kind of very, very stable rupee. And I think while it's helpful for the rupee to have this resilience, I think that kind of very peg-like behavior is not too healthy either. And what you're seeing now is a little bit of a release of the very tight management of the rupee that you've seen. I think that's part of why you're seeing the weakness. And I also think, India itself is having a little bit of a cyclical slowdown. If you think about the rupee in comparison to the dollar, where, as I just mentioned, you're seeing kind of pretty exceptional growth, it makes sense that you see a bit more weakness in the rupee. But I do think that, ultimately, as we look across the year, relative to other Asian currencies, the rupee will still be an outperformer. But I think there's more weakness to come versus the dollar. I think the common theme here on an FX standpoint is don't fight the dollar. I think you want to be thinking about the rupee in reference to other EM currencies, in reference to other Asian currencies. And there, I think we're still going to see a relatively managed, a relatively outperforming rupee. But versus the dollar, I think there's more weakness to come.
Okay, that's a good way to learn to think about the rupee versus other currencies and not only against the dollar. Let's get to interest rates. Some say there are no rate cuts to be expected from the Fed at all this year. Of course, that's not a big camp, but your thoughts. Also, the 10-year yields in the US, they've hit 4.8. Now, where do we go from here?
Look, our view is that there are still probably another couple of cuts from the Federal Reserve this year. What that reflects is the fact that alongside firm growth, we also have confidence in the other aspect of the soft landing view, which is that inflation should continue to gradually normalize. Some of that is happening. Some of that might be interrupted by the tariff news, and therefore I think the extent of the tariffs, the pace at which they come on are critical. But by and large, we think that broader inflation normalization process is going further, and the funds rate is starting from a relatively high level. So there is still some room, we think, for another couple of cuts. Of course, there is no rush to deliver them, which is why we think, the next cut could be, as late as June, and second one in the second half of the year. So certainly fewer cuts with less urgency than we saw back in 2024, but I think still further cuts to come. What does that mean for yields, as you ask, longer-term yields? Look, we've been through a phase, I'd say particularly over the past 6 weeks after the Trump election, where essentially, we've seen a prolonged upgrade of U.S. growth views. That's been evident in equity markets, cyclical versus defensive. It's been evident in the dollar, as we just discussed, but it's also been evident in yields. Yields have gone up together as well. I think that it's going to be hard as we start to actually get the policy mix from the Trump administration. We're going to have to face the trade-offs of these. And I think it's going to be hard for all these three assets to keep going up together. And in particular, I think the yields are probably vulnerable to any sign of growth disappointment or better inflation news. So I'd say, compared to kind of long equity view, which we still hold, a long dollar view that we still hold, I think on the yield side, I think, the risks are becoming a bit more asymmetric. Our target for the end of the year is between 4.3 to 4.5%. So we actually see some downside to the yield level from the current levels, in line with the fact that we see a couple more rate cuts still to be priced in.
Okay, all that will be good news, I guess, for the Reserve Bank. But coming to domestic impulses, India's December CPI has come in below consensus at 5.2%. And while actually 5.2 is high, it has been falling sharply for the past 3 months and is seen falling more sharply in the Jan-Feb-March quarter. Now, does all this give Reserve Bank a space to cut rates in February itself?
We are penciling in a couple of cuts from the Reserve Bank in the first half of the year. Probably February and April seem like the likely outcome. As you mentioned, I think inflation has been trending lower in the last couple of months. We've seen some relief on both the headline, but also some of the core pressures. And our expectation is that some of that should continue. A shallow but cutting cycle, couple of cuts for the year is our expectation. We've also seen some tightening in underlying liquidity with some of the FX moves that we talked about at the earliest. So I think couple of cuts, and I think February still is our base case for the next cut.
Oh, February. Okay. The camp is equally divided. By the way, I forgot to ask you your rupee target as well for this year.
We have a 12-month target of 87.5 right now, I think, so along those sorts of lines. As I said, I think, we will see the rupee depreciate versus the dollar. That's where we are penciling in right now. 87, 88, that sort of level seems sort of about right to me, but that should still, on our forecasts, see the rupee outperforming versus other EM Asian currencies.
Okay, got that. Well, let me come back to this conference of yours where you all are discussing global macros, especially in a post-Trump administration scenario. What is your own base case on the Trump tariffs? Will it be 60% or more modest at, say, 20%? Will it be for all goods or some goods? Will it be all countries or only China? What's the base case?
Our base case is that tariffs are going to come and going to come early. We think that they are going to be, 60% on some, parts of China's sort of products, with a baseline for us that the effective average tariff rate goes up by about 20 percentage points. And then perhaps some targeted tariffs on particular industries. I think things like the auto sector, for example, is one that is, often mentioned and in focus. I think beyond that, the big uncertainties around the universal tariffs. Could you get across the board tariffs on a wider range of countries and a wider range of products? No one I speak to does not expect some tariffs on China. I think that's very much the baseline expectation that I encounter when I speak to investors. Where there is a lot more uncertainty is, can you see these sort of broader across the board tariffs? Those, would be a good example of what I was describing earlier. The broader the tariffs, the bigger the impact on the dollar, but also potentially a more negative impact on the equity market. And so this sort of trifecta that we've had of the dollar, equities, and rates going up all together, I think we're going to have to pull those apart a little bit as we actually learn about what the policy mix is.
Oh, yes, that's the wild card, isn't it? And I don't think, as you say, we will be any the wiser on Jan 20th itself. Thank you very much, Kamaksha. I'll take a rain check from you to invite you after we know a little more about the Trump tariffs. Thank you for joining us today. We have to wrap up on Bazaar on that note. After break, Chartbust.
For an appeal. So I read it and I thought it was a fair decision, actually. So I'll do my little thing tomorrow. They can have fun with their political opponent. As you know, I'm under a gag order from a judge. This is the first. This was an attack of a political opponent. And if you take a look at it, I'm not supposed to be talking about it, so I won't. I'm the first president and probably one of the first candidates in history that's under attack with a gag order, where I'm not allowed to speak about something. And they ought to find out what that's all about. And this is a long way from finished. And I respect the court's opinion. I think it was actually a very good opinion for us because you saw what they said. But they invited the appeal, and the appeal is on the bigger issue. So we'll see how it all works out. I think it's going to work out well.
Tech giant HCL Tech tanks nearly 9% in trade. Is the top Nifty loser. No changes to its organic growth guidance for the year. Disappoint Street. Nuvama has downgraded the stock, while CLSA and Jefferies too have maintained their hold call. The management tells CNBC-TV18 that they expect fourth quarter margins to actually be lower, slightly lower than the third quarter.
JSW Energy climbs more than 5% after the company wins the 3.5 gigawatt KSK Mahanadi thermal power plant under the bankruptcy resolution process.
Angel One slips more than 6% on the back of its third quarter results. The stocks recovered with a cut of almost 4% still. Revenue, EBITDA margin and profit, all of them declined sequentially.
BSE climbs more than 3% after brokerage firm Jefferies upgrades the stock to hold and sets the target price at 5,250 rupees on expectations of improving quality of premiums. Though volumes have fallen, the premium fall is not as much as they expected.
Delta Corp shares fall nearly 3.5% as the company saw weak performance in a seasonally strong quarter. Revenues declined 7.5%. EBITDA too declined by over 40% from a year ago.
Hello and welcome to Chartbusters. I'm Nigel and with me is Mangalam, and after a while we have the top of the screen that has more green than red. So the hope is that today we see some kind of a bounce, and at least the initial signs are particularly from the Nifty Bank, which has been the big underperformer, that maybe in fact in the near term we're due for a good close. Mangalam.
We take that with both hands right now. The fact that we are holding on in the green in the first hour of trade itself, there hasn't been immediate sell-off. Two factors I'll be watching out for in particular. One is that do we see any further short covering in the rupee from levels yesterday that we saw, largely because overnight there wasn't a big change in either dollar index or US yields, and there wasn't as big a selling in the FIIs in the cash market itself. And the second thing I'll be watching out for, whether Nifty goes ahead and crosses past yesterday's high or not, because for the last 8 straight sessions the Nifty has been making lower highs. If it does cross past yesterday's high of nearly 23,341, we'll perhaps see signs of short covering. That has been much expected. But the stock on our radar has to be HCL Tech. Seen its biggest fall in over 10 years after reporting their third quarter numbers yesterday. Rima joins in to give us the highlights on the results, what brokerages are saying, and what's causing the stock to fall 9%.
Well, what's causing the stock to fall is the positioning that investors went into going into HCL Tech's numbers. Last year, HCL Tech rallied 30%, while its peers say TCS was up only about 9%. HCL Tech's PE re-rated by 20%, and by the end of it, HCL Tech was actually trading at a premium to TCS and Infosys. So that's the reason why it went in with very high expectations, and the numbers failed to meet that. So the numbers in Q3 were a miss on the company's top line. The revenue growth was at 3.8%, lower than consensus expectations of 4.1%. Margins were in line, so no beat over there. Q4 guidance, the implied guidance on the top line, because the company has held on to its, given the tweaks to the full year revenue guidance, the Q4 implied guidance is minus 1.3 to plus 0.6%. So no acceleration seen in Q4 growth. The company also said that Q4 margins will be slightly lower than Q3 margin. Also remember, the company has a lower exposure to BFS, banking and financial services vertical, which is where we've seen the maximum pickup in discretionary spending. Brokerages, now Kotak has cut the FY25 to FY27 dollar revenue estimates by 1 to 4%. They say the stock trades at full valuations. They've got a reduced call. CLSA, Jefferies and Morgan Stanley, all of them have an equal weight or a hold call, again on the back of the re-rating that we've seen and the valuations HCL Tech is trading at. Nomura, though, is still bullish, buy call with a target price of 2,000 rupees. So in a nutshell, the numbers failed to excite the street. There were a few misses in terms of the fact that the company didn't raise the upper end of the revenue guidance. Q3 was a miss on the top line, and plus full valuations and the recent run up in the stock and outperformance. All these are reasons why the stock is under severe pressure today.
Okay, all right. Rima, thanks a lot for breaking that up for us. And early this morning, Rima was one of the first few who said that expect HCL Tech to open up in the red. So kudos to you on that one as well. Well, let's focus on earnings then. We're focusing on Anand Rathi Wealth. The company reported revenues a little below than expectations. However, margins improved sequentially. The management has also raised their PAT as well as their margin guidance for the remainder of this fiscal. Feroz Aziz, who is the Deputy CEO of the company, joins us on the show. Hi, Feroz. Good morning and good to see you in. Feroz, let's focus first on the guidance that you've upped. If I go by that, it's implying there'll be a marginal growth in revenue, but your profitability will decline by close to 10-12%. Fair to assume that for the fourth quarter?
See, I think from a margin standpoint, we look at our business more simplistically than microscopically because we are in the business of wealth management. So we look at our PAT margin to be above 30% at all points in time. That's the number which we are very possessive about, PBT greater than 40%. Anytime we see that, we don't want to pocket the operational efficiency just yet. Because this business has a lot to reinvest in. For example, I have 161 research people only focusing on India. The day I see my PBT margin at 44%, then it's time for me to spend 2% on the global side, hire 50 people outside, and propel growth for longer periods of time, because we've given a long-term guidance of 20-25% for long periods of time, for 10, 15, 20 years. So that will require some degree of reinvestment. So coming back to your point, whether we've revised our guidance, what we feel proud about, or not proud is a stronger word, we feel happy about, is the fact that we always undercommit and over-deliver. And this last quarter was a very bad quarter or the second worst quarter from the time we got listed. From a market standpoint, Nifty was down 8.97%. In that quarter, if we have grown 33%, gives us some santvana and some calmness that we got the highest new monies in a quarter, which was not the best from an external standpoint.
All right, take that point, and not only would we give you some credit, but we'd give credit to a lot of the matured investors as well, Feroz, who've decided to deploy their wealth at the time of the markets not particularly doing well. So we've come a long way on that. But while you've got money, I am compelled to ask you this. I'm looking at your presentation, and FY22, your equity MF net inflow share was 1.9%. Net inflows for SIP purchases was 7.2%. Look at it now. For the first 9 months, your market share in equity MF has stayed largely stable at around 1.8%, and net inflows for SIP purchase is down to 4.8%. What explains this, and what's your market share target here?
Yes, Mangalam, the credit of net flow goes to you. Most of my clients, HNIs, watched TV18. And I'm very happy to say that, because most of the cream a la cream of India sticks to your channel, and there's nothing wrong to admit that. So a large portion of the credit of my net flows goes to the education which TV18 does, and hand on heart, that's a compliment, heartfelt. Coming to the more pointed bit of where we see market share. See, if you have to look at market share of 4.8% on net flows in a country where there are lakhs and lakhs of distributors, I have 383 relationship manager colleagues. And if I have been able to get 4.8% of the net flow without giving discounts to people, we don't believe in lower cost, lower value model. We believe in taking that 1.09% post GST, which I earn on my 14 scheme model portfolio. I don't let that go. Even if somebody promised me 20,000 crores of assets to manage at a discount fee, I say, no, that's not going to be happening. So in spite of not discounting, if I'm able to get to 4.8% of market share, I would be happy. Of course, there's headroom. You can look at it 7 down to 4.8, but you can look at 4.8 in a country with 373 lakhs crores of people and lakhs of ARNs. If one ARN with 383 representatives have got you 5%, 4.8 rounded as 5. I would be okay and happy, because I think last quarter was not the best in terms of net flows for the financial year.
All right, Feroz, the growth in active client families and the AUM per RM as well has dipped. The growth in active client families has slowed a little bit. And if I look at the AUM per RM, that's dipped on a sequential basis. Yet your margins improved. How is that? Tell us, what are the factors that played out?
Nigel, you are very sometimes kind, sometimes unkind. When the market does very well, you attribute all the AUM growth to market. When the market falls, you tell me.
No, Feroz, that's not true, Feroz. Just asking you what your shareholders want to know, and I'll have to also rope in the fact that valuation-wise, Anand Rathi gets a pretty good multiple. So you could answer both the points on the margin, as well as, as someone who's been with the group for so long and led the way from the pre-listing days as well. What do you make of this premium multiple?
Yes, Nigel, on a lighter note, I was saying that now let me not dodge your first question. In terms of what has happened is, see, there's a 9% fall in the Nifty. There is broader markets have fallen a little more last quarter. So we've just grown 1.5-2% quarter on quarter, 39% from December to December, 55,000 to 76,500. We have given a guidance of 80,000 because if 10% falls on 50% of my assets, which is equity mutual funds, then straight I lose 4,000 crores of mark to market at least, or if all the money was as much as Nifty beta only. So that's why if you see this on a quarter on quarter basis, it will give you a deceptive picture, and I'm sure the shareholder should look at how the business is from the way this business is being run. So I would look at it year on year. So 55,000 crores has become 76,000 crores, which is a 39% growth from December to December. Now coming to the valuation, see what happens is market always discounts the future. Valuations, yes, I would say if you measure PE as a barometer, we are at least 10, 15, 20 PE greater than the second highest PE, including asset management companies in this industry. I personally think after spending 13 years in this company, the 5 reasons why our businesses, if I was looking at it from a shareholder standpoint and trying to decipher why do we get 15 PE more, the 5 reasons which I look at, we are the best ROE. There was one report which just got released the last week where ROEs are best in the country, and that's also looks at 12 businesses, global and Indian. We had an ROE of 45%, which was the highest. PEG, which is the great barometer, I've heard Motilal Oswalji always say PEG is a better measure, and I have been his bhakt. So PEG in India, in all financial services businesses which were there in that chart, which was about 6-7 Indian businesses, we were the best, 0.8, 0.9 as per that report I'm just quoting.
Right.
Then Ventura was the report which I'm quoting. Third, attrition, we are a people's business. Attrition being 0 is first time in the Indian financial services industry. Somebody can say in the regret attrition for 15 months prior to this quarter, we had 0 attrition. So that's one reason. No new products launched. Till the product machinery is in autopilot. Generally, when you launch new products, like even a phone manufacturer launches a new product, there's an increase in revenue. With no new product launched for the last 12 years, our business is consistently growing at 33%. That's the mean and median for the 13 quarters I've been listed. The standard deviation of my result, my worst quarter for 13 years has been 24.5%, has been the worst quarter.
Feroz,
in spite of markets giving a lot of shocks. So these are few of the reasons. And in bad markets, if you can produce a financial services business which can do well, there is some premium I think market would be giving. But these are some of the reasons I could probably put on table. As my assessment.
All right, Feroz, you believe that we should look at the numbers with a longer term horizon instead of looking at it on a sequential basis. You've laid out some guidance, but that's indicating some bit of softness in the fourth quarter, though you're very confident of achieving that. And as you're saying, you're confident of, you believe that you'll deserve a higher PE as well. And, that was a question with regard to the higher valuations, but you believe it's justified. Thanks a lot for joining in. We'll try to quiz you a little bit further. Maybe the next month or so, we re-invite you on the show and quiz you about how business is going on in the fourth quarter. For the time being, we'll slip into a short break. On the other side, we'll be joined by Shilpa Raut of Prabhudas Hiradar, who will be here to discuss the market technicals.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
A flying car that will begin mass production in 2026. No issue of parking or where to take it off from, but you need to have $300,000 in your pocket. Xpeng Aero HT. The aerospace company under Chinese EV startup Xpeng unveiled at CES 2025 its modular flying car, the Landcraft Carrier as well. Essentially an electric minivan with a small folding eVTOL electric vertical takeoff and landing vehicle, which is right behind me over here, which can be rolled out and tucked in the back of this particular truck. The price of it $300,000 and it will be yours. There are already 3,000 intent orders for the vehicle. Rather than requiring an expensive hangar, in fact, Aero HT's invention would allow you to simply drive the eVTOL to a takeoff location and a landing site and deliver a single command to detach it and unfold this small aircraft and then take off. Once you have had fun in the skies precisely for 20 minutes, the mothership reconnects to the eVTOL, folding its arms and storing it at the back of the truck. So how does the mothership look like? Almost like the Tesla truck. It's a 6-wheel vehicle. It's got a floating roof, dark wheel arches and foldable rear view mirrors that retract into, in fact, fenders when parked. And even with this eVTOL inside that particular truck, there is still room for 4 passengers, which is an entire family. Now, this particular eVTOL is made of super lightweight materials. It's made of carbon fiber and has dual duct 6-rotor design. Can be easily controlled to take off and land. I, in fact, sat inside the vehicle and it's very, very cool. It has room for 2 people.
Singapore has retained the top spot as the world's most powerful passport. According to the Henley Passport Index, holders of the Singapore passports enjoy visa-free access to 195 countries out of 200.
Welcome back. The market's actually, picked up pace since the time we started the show. The Nifty is now hovering around the 23,200 mark. The mid-cap index is where the action is. The mid-cap index has moved to the high point of trade with a gain of almost 1.8%. This obviously after a 4% fall yesterday, but this would give some respite. What are the stocks that are gaining right now? We have all the Adani group. In fact, I'd request the director to pull up the entire Adani pack. Adani Ent is up nearly 8%. Adani Ports up nearly 5%. All the other group stocks as well seeing a big up move. On the other hand, the stock which is actually seeing a down move is the one which is at the bottom of your screen, which is United Spirits, down nearly 5% on account of the leadership uncertainty as Hina Nagarajan decides to take another role in the group itself and step down as the MD and CEO of the India business. But let's welcome Shilpa Raut of Prabhudas Leeladhar for a quick technical check on the market. Shilpa, we've seen a bounce after a big fall. Do you think this bounce should be used to short the market, or maybe this bounce could perhaps lead to further building on the gains after the big fall that we've seen?
Good morning, Nigel and Manglam, and thank you for having me on the show. Talking about today's move, it was on expected lines. We saw a massive fall yesterday, and this 23,200 to 23,000 zones, we had a cluster of support, which we are expecting that it should hold. Otherwise, a fall will further accelerate, and the levels of 21,900 can come in as well. So for time being, this 23,000 zone should hold, and from here, if we move past 23,500 and give a closing above that, we'll definitely see levels of 20,850 to 24,000 also coming in very soon. But too soon to say today. For now, the gains are intact. In fact, the selling pressure in the morning is well absorbed, and we are seeing some sort of very strong pullback. So this should lead towards 23,500 from here. Talking about Bank Nifty also on expected lines. 48,000 has been a very crucial support that we have spoken about a lot many times. So that is well respected and it is holding. But the resistance is also placed at around this 48,900 to 49,000 zones. So once we move surpass this, and then the levels of 49,500 can be expected.
Okay, all right. You're sounding a little bit optimistic, Shilpa, today. So let's see whether or not the bulls can fight back. But individual stocks, what do you have on your radar?
I have 2 buys, Nigel. The first one would be a buy in PFC. PFC is holding on very strong, and the level of 400 is above now, holding on. So this is very crucial for the stock to sustain and move towards 440 to 450 zones. So as long as we are holding above 400, there is a very high chance that the stock will rally further and test levels of 440. So stop loss would be 398 for PFC. The other one would be a buy in IGL. IGL is also looking very good right now. This 402 should be your support as of now, and you can look for targets of 430 to 445.
All right, and the other stocks that you have on your list?
I am looking at LICI. The stock has now taken some sort of support at around 800. If we are not breaching 800, you can definitely look for targets of 835 to 840. But this is a conditional, buy would be if we move above 820, then look for targets of 835.
All right, we take that point. Thank you so much, Shilpa, for joining in. LIC is now picking pace as well, currently up around 1% off the lows as well. With that, we'll get you another idea for profit. This one comes in from our colleagues at Money Control Pro. Jitendra Gupta joins in with the stock that he's been tracking. Jitendra.
Hi, thanks. Today we are going to cover KEC International, a leading EPC player in power T&D, which is showing strong business performance with significant order inflows. Till about second quarter of the current fiscal, the company secured close to 16,000 crore orders, reflecting close to 60% year-on-year growth. This growth is expected to continue, driven by the recovery in T&D expenditure. Of course, the government is doing more capex. Moreover, the business is improving. In Q2 FY25, KEC reported a solid 14% year-on-year growth in revenue. The T&D segment stood out with almost 28% year-on-year growth in revenue, driven by higher execution. We believe second half should be better. KEC's order book stands at around 43,000 crore, which is 2.5 times its annual revenue, provides a very strong earning visibility. Domestic T&D business is projected to witness 30 to 40% growth in second half, contributing to overall 20% growth in T&D revenue on a full year basis. Margins improvement initiatives such as integrated conductor manufacturing facility and selecting high margin biddings further support overall profitability of the company. Its stock is trading at 18 times its FY27 estimated earnings, which is considered to be good, considering the fact that the growth trajectory is good and margins are improving on an overall basis.
All right, with that, we'll introduce Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on November 9th, where they shared valuable strategies. Here's a snippet of what Aditya Pachwaria, who's the co-founder of Fintoric Capital, had to say about the risks of trading penny options. Let's listen in.
पेनी ऑप्शंस का जो प्रोबेबिलिटी होता है जीतने का वो बहुत ज़्यादा होता है, 99% से ज़्यादा प्रोबेबिलिटी होता है उसके जीतने का. बट इसके साथ उसके इतने सारे नेगेटिव्स आते हैं कि उसमें जो सबसे पहला है कि उसका रिवॉर्ड बहुत कम है. आपको मिल सिर्फ 1 रुपये रहा है. अगर आप यही काम 100 रुपये वाला ऑप्शन बेच के करोगे और फिर वहाँ पे आप रखते हो कि मैं 10 रुपये का टारगेट रखता हूँ, तो वहाँ आपका विन रेशियो भले ही कम हो जाता है बट आपका साइज 10x है. दूसरा कि अगर आप पेनी ऑप्शंस देखो, आप कहते हो कि मैं तो 1 रुपये के 2 रुपये में ही काट देता हूँ, तो अगर आप उस ऑप्शन को देखोगे उसका नेचर भी थोड़ा सा डिफरेंट होता है. तो जैसे 1 रुपये का ऑप्शन है, मार्केट ऊपर जा रहा है, आपने पुट राइट करी है, मार्केट ऊपर जा रहा है, वो फिर भी वो 2 रुपये हो जाएगा. अननेसेसरी हो सकता है कोई ऊपर जा रहा हो तो कोई उस हेजेस को खरीद रहा हो तो आपका वहाँ पे एसएल हो जाएगा. तो जब आप उसको 1:2 देखते हो, उसकी जो प्रोबेबिलिटी है 1:2 होने की वो बहुत ज़्यादा है कंपेयर टू 100 रुपये का ऑप्शन बेचते हो उसके 200 रुपये की होने की. तो इस तरह से आपका वहाँ पे जो प्रोबेबिलिटी ऑफ विन है वो भी कम हो जाता है.
Nations around the world. In second position is the Japanese passport, which can open the doors to 193 destinations. Japan has moved up after it regained visa-free access to neighboring China for the first time since the COVID-19 lockdown. The EU member states of France, Germany, Italy and Spain are at number 3 along with Finland and South Korea, with access to 192 destinations with no prior visa needed. So what about India? Well, India has dropped 5 places to be ranked at 85 over the nearly 2 decades. India's ranking has experienced notable fluctuations. It reached its highest rank of 71 in 2006 and has seen several years of decline, particularly between 2015 and 2021. Last year, India moved up to the 80th rank, but it has fallen back down to 85 in 2025. Noticeably, absent from the top 5 is the US passport, which now sits in the 9th position, a significant drop from its traditional first and second ranking from a decade ago. In contrast, China has actually risen from a lowly 94th in 2015 to 60th in 2025, largely after removing several pandemic restrictions. Now to the least powerful passports. Pakistan, Yemen, Iraq, Syria and Afghanistan are at the bottom of these rankings. And in terms of openness to other nations, Singapore allows visa-free entry to citizens from 164 countries. Pakistan allows visa-free access to 64 nations. China extends the same courtesy to 58 nations, but India allows visa-free access to just 5 countries. That's Bhutan, Nepal, Maldives, Mauritius and Seychelles.
Well, it's actually a good start to the trading session. We're up 120 points on the Nifty. The one that's going bazooka move today is actually the Nifty Bank. That's making a higher low and a higher high. And that's something we have not seen in the last 7 to around 8 trading sessions. So on that note, we'll wrap up on this edition of Chartbusters. You don't go anywhere. Trading Hour comes up next.
At the Consumer Electronics Show, I found out an espresso-like cocktail-making machine. To tell us more about this, I'm joined in by Ryan Close, who's the founder and CEO of Badminton. Tell us more. How does this machine work?
Yeah, so this is the Bartesian. It allows anyone to have a fantastic cocktail in the comfort of their own home by allowing them to load their own alcohol in here. So it's very clearly marked. Vodka goes in vodka, whiskey, whiskey. So you simply take these bottles out, you fill them with your favorite spirit, and you pop them in. And then the machine itself, you have a water source at the back.
Sure.
And then the cocktails all come in these capsules.
Okay.
And they're recyclable cups.
Okay.
And there's no artificial colors or flavors. and they contain all the bitters, liqueurs, and juices you need to make a perfect cocktail.
So how many cocktails or how many alcohol varieties of alcohols can you load in this particular machine? So I can have whiskey with vodka. How does it work?
Right, so right now it's 4. There's 4 reservoirs, so you add 4 spirits, right? It's whiskey, tequila, rum, and vodka. So you load those 4, and that'll make you over 100 cocktails, no problem.
Yeah.
And then you can swap out gin and rum, so it actually comes with a 5th reservoir. So
Sure.
if you want.
Good morning. Welcome to Trading Hour. It's a much better Tuesday morning as the Nifty scaled above 23,200. The Sensex is inching towards a 400-point gain. Banks are higher. The Nifty Bank almost up 700 points. And we're managing green on the screen despite the weakness seen in IT. So after many days, 4 days of a crunching blow, particularly yesterday's big rout, markets have bounced back today.
Absolutely. Markets have bounced back today, and the bounce back is also coming in the broader markets, right? We're seeing the Nifty mid and the small cap also managing to hold on to good gains. You can see it on the screen above us as well. So yes, good gains at what we're seeing coming in for the benchmark indices as well as in terms of the broader markets. Now, in terms of some of these individual moves that we should see in terms of sector-wise, we're seeing Nifty Metal, that's managing to hold on to very strong gains. Among the top sectoral gainer, PSU Banks also managing to see a good up move in trade today, 3% uptick there as well. And energy media among the top gainers along with auto. Now, what's not doing well, like Rima was mentioning, we had seen Nifty IT that's under pressure as well. HCL Tech that reported the numbers. So Rima will take us through what was there in terms of numbers, but HCL Tech under pressure today, and that's also causing a bit of a subduedness for the market. And FMCG, that's the one, Rima, that is also in the red today. But IT is the name of the game today. Everything is on that.
Indeed. So HCL Tech steals the spotlight. This is the biggest single-day fall that we've seen in HCL Tech in the last 10 years. And the reason is it went into its earnings with a lot of optimism and strength. Look at the investor positioning in HCL Tech going into numbers. Last year, HCL Tech was up 30%, outperforming the Nifty IT index, which was up 23%, and outperformed larger peers like TCS. HCL Tech's PE re-rated by 20% despite marginal EPS downgrades. And by the end of it, EPS was trading at a premium to Infi and TCS at about 27, 28 times. So it went into the earnings with a lot of optimism, and the numbers failed to excite. In fact, on the top line, there was a little bit of a miss. The company's revenue growth of 3.8%, missed street expectations of 4.1%. So a bit subdued there. Margins expanded to 19.5%, but in line with expectations. Again, no beat coming through there. So, even if you look at the company's guidance, there is some disappointment that the company didn't raise the middle or upper end of the guided band. All they did is raise the lower end, which means the implied guidance for Q4 revenue guidance is minus 1.3 to 0.6%. Again, it's not that growth is rebounding, and even margins in Q4 will be slightly lower than margins in Q3, and the company has lesser exposure to BFSI versus peers, which is where we've seen the maximum recovery in discretionary spending. All these are factors, right? Given the positioning, there was nothing in the numbers to excite the street. Kotak says the stock trades at full valuations. They've lowered their revenue growth forecast by 1 to 4%. They've got a reduced rating on the stock, but other brokerages like CLSA, Morgan Stanley are also, they all have an equal weight kind of a rating. Nomura is the one with a buy rating with a target price of 2,000 rupees. In fact, I had a chat with the management of HCL Tech and asked them that why didn't they go ahead and raise the upper end of the company's revenue guidance or the middle end, what they expect for Q4 and margins. Listen in to what they had to say.
I think our momentum across all the verticals is continuing to pick up. And there will be some impact because of a large program coming to an end in the retail CPG segment, where we had a 14% sequential growth last quarter. Now, to backfill that project with new projects, it will take some time because some of the deal wins have happened towards the end of the December quarter. So that pickup will happen towards the second half of the March quarter, and that will continue into the Q1 of next year. I think the way you should interpret this is, every vertical has some dynamics that plays into every quarter, but is the new additions adequate enough to kind of offset some of those reductions is what we should see. We are quite positive of an all-round growth in Q4.
Impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
Okay, let's invite Sandeep Agarwal, fund manager, Sovilo Investment Managers on the show. Sandeep, numbers were not exciting, but a 10% fall in the stock price, is that a bit excessive? How would you read the reaction?
Good morning and thanks for this opportunity. As you know that, markets always discount the future, and if, as you rightly mentioned, the future looks little weak for HCL Tech because one large program is coming to an end and the implied guidance implies negative. And let me tell you, this when these large programs come down, it doesn't impact only one quarter, sometimes even 2 quarters. And on top of that, this stock has massively outperformed in last few months. And not only this, even many tech stocks have outperformed in a very big way. So this was bound to happen. We have been saying on every media interaction in last 2 months that all positives which can happen in the sector are priced in, but whatever negative can happen, that is not at all priced in. So I think still that, except for ER&D, which could be a structural play, and you may see time correction even there for 2 years, all other IT services companies are very expensive right now, particularly because this is a mature sector where more than 7-8% growth on a structural basis is difficult. And with some margin improvement, you can see 11-12% kind of PAT growth, also aided by buyback of shares. So it is a very stable structural sector where PEG ratios would be high, what you assign, but then beyond a point, this sector is not a very high growth sector. You can assign very high multiples. So always priced to perfection.
So you're saying the IT services companies, large cap especially, are priced to perfection, valuations are rich, and growth for these companies will be in mid to high single digits, not a double digit kind of a growth?
See, the smaller companies can have double digit growth, low double digit or mid teens kind of growth, but the large companies on a long term basis cannot have more than mid to high single digit growth. There will be, and it is very simple sector because the budgets are decided globally, everything is on there, so there is nothing to even much analyze. So for example, during COVID, what happened? 1 year there was no growth because of whatever happened, and then next year there was double the growth. So it covered the previous growth also, and people started extrapolating on that growth. So I think that is a challenge. So this sector structurally is a 6-7% global IT outsourcing growth. We gain some market share, we do 8-9, and our companies can do 1% more. So it cannot be more than that growth, and some improvement on utilization, some metrics, refinement, some operating efficiencies, you can see 12-13%. But more than that, PAT growth is not possible. And for that, you should not breach 25-30 times multiple at all, even if they distribute a lot of cash. So whenever that happens, then the stocks come down. And whenever the multiples go below 18 times, 1 year forward, the stocks recover very sharply in a short span of time.
Okay, Sandeep, what's the expectation specifically in mid-cap ITs? Where do you think the outperformance will come in from?
See, in mid-cap, the advantage is that, they don't have a backlog of a very huge base. So for them, every small deal or a small deal can make a big difference. And within the mid-cap, there are two kinds of players. One is ER&D, where, growth will be 2.5 times of IT services growth for next 10 years. So where, you can assign a very high multiple of 35-40 times also. And in 2 years, you will see that multiple becomes reasonable. So you have to invest at right time. There is another sector, which is IT services within the mid cap, where growth will be better than the large cap. So they can do 13, 14, 15% growth and maybe PAT growth of 18, 20% because there are a lot of inefficiencies which could be covered. But there again, if the PE multiple is more than 35 times, it is very difficult to justify. So I will suggest that, we have to be very cautious of valuation in this sector. That is the only thing which keeps volatility in the stocks. Otherwise, this is a very straightforward sector. Everything is reported. You can make out everything. The only asset in this industry is manpower. So if you track the attrition right, I think you don't need any advice. Also, it is so simple. The attrition is always a precursor to what is going to happen. For example, in this quarter, I am seeing some trend of attrition going up. That means growth will be good again in next 3-4 quarters. But at the same time, the stocks have moved up much faster than that. So price correction or some correction because of valuation could be there. Revenue numbers will not disappoint next 3-4 quarters, and margins will also not disappoint.
So what's the appropriate valuation? You're saying valuations are expensive right now, given the kind of growth, the mature growth we expect from the IT companies. So what would be the right valuation to ascribe to CA TCS, Infy, HCL Tech?
So between 20 times to 30 times 1 year forward is, I think, a right valuation, depending on the company, depending on their cash distribution. And for the mid cap, which are growing faster, again, similar multiple 20 to 30 times range. And for ER&D, you can go up to 35 times because that industry will do much better than the IT services in long run. So that is the value.
But HCL Tech has now gotten a bit derated after today's fall. So is it attractive now, or does it need to fall a little bit more before valuations are comfortable?
So Rima, I will give you one data. HCL Tech, and I am no more an analyst, so pardon me, and I run a PMS, so I can't speak on a particular stock. But let me tell you, it is one of the best performing stock in last decade. If you see the data, they have given phenomenal returns. So these are good opportunities. I am not saying 1800 is a good opportunity or not, but in long run, these companies are decent. They will give you returns. So you have to buy right at the right price. So if you buy them at a very expensive valuation, then obviously you will go through the pain.
But IT is also seen as a bit of a macro trade. Defensive when domestic earnings are slowing down. There is the rupee tailwind. So how do you marry high valuations, moderate growth with this macro trade?
So Rima, the challenge is that, we always give a lot of credit to rupee depreciation, but if you see practically all the companies are hedged, right? So you don't get, and we have done this analysis a lot in the past, the benefit of rupee depreciation is very minuscule to the actual earnings of the company. Yeah, it gives some benefit on the INR growth, which no one actually tracks. So I think that is little overhyped. And now second thing is that we are dependent on global macros. So global macros are looking okay. Let's say Trump coming in, corporate tax cut will lead to revised discretionary spend and all that. My challenge is that, everything positive what can happen is already built in the sector. But Trump being Trump, you never know how he can increase the cost of doing business. And that is not at all priced in the sector today. So I am little worried on that front. So my view is that we should always be very cognizant of what we are paying for what. And to me, it looks like we are paying little too much than what we will be getting in next 12 months.
So what are you recommending to your PMS clients in IT then? Or is IT generally not a part of the portfolio?
I will not say that it is not a part of portfolio. We have very selected mid caps which are there. We do very bottom up work on that front. So whatever is reasonably priced and we see a 5-7 year opportunity, we buy those names. Right now, IT is not a blanket buy like it was last year. So last year, October, November, when most of the large companies have withdrawn their offer letter from the campus, they have postponed the bonuses, hikes. I think that was the bottom, and that is the time we were all in and very, very bullish on the IT. Now we are not in that situation.
So the overall tech exposure in your portfolio has come down? If yes, from what levels to what?
It has almost reduced by 50-60%.
50-60%. Okay. Thank you very much, Sandeep, for joining in. Sandeep, truly, like a year and a half back, he was so bullish across the board in IT, and now he's turned a bit cautious. And the tech
That's why the reduction in, I think, the 50-60% reduction from the portfolio he was holding and coverage for the IT side.
Indeed. We'll slip into a very short break on that note. We'll come back and discuss commodities. Manisha Gupta joins in on the other side.
But in the cocktails, we have, again, over 65 different cocktails. And again, customers don't always want, they don't have pineapple juice. They don't have liqueurs or bitters at home. So with Bartesian, you don't have to have all these ingredients on ready. They're all inside these capsules.
So that's what the pods do. Like, for example, if you want to have a blackberry margarita, all you need to do is just load a tequila on the side and just insert the pod, and you get the flavor of the blackberry along with that.
Well, that's it. I mean, the best way to show you is just by making a cocktail. So there's a barcode on each cocktail, right? And so that's going to tell the Bartesian what alcohol to pull. And what's even cooler is when you put it in, it'll tell you what glass to put underneath. So in this case, a lowball glass with ice. And then you hit next, and you can select your strength. So you can customize whether you want a mocktail, light, regular, or strong. And you just twist this to pick the version that you want. And then you hit mix. And so what it's going to do, and I don't know if the camera can see it, but it's going to pull the tequila in this case.
Sure.
Again, the unit knows that you put in a margarita and it needs tequila.
Okay, I'm going to try this one out soon, but before that, how much does this machine cost?
This is $369.
$369, available in which all markets?
It's in the U.S. market, and the UK, Germany, Italy, France, and Australia.
Perfect. And how much do the pods cost?
They're $19.99 for an 8-pack, so about $2.50 per capsule.
As good as like an espresso machine,
Well,
right?
that's right, and I mean, saves you $18 from a cocktail going out to a lounge. These are lounge quality cocktails in your home.
Thank you so much, Ryan. Thanks for sharing all of these things with us. Thanks for joining us today on CNBC-TV18.
My pleasure. Thank you.
Welcome back to Trading Hour on CNBC-TV18, and let's shift focus to what's happening in the world of commodities, where Manisha joining in with us to talk to us about the focus coming in on the metal space and metal commodities specifically.
Good day for metals, even as the dollar index is trading very close to its 2-year highs. We are looking at the U.S. Fed proceeding with caution when it comes to interest rate cuts for 2025. The China economic stimulus package, the expectations of that has been supportive. So has been the fact that the December export-import numbers from China have been better than what the street was anticipating. So when you look at the copper prices, we are trading at a 2-month highs onto this one. The Chinese imports for unwrought copper and products has surged by 18% on a month-on-month basis. That has been supportive. And apart from that, the Chinese have been buying a lot of copper. So when you look at the Chinese premium, that is at $73 a ton. That was the recorded one in the first week of January itself. And then it's not just about copper. You have aluminum, which is also trading at a 4-week highs. Zinc prices are trading at a 3-week highs. Iron ore prices at a 1-week highs as well. This is because the inventories have slightly declined in last couple of weeks. But the street will watch out for the U.S. inflation numbers, weekly jobless claims, and the retail data from U.S. All of that numbers is coming in this week, and that would give you further cues going forward.
Manisha, thank you very much for that. Let's introduce then a growth code, a special initiative by Grow on CNBC-TV18, where the aim is to empower investors and traders. So prominent investors and professional traders gathered at Grow's Trading Right event on the 9th of November to share their valuable insights and strategies. Here's a snippet of what pro trader Aditya Pachvaria, the co-founder of Fintori Capital, had to say about limiting your risks while trading. Listen in.
मेरा पर्सनल रिकमेंडेशन रहता है कि आप अपना ग्रॉस एक्सपोजर लिमिट कर दो. इन अदर वर्ड्स आप अपना लेवरेज लिमिट कर दो. इंस्टेड ऑफ आप हेज लेने के बजाय अपना लॉट साइज को आप आधा, मतलब 3,25,000 पे एक लॉट चलाओ आप, इंस्टेड ऑफ 75,000 पे एक लॉट चलाने के बजाय. और जैसे जैसे आपका लॉस आ जाए, आपका 5% लॉस हुआ तो उसके बाद आप 3,25,000 के बाद आप 2.5 लाख पे आ जाओ, आप 2 लाख पे आ जाओ, और 5% और लॉस हुआ. इस तरह से आप धीरे धीरे अपना एक्सपोजर बढ़ाते जाओ, क्योंकि अल्टीमेटली मार्केट जब ऊपर जाएगा आप इकट्ठा रिटर्न पूरा सबका निकाल दोगे उनसे भी. प्लस आपको म्यूचुअल फंड्स, एफडीआर का रिटर्न आ भी रहा है, तो आप 6% अगर एफडीज में भी इन्वेस्ट करते हो, फिर ये ऑप्शंस करते हो, तो आप अपना वैसे ही 7-8% तक का तो ड्रॉ आप ऐसे ही ले सकते हो, तो भी आप अपना साल के एंड में 0 पे ही छूटोगे.
Welcome back to Trading Hour on CNBC-TV18. Markets managing to hold on to the gain. Nifty holding on to 23,200 levels. Let's also bring on board Mitesh Thakkar, who's joining with us to give us a quick view on the markets on the technical front. Mitesh, good morning and thank you so much for joining in with us. What is the psychological mark that now the Nifty will have to hold on to continue this up move? 23,200 is what it's managing to hold on to right now. But what is it that by the end of the day, the level that we should be keeping an eye out on?
So I think the level which I'm watching closely is not one which needs to hold on to, what one which the index needs to cross above is 23,325 to about 23,350. See, in the November fall, we had a bottom over there at 23,350 was the lowest closing. And then yesterday, as we broke below it, there was a gap down. So there's a gap as well as a previous swing pivot. I think a good reversal will be signaled only when we see a move beyond 23,350. Till then, it's just a mild pullback. Though in the morning, I did suggest a bullish case and suggested that we might actually try and test 23,320, 350 zones. But only once we cross that, we'll be in the knowledge that at least a temporary bottom has been made.
Another 100-point upside from these levels is possible on the Nifty, but you won't play it by taking a long position in the index.
We have, Rima, good morning. We have some long positions, we've taken some bullish call spreads because, we are bouncing back from extremely oversold levels, but I intend to book it around 23,300, 320 zones and only, get into bullish position again about 23,350.
And what about stocks?
So I think Adani Group stocks are in focus today. Adani Group, Adani Green is something which is interesting me. It made a low of around 890 in November, and then again yesterday the low was around 885, 890. So it's kind of a double bottom formation which might happen. I would recommend buying this one or slowly accumulate around 1,000 to about 985 zones. Keep a stop at 969 and look for a target of 1,060 to begin with. The other stock which I like is something which I have recommended earlier as well, Bajaj Finserv. For people who want to enter afresh, wait for the stock to clear 1715 in cash. It's about 1705, 1707 right now. So another 10 rupees higher. Buy then with a stop below 1700 and look for a 1760 kind of a target.
Okay. Mitesh, anything you specifically checked today? We have PFC, REC also. Both these are also in focus, some bit of a volume that we're seeing. So, would you be looking at this? Anything interesting here?
So, disclaimer, I own PFC in my portfolio. In fact, I bought it yesterday. So, again, the idea was that extremely oversold, fundamentally a good company. The bounce back target which I have for PFC is around 435 to begin with, 435, 440. And above that, I look at a bigger reversal. And REC, if you look at the charts, I think, again, a similar kind of a setup. Both the stocks, in fact, move in a very common manner. So, REC, the first target on the upside is around 490. And once you clear that, then I would look at 535, 540.
Okay, thank you very much for that. Let's get to JSW Energy. This is after it wins a bid to acquire KSK Mahanadi Power Plant. Sudarshan is here with the details.
So JSW Energy is in focus, and you can see the stock is higher, currently up more than 6%, and it has announced that company has acquired KSK Mahanadi Power under corporate insolvency resolution process, and the bid amount of the company for KSK Mahanadi was around 16,000 crore. Basically, it was 15,985 crore, and completion of this deal would be subject to regulatory approvals, and 2 approvals that would be required out of NCLT and CCI. So why is it positive for JSW Energy? First, currently KSK Mahanadi owns 3.6 gigawatt, or say 3,600 megawatt thermal power plant in Chhattisgarh, of which 1800 megawatt power plant are already operational, and second 1800 megawatt is under construction. Now, post this deal, JSW's thermal generation capacity will increase to 7.5 gigawatt, and company believes this deal will help company achieve target of 20 gigawatt total generation capacity, and that would be much before company's target of 2030. Now, apart from JSW Energy, this deal would be positive for 2 other companies, and those are PFC and REC. Why? So, PFC and REC are amongst major creditors to KSK Mahanadi Power. Now, total that KSK Mahanadi Power owed to creditors, including financial creditors, were of around 32,243 crore. That was before August. in August, company distributed the amount after NCLT order, and the distributed amount was around 6,240 crore. And after the distribution, total balance outstanding is of 26,000 crore, and of which PFC's amount is considered of rupees 3,400 crore and RDC is of 2,700 crore. So investors are assuming that once the deal is completed, both PFC and RDC will be getting amount from KSK Mahanadi Power's acquisition by JSW Energy, and that's the reason you can see big move in all the three stocks, JSW Energy, PFC and RDC.
Okay. That is why we are seeing focus on all these three stocks, JSW Energy, PFC and REC. But Sudarshan, you're tracking one more stock, MGL, that's also in focus today, and this is on the back of a brokerage note. Tell us more on this one.
That's correct. MGL is higher today because MS has come out with a note. It has initiated coverage with an overweight call, and target is rupees 1,606 per share, implying an upside of nearly 25% from current levels. What does MS say? It says Mumbai is an ever-expanding city with rising travel and energy needs, with natural gas being Mumbai's fuel of nature. It goes on saying that it is both MGL and Mumbai's Tesla-like moment for gas adoption. Also, MGL has fifth of its gas sourcing linked to LNG, which will put pressure on margin, but volume for MGL is expected to be structurally higher going forward, and that, as per Morgan Stanley, is going to be the key for re-rating of MGL stock in coming days, and that's the reason it has initiated coverage with an overweight call.
Thank you very much for that. Let's get to United Spirits. That's in focus after the company has announced a management change. Delta Corp also on our radar. Weak Q3 numbers here. Mangalam is here with the details.
Well, if you look at United Spirits, another day where in the FMCG space there has been a surprising exit from the leadership. This time around, Hina Nagarajan has decided to step down as the MD and CEO of United Spirits from 31st March 2025, and that's largely because she will be taking on another role in Diageo itself. My senses would be a lot more global than Indian itself. And as a result of which, the management has announced the replacement as well. And we'll have Praveen Someshwar, who is currently the MD and CEO of HT Media. He's been there for the last 5 years, who takes over with effect as MD and CEO from April 1 itself. That's the next financial year. And before HT Media, he was with PepsiCo for about 24 years. So, well, in MNCs, there are these leadership changes that happen, but typically the transition is what causes the uncertainty, and as a result of which the stock is lower in today's trading session. Mind you, the last 4 years under Hina Nagarajan's leadership were very strong for the company. The stock also rallied nearly 3.5 times in her tenure as MD and CEO. On the other hand, Delta Corp, remember the third quarter typically very strong for travelers going to Goa, for the casino and the kind of businesses that these companies are in. And the street was expecting a decent set of numbers, but the company actually went ahead and reported a 7.5% decline in their overall revenues, and that's actually led to a bigger decline in the operational performance because of operating leverage. So the stock, is lower in today's trading session after the EBITDA declined by 42% and margins compressed by over 1,000 basis points. Across both their segments, casino as well as online, there was an operational dent. In the casino business, they actually saw a revenue decline of about 3.5% as well. Remember, Delta Corp has been under pressure ever since the GST change of 28% tax on the face value of all the bets came about for casinos and online gaming itself.
Thank you so much for that, Mangalam. Keep an eye out on both these stocks. But time for a very short break. But counting down to the budget 2025, India is looking to seize the moment and establish itself as a global economic outlier. The upcoming budget, which will be the NDA government's first full budget after the election victory, will be key to unlocking the ambitions of millions of Indians. So tell us what you want from Budget 2025 by submitting your wish list to CNBC-TV18's budget box. And tune in to your budget headquarters, CNBC-TV18, for unparalleled insights and coverage on Budget Day, this 1st of February.
2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways. The highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the
Welcome back. There is a recovery underway. The mid-cap index is up more than 2%, so things are looking strong, and we managed to hold on to that, pullback. Ajit Banerjee, Chief Investment Officer at Shriram Life Insurance, is now with us to talk markets and the way forward. Ajit, thank you very much for joining in. There is one view in the market that this slowdown that we're seeing, domestic slowdown, is going to be a little more prolonged, and therefore we're in for a period of weak earnings growth compared to at least consensus expectations. Now, you're penciling in a 9 to 10% earnings growth for FY25 and 11 to 12% CAGR over the next 3 years. Does that seem a little excessive, or do you expect domestic economy to bounce back in the subsequent quarters?
Okay. First of all, first things first, thanks for having me on the show. And
thank you for joining.
Wish you and your viewers a very happy Makar Sankranti. See, at this point of time, we have been used to seeing, a quantum leap as far as our GDP growth is concerned, and that was quite, I would say, supported by high amount of, government support in terms of capex as well as pent-up demand from the consumption side, both of which at this point of time are lagging a bit. Now, of course, the bigger question is government also is to what extent they would like to set its eye on setting the fiscal in order, what it has already taken a target, or go into a fiscally expansionary mode. That's something what we need to see. So, and at the same time, to add to that, how post January 20th, once Trump version 2 comes into power, how, the way things, he has been, giving one news and shockers to the world. So everybody is quite, I would say, skeptical about how things will unfold once he comes into power. So, many uncertainties are there. Some might turn out to be a tailwind for us, for the economy, and some might turn out to be a headwind as well. Now, since internally also, the urban consumption has slowed down a bit. So naturally, and at the same time, we are not, seeing a good amount of, tailwinds in terms of the cost, cost and the margin from the, entities perspective. As a result of which, we expect that going forward, at least for next couple of years, there would be a bit of a, lower double-digit, growth, which is going to come in terms of the, earnings for next couple of years at least. That's what is our in-house view.
Okay, double-digit growth for the next couple of years is what you are highlighting. One point I want to also understand. Okay, you did highlight, Trump coming in and that uncertainty is there, but US rate hikes, that's also there. We're seeing a stronger dollar right now, as well as, trade policy, those continue to be the headwinds. So what is it that maybe could work out for the Indian equities? Possibly, what are the triggers that maybe we could see this growth going forward?
So, one thing which can benefit us, because we also have a good amount of export in terms of IT, pharma, as well as in the service sectors also we are doing pretty well. I guess if the US economy recovers at the same time, I mean, if there is a expansion happening in terms of mood looks to be pretty high at this moment. So therefore, we can expect, a higher amount of order flows from the US for the, pharma in any case is doing well, as well as IT, and also India can also benefit from if the curbs what are being on and the tariffs which are being threatened at this point of time, and I'm using the word threatened because we need to see that what comes out finally. If on China and Mexico, Canada comes in, so as an alternate sourcing partner, India might actually be benefited out of it. So far we have seen that with the earlier dispensation of Trump as well as Indian government was pretty good. So if India can further cement the ties as well as then we can benefit out of it. So at this point of time, engineering goods as well as IT, pharma are already at an advantageous position, which we can see at this point of time. Now we have to build up, therefore, that what are the other gaps which are there as far as manufacturing is concerned, on which the electronics also, on which the reliability on China might come down or will be possibly deliberately brought down, and there India can fill in the gap.
Sure. So IT and pharma is what you're highlighting. In IT and pharma also, would it be more mid-cap ITs or large-cap IT companies that you would look at? And pharma, would you be more towards the CDMO side? Because that's also expected to start doing well in 2025.
See, as far as the large-cap ITs are concerned, they certainly have much more diversified product range. So naturally, they have a larger offerings, so as to say. But at the same time, mid-caps also have an advantage for they are specializing in certain, very specific activities, which can also give them a benefit as well as their cost. In terms of cost benefit, also mid-cap companies are at an advantage position. So we would say that it cannot be so generic in terms of whether it would be large cap and mid cap. Both has its own unique advantage and disadvantage. So we have to see that depending upon what is the nature of the services required or indented by the US. So based on that, either of these can actually get benefited out of it. As far as the pharma is concerned, typically what we are seeing is that if I specifically go for the pharma sector, I think India would do well for the there are advantages in terms of the China Plus One and the Biosecure Act, which is coming into play. These are the things where India can possibly get an advantage, as well as where we can expect that already in the generic drugs and all, because of cost advantage that India has. I think it looks quite positive at this point of time.
Right. Mr. Banerjee, a couple of sectors that you've highlighted that you're a bit cautious on, I think, is FMCG and metal sector. So, what is your word for FMCG? Do you think the subduedness that we're seeing will continue all throughout 2025, or maybe, the second half of calendar year 2025, we could start seeing a recovery?
See, as of now, what we are seeing is that, the mood is pretty subdued as far as the consumption is concerned. We have also seen that in the FMCG sector, there are certain amount of destocking also happening. The companies, when their commentaries have also mentioned that, they are not seeing much, recoveries in terms of the sales are coming. At the same time, there's a cost pressure. Plus, there is a local competition which is happening. As a result of which, the 2025, at least the first 6 months, is certainly going to be a pain, especially in the urban side, while rural recovery seems to be happening. But thereafter, once we get to see that overall, we are expecting that the government also has, through its budget as well as other measures, has left more disposable income in the hands of the in the consumers. At the same time, the economic offtake also has happening. Then the mood will turn positive, and thereafter, so H2 onwards, we can see a bit of a recovery in the FMCG sectors. Is what our views are.
Okay, Mr. Banerjee, thank you so much for joining in with us, giving us your views on the global as well as the domestic market and talking to us about specific sectors that will be in focus as well. So thank you so much for joining in with us. But on that note, we're going to slip into a very short break. But after the break, we'll tell you what the banking sector can expect in Q3 FY25. So don't go anywhere.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
And the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet going into 2025. We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's a big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned.
Welcome back. Let's get you some opinion now. Earlier today, we had a chat with Surendra Goyal and Samiran Chakraborty of Citi to know more about the slowdown in the Indian economy, the state of the market and the weakening rupee. Listen in to what they had to say.
Market upside perspective, we are seeing around, say, 12-13% upside from current levels. That's what our December target for this year is. There have been a bunch of things which have resulted in slowdown in earnings. Right, you look at it sector by sector, there are various reasons. You have seen it in banking, you have seen it in consumption. And I think some of it are driven by more temporary issues. And I think as those things resolve, right, and mention kind of some of the policy measures which will really help there. I think as those issues resolve, we should come back to more the kind of growth rate that we typically get on earnings in India.
While the government has committed on the 4.5% fiscal deficit number for FY26, and we think that commitment will be kept, if for the next 3-4 months we see the capital expenditure pick up to meet the budgeted amount, then that itself could act like a mini stimulus. So to that extent, the bulk of the policy side intervention will have to come from monetary over the medium term, but in the short term, the fiscal can also help. That would probably make the urban consumer recovery. And we are quite confident that the rural drivers are still strong. And that's why probably we get up to about 6.5%, 6.6% GDP growth for next year is what our forecast is right now. We have still our baseline as the February to be the starting point for the rate cut. We think that the inflation numbers are moderating quite nicely. Yesterday's print has been slightly below expectations. January print is probably going to be below 5, maybe something around 4.7. And in second half of the year, we should see inflation trending closer towards the 4% medium-term target that RBI has. So that opens up space for some easing. And also we'll have to see to what extent RBI is taking the liquidity easing measures, which are very much required right now, because that will act as a signal for rate easing in February.
Okay, and let's move on. It's time for our special segment, Quarter Se Quarter Tak, where we bring you earnings expectations from each sector. Today, Abhishek will tell us how Q3 FY25 will be for the banking sector. Over to you, Abhishek.
To begin with, deposit growth on a year-on-year basis was at 9.9% at the end of Q3 FY25 and about 2.6% on a sequential basis. So YOY, the deposit growth is the lowest that you are seeing since March of 2023 as per RBI data. Advances growth was about 11.2% YOY and 3.6% sequentially. So loan growth has outpaced the deposit growth this time around as RBI has brought down the cash reserve ratio requirement for the banking sector in the previous MPC meeting. Hence, you saw the loan growth outpacing deposit growth this time by the end of Q3 FY25. Now, credit deposit ratio for the industry is at all-time high of about 80.5%, reflecting a more aggressive lending stance by the banking sector. Now, this augurs well in a high interest rate scenario for some lenders to maintain their net interest margin at healthy levels if at all they are able to curtail or contain their slippages. Now, net interest margin is expected to remain largely unaffected for most of the large lenders. We may see marginal decline for some of the lenders who have been aggressive on deposit growth, and net interest margin will also get impacted for lenders with higher slippages in Q3 FY25. Now, the net interest income growth over here is expected to be sluggish, particularly for PSU banks. So PSU banks have largely raised deposit rates at high cost while their loan growth is lower than the industry levels. On credit costs, certain sectors, especially those with unsecured lending like personal loans, credit card loans, as well as microfinance, they are expected to face higher credit costs in Q3 FY25. Now, this could be as a result of higher defaults and hence incrementally increased provisioning requirement for Q3 FY25. There is a need for more evidence to confirm whether these higher credit costs are stabilizing or not. Now, with respect to earnings outlook, overall earnings are expected to remain weak for the banking sector, particularly for PSU banks, because largely the treasury gains that they have had in the previous quarter will be missing this time. For some lenders, higher credit costs can impact their earnings momentum as well. Overall, earnings are expected to see weak momentum for the banking sector in Q3 FY25. Now, asset quality, while it may be generally stable for large players, concerns remain around the unsecured lending portfolios, which are expected to see continued deterioration like they did in the previous 2 quarters. X of unsecured loans, asset quality is largely expected to remain under control or see marginal improvement for the banking sector. We have some of the key estimates coming in from Kotak Securities. For SDFC Bank, they estimate NII growth of about 9% YOY, and for PAT, they estimate it to be at 16,591 crore, which is up 1% on a YOY basis. For ICICI Bank, the NII is expected to be up 9% YOY, and profit is expected to be up 14% YOY. For Axis Bank, the NII is expected to grow at 10% YOY, but profit to be up only 3% YOY. For SBI, the NII is expected to be up 6% YOY, and profit is expected to be up 59% YOY, but a decline of 21% nearly on a sequential basis. For Bank of Baroda, Kotak Securities estimates NII growth of 7% YOY, while profits are expected to decline by 13% on a YOY basis. Back to you.
Thank you very much for that. We will slip into a very short break. We'll come back with more on the market. Stay tuned.
We had a record year as far as rupee is concerned. So we asked the question as to will that be a spoil sport into 25 as well. Most of the experts believe that the rupee is going to be ranged between 85 to 87 a dollar, while a small segment expects the currency to appreciate below 85 as well going into 2025. Also, we saw a new RBI governor taking charge, and that the first policy will be in 2025. So we asked the experts what to expect in terms of RBI action. It's a divided house there. 50% believe that the first rate cut from RBI will be in the Q4 of this financial year. However, a small portion believes that the stretch line could be as late as the third quarter of FY26. So that's the RBI action. Indeed, if the RBI has to cut rates, then how much is the rate cut that the street is penciling in? Half of the respondents, which is 50%, believe that the rate cut going into 25 would be at least 50 basis points. So 50 to 75 basis points is what a lot of people are betting on. So that's the rate cut expectation going into 25. In fact, 24 was a very volatile year. We had a budget, we had general elections, multiple state elections, and so on and so on. But 25 could be a year of moderate returns, but the expectation is that the positive returns would continue going into 25 as well. That's the big poll from CNBC-TV18.
Welcome back. A little bit of a moderation seen, at least in the large cap space. The Nifty has dipped below the 23,200 mark. So it's some of the banking names, so an IndusInd Bank or an HDFC Bank, an L&T. These are stocks where we've seen a little bit of a slip in the last 10-15 minutes. Updates coming through from Angel One. Will monitor the impact from new norms for 1-2 quarters before deciding on the price hike. True to label impact should not be more than 2%. Keep tracking the updates that we're getting there. But it's time now to get you the latest on insurance. Sources say that parent entities of large insurers are likely to submit public listing plans with the IRDAI very soon. Yash is here with the details.
Well, Rima, this is quite unprecedented, where the regulator is seeking a roadmap from, of course, parent entities when it comes to listing, public listing of their life insurance subsidiaries. And these are large life insurance subsidiaries and their parent entities. So what we've been given to understand is that some of the large parent entities are expected to file this roadmap for a potential listing of their insurance subsidiary by January 31st, which means the end of current month. Essentially, these parent entities include HDFC Bank, Bajaj Finserv, Tata Capital, SBI, which are expected to submit the roadmap for the insurance subsidiaries. What we've been picking up from our sources is that the regulator, that is IRDAI, last week met some of the chiefs of these parent entities to discuss this potential plan for them to submit the roadmap for the public listing of their insurance subsidiaries. And hence, what has been given from the side of these parent entities to the regulator is that they will submit the plan by the end of this month. What are these parent entities expected to consider while submitting this plan? Of course, that would be in terms of the size of the insurance subsidiary. It would be in terms of certain specific business milestones that they plan to achieve before they go out and list on the exchanges, and also it could be in terms of the time that they've spent in the market itself with respect to their operations. Of course, in terms of the parent entities, HDFC Bank's unlisted insurance subsidiary is HDFC Ergo, SBI is SBI General, Bajaj Finserv has both unlisted entities, Bajaj Allianz Life Insurance and General Insurance, and Tata Capital has its unlisted insurance subsidiary in the form of Tata AIA Life Insurance.
Okay, Yash, thank you so much for giving us those details there. But, with that, we are absolutely out of time on this hour, this session of Trading Hour on CNBC-TV18. Stay tuned in for Half Prime Report up next.
India is in vogue for a number of international brands this season. Rupee Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Rupee Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
Grow on the go with CNBC TV18, now streaming live 24/7 on YouTube. How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your
Stocks gain with mid-caps leading the bounce after the big sell-off on Monday. Utilities and metals are the big gainers, even as IT and FMCG drag.
Rupee recovers a bit in early trade as dollar index falls from Monday's high, but demand for dollars pulls back the Indian currency to fresh lows. India's December CPI inflation comes in lower than expected at 5.2%, but bond yields continue to inch up as the street fears the RBI may skip a rate cut in February.
HCL Tech sees its biggest single-day drop in nearly a decade on profit booking following a big run-up after the quarterly results were mostly in line with expectations, but the company tempers its outlook.
JSW Energy gains on winning the bid under the IBC process to acquire the 3.6 gigawatt Mahanadi Power. This resolution is also a positive for large lenders to the ailing utility, including PFC and REC.
And soon after, Avenue Supermarts announced a change of guard at its helm. United Spirits has also said that its CEO Hina Nagarajan will move to a role at Diageo, with Pepsi veteran Praveen Someshwar set to take charge.
Good afternoon, you're watching us here on Halftime Report. I'm Manglab Malu, with me Hormaz Fatakia. After a big sell-off yesterday, today some respite. The Nifty is holding with gains of almost 102. Still off about 90 points from today's high, but nothing really to worry about. The broader markets, after a brutal fall in yesterday's trading session, the mid-cap index is now sitting with a gain of almost 2%. Still negative for the week, mind you. It's seen a sharp fall of almost 7-8% in this month so far itself. But the bulls would feel happy that there is some respite after the big fall. The banking index is the one which is leading the charge today, as the IT index has taken a backseat after the weak numbers that we've seen from HCL Tech itself. So the Nifty Bank holding with gains of almost 550 points. Hi, good afternoon, Hormas.
Good afternoon, Mangalam. And it's a relief, if you can call it that. You can't say a relief rally, but you can say a relief nonetheless after watching red all across your screens on Monday. And the IT index, as you mentioned, led by HCL Tech, is taking a bit of a backseat in today's session. The broader markets, the mid-cap index has recovered half of what it lost yesterday. It's up 1,000 points now, was down 2,000 yesterday. The small-cap index too, seeing a bit of a rebound for 1.75% higher. So good going for the broader markets as of now. The last Tuesday was when we had seen a bit of a recovery from the lows, and then we saw a bit of a sell-off. So the bulls would be hopeful that there is some recovery that continues. And there you can see the WPI numbers flashing on your screen. The wholesale inflation coming in at 2.37 compared to 1.89 in the month of November. So the December figure at 2.37. Mind you, the retail inflation numbers that were reported yesterday were better than expectations. They were down on a month-on-month basis. The wholesale number though has come in higher on a month-on-month basis. The food inflation continues to remain stagnant. There is no change on a month-on-month basis, still continues to remain around that 8.9% figure. So that will be a key monitorable to watch out for as to what the RBI does next when it comes to its next rating action. Fuel and power inflation now at a negative 3.8 compared to a negative 5.8 on a month-on-month basis as well. So WPI numbers higher on a month-on-month basis.
Higher on a month-on-month basis, led by two things in particular. One is fuel and power, where the deflation has come off a bit, as we've seen that in the kind of spike that we've seen in crude prices as well. And the second part is primary articles. That too, the inflation has come in at 6.02% versus 5.49% in the month of the previous month itself. So we'll keep an eye out on that. And apart from that, we did see the food inflation stay sticky. Aditi Nair joins in. She's the chief economist at ICRA. Aditi, of the CPI that came by yesterday and the WPI that you're seeing right now, what is your sense?
Well, certainly today's WPI numbers have come in a little lower than we were expecting, whereas yesterday it was the reverse. The CPI was a little bit higher than what we had forecast for the month of December. Now, looking ahead, my sense is that the WPI is going to continue to climb, whereas the CPI will hopefully continue to moderate. So the directions will be quite different for these two indices in the near term, and a little bit of kind of trend towards convergence that we would expect between the CPI and the WPI going ahead. Food prices in the current month are quite benign, particularly for vegetables, so that's good news. At least one of the things that has been keeping our CPI inflation very high, that pressure will be coming off. And the Rabi sowing data isn't looking too bad, so that's a positive as well. Big concern, of course, going ahead, particularly for the WPI inflation, maybe a little less so for the CPI inflation, is what happens to the rupee, as all analysts and economists are looking at the kind of movement that we've seen in the last few months, and where the rupee will settle going ahead.
Okay, hi Aditi. The WPI inflation is quite a benign number at 1.89. Even the CNBC-TV18 poll was 2.4%. So it's like lower than the previous year, and it's 2.37. Okay,
2.89 is the previous.
Then it's pretty close to the poll. Okay. That removes at least the fear that there could be deflation in certain areas. That was what I was going to ask Aditi. Okay, that makes it a little different. But do you think going forward there can be a kind of a deflationary bias, given that it is expected that China will, continue to be a deflationary force? They themselves are not growing enough, and they are a huge exporting country ready to undercut any price. So do you expect WPI is going to remain a deflationary force for now and for the rest of 2025?
So Lata, certainly a couple of things that I do believe WPI inflation, even in FY26, for instance, is going to be lower than the CPI inflation. So that will continue from both points of view, that the CPI reflects more of domestic factors, whereas the WPI reflects more of global traded factors. And of course, the fact that the weight of food is much higher in the CPI than in the WPI, and that's been a source of concern for a long time now. Beyond that, I think a couple of factors that will keep us worried about the WPI. One is where crude oil is going to settle with all of the global uncertainty. And secondly, of course, where the INR itself is going to settle. Other commodity prices, definitely your point is very valid that, the China factor is going to be the big driver for all other commodity prices other than crude oil. Of course, demand from China is very important for
my short point is that what is your average expectation of WPI for next year? Have you already calculated that, or do you have a view on whether it will be lower? Because CPI, clearly the RBI's forecast is it's averaging 4.3% next year compared to 4.8% in FY25. What's the delta for WPI, higher, lower?
So we're at around 4.2% for CPI for next year. WPI, highly volatile, but I would expect it to be maybe in the 3 to 3.5% range for next year.
Okay, so that will have a bearing on what kind of a nominal GDP the budget can look at, right? If growth is also going to be sub 6.5 and inflation also is going to be, as weak as you're saying, under 3%, then you can't have a very good nominal GDP when you forecast on February 1st. Is that right?
So 3 to 3.5 for WPI and about
3 to 3.5. Okay.
Yeah.
Okay, so
4.2% for CPI. So the average for inflation would be still between 3.5 and 3.7%.
Okay, then just more a final question for the market. With this WPI already in 2.37, these are the last inflation numbers the Reserve Bank is going to get when it goes to making policy on February 7th. What's the expectation?
Lada, this is becoming really very complicated policy decision in my mind. We've got inflation where things are looking a little bit more comfortable on the CPI side. We've got growth numbers where Q3 was not as bad as Q2. That's what all the high frequencies are telling us. And then we've got an exchange rate where we've seen the kind of movements in the last couple of days, which are a little unsettling. And what is going to be the impact of that on the inflation and on the growth dynamics? And how does each MPC member sort of, what is their balance for inflation and growth and the exchange rate and the overall policy framework? My sense is that we can't rule out a rate cut in February itself, but the probability of that is going down quite rapidly in my mind. We, of course, will also have the budget before the next policy decision, and that will be another big thing for monetary policy to look at before taking the decision.
Okay, so you're saying that it could go either ways?
Yeah.
Okay. All right, we'll leave it at that. The key takeaway from Aditi is that it's going to be a benign WPI. I mean, maybe 3% next year also. Going by the trend, it looks like even that stuff, and especially the geopolitics, is pointing towards lower, several commodity prices. Well, I can understand the ambivalence in terms of what to expect from the governor. The key point that Shaktikanta left us with is that he wants to see CPI aligned to the 4%, which more like I want to see 4% on the table before I cut rates. It's quite possible that the new governor can tweak that and say that I can see 4% 12 months down the line. It takes interest rates that much long to work their way into the market. So I'm comfortable cutting now. That position can very clearly be taken, and a new governor does bring his own narrative. There will also be a new deputy governor. Interviews are going on, and we'll probably get the announcement tomorrow or day after.
And before that, we'll have the union budget as well. So what happens through the fisc is something that will have an impact on what the monetary policy does as well.
Going by the behavior of the government, they're very, very conservative about the fisc. So I don't think that 4.5 is... yesterday's town hall, the key takeaway was no, 4.5 will not be altered. So assuming that is a constant, the chance of whether there will be a cut, all the data is already in place. Inflation, everything is known. So from now to February, you're not going to be any the wiser. It's only the currency which can throw a googly. My sense is that Trump's announcements will be in the first week. We will have relative calm in February. So a rate cut is not to be ruled out at this juncture.
Let's hope for a relative calm in February or March.
Well, to cut or not to cut is the big question. Well, I guess we'll know the answer in February from the new RBI Governor. Lata, thank you for joining in on that segment for the WPI. Time for a short break. Back to the markets on the other side. Stay tuned.
How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21. Only on CNBC-TV18 and CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhat.
Welcome back. Still 100 points higher on the Nifty, 90 points higher. I'd like to bite my tongue and say that this might be an unconvincing bounce because we saw a similar one last Tuesday and we all know what happened after that. But still holding on to gains, and that's the more important thing. Holding on above that 23,150 mark as of now is the Nifty. But the casualty of the day though is HCL Tech after its results, and that 9% fall that you see on the screen is the biggest single day drop that the stock has seen in a decade. And that comes on the back of its third quarter results. Rima is here to give us a highlight from what were the results and what brokerages are saying for HCL Tech. Rima.
Well, you know, what's causing the stock to fall is the positioning that investors went into going into HCL Tech's numbers. Last year, HCL Tech rallied 30%, while its peer, say TCS, was up only about 9%. HCL Tech's PE re-rated by 20%, and by the end of it, HCL Tech was actually trading at a premium to TCS and Infosys. So that's the reason why it went in with very high expectations, and the numbers failed to meet that. So the numbers in Q3 were a miss on the company's top line. The revenue growth was at 3.8%, lower than consensus expectations of 4.1%. Margins were in line, so no beat over there. Q4 guidance, the implied guidance on the top line, because the company has held on to its, given the tweaks to the full year revenue guidance, the Q4 implied guidance is -1.3 to +0.6%. So no acceleration seen in Q4 growth. The company also said that Q4 margins will be slightly lower than Q3 margin. Also remember, the company has a lower exposure to BFS, banking and financial services vertical, which is where we've seen the maximum pickup in discretionary spending. Brokerages, now Kotak has cut the FY25 to FY27 dollar revenue estimates by 1 to 4%. They say the stock trades at full valuations. They've got a reduced call. CLSA, Jefferies and Morgan Stanley, all of them have an equal weight or a hold call, again on the back of the re-rating that we've seen and the valuations HCL Tech is trading at. Nomura though is still bullish, buy call with a target price of 2,000 rupees. So in a nutshell, the numbers failed to excite the street. There were a few misses in terms of the fact that the company didn't raise the upper end of the revenue guidance. Q3 was a miss on the top line, and plus full valuations and the recent run up in the stock and outperformance. All these are reasons why the stock is under severe pressure today.
Take that point, Rima. In fact, we also spoke with the management of the company, asked them about the fourth quarter expectations on growth and margin as well, discretionary demand and deal outlook too. So let's hear out the excerpts of that conversation that we had with the management of HCL Tech.
I think our momentum across all the verticals is continuing to pick up. And there will be some impact because of a large program coming to an end in the retail CPG segment, where we had a 14% sequential growth last quarter. Now, to backfill that project with new projects, it will take some time because some of the deal wins have happened towards the end of the December quarter. So that pickup will happen towards the second half of the March quarter, and that will continue into the Q1 of next year. I think the way you should interpret this is, every vertical has some dynamics that plays into every quarter, but is the new additions adequate enough to kind of offset some of those reductions is what we should see. We are quite positive of an all-round growth in Q4.
Impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
I think there is a good momentum in a number of small deals, and that has a potential to convert to revenue quicker. Some of the large deals conversions continue to be a little slow, but we expect that to pick up with some of the uncertainties behind us. We think the large deal momentum should come back in this quarter and maybe Q1 of the next financial year. All verticals, it looks good. And maybe a little bit in energy and utility, some softness, but financial services is good. Tech vertical is looking good. Telecom also, there is a lot of efficiency-led improvements that clients are looking for. That is also creating good demand.
The management of HCL Tech after its third quarter results, the street though remains unconvinced about its potential considering full valuations. Time to take a short break, but before that, introducing Growth Code, a special initiative by Grow and CNBC-TV18 to further empower retail investors and traders. Renowned investors and professional traders convened at Grow's Trading Right event on the 9th of November last year, where they shared valuable strategies. Here's a snippet of what Aditya Pachwaria, who's the co-founder of Fintoric Capital, had to say about the risks of trading penny options. Listen in.
पेनी ऑप्शंस का जो प्रोबेबिलिटी होता है जीतने का वो बहुत ज़्यादा होता है, 99% से ज़्यादा प्रोबेबिलिटी होता है उसके जीतने का, बट इसके साथ उसके इतने सारे नेगेटिव्स आते हैं कि उसमें जो सबसे पहला है कि उसका रिवॉर्ड बहुत कम है, आपको मिल सिर्फ 1 रुपये रहा है। अगर आप यही काम 100 रुपये वाला ऑप्शन बेच के करोगे और फिर वहाँ पे आप रखते हो कि मैं 10 रुपये का टारगेट रखता हूँ, तो वहाँ आपका विन रेशियो भले ही कम हो जाता है बट आपका साइज 10x है। दूसरा कि अगर आप पेनी ऑप्शंस देखो, आप कहते हो कि मैं तो 1 रुपये के 2 रुपये में ही काट देता हूँ, तो अगर आप उस ऑप्शन को देखोगे उसका नेचर भी थोड़ा सा डिफरेंट होता है। तो जैसे 1 रुपये का ऑप्शन है, मार्केट ऊपर जा रहा है, आपने पुट राइट करी है, मार्केट ऊपर जा रहा है, वो फिर भी वो 2 रुपये हो जाएगा। अननेसेसरी हो सकता है कोई ऊपर जा रहा हो तो कोई उस हेजिस को खरीद रहा हो तो आपका वहाँ पे एसएल हो जाएगा। तो जब आप उसको 1:2 देखते हो, उसकी जो प्रोबेबिलिटी है 1:2 होने की वो बहुत ज़्यादा है कंपेयर टू 100 रुपये का ऑप्शन बेचते हो उसके 200 रुपये की होने की। तो इस तरह से आपका वहाँ पे जो प्रोबेबिलिटी ऑफ विन है वो भी कम हो जाता है।
Live on YouTube at CNBC-TV18 weeknights at 7 p.m.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now? How you've matured as a player, your journey, your experience?
Yeah, definitely yes. The person you are, the confidence levels that you show on court are very important. And I think as a person, when you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task, but I have been very fortunate to have people around me have been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to, you know, work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but you know, maintaining that level is a different thing altogether, and it takes even more you know, time and hard work, and you know, it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion.
Welcome back. The market's recovery seems to be getting sold into, you know, the Nifty Bank, which at one point was, you know, at close to 48,800, is now back below 48,500. Not only is it the Nifty Bank, the FMCG stocks, which were seeing some bit of outperformance over the last couple of trading sessions, have come in for selling again. Titan, case in point, you know, the intraday chart comes up for you, down about 3.5% from the lows, currently at the low point of trade. Remember it being in the green at, you know, most of the first half of trade. And from the moment it slipped into the reds, only gone lower, currently at the lowest end of the range. HUL and Britannia are the other ones which are still in the red. HUL down about 2.2% as well at the low point too. But Bernstein has actually introduced some new stocks in its model portfolio. 11 new stocks have been introduced, whereas 4 have been removed. Nimesh tells us more about this increment, addition and deletion of that list. Nimesh.
Yes, Mangalam. So as you rightly pointed out, you know, Bernstein has put out their model portfolio changes. They have actually identified 11 bottom-up ideas for 25. Now, in terms of additions, they've added 5 stocks, which includes IndusInd Bank, Coforge, Bharti Airtel, Adani Ports, as well as Jubilant FoodWorks. The deletions are Reliance, HDFC Bank, REC, and Zomato. They've made some changes to the sectors as well. They've increased their allocation to IT services and to some select consumer sectors as well. Within the consumer sector, while they retain DMart, they've added Jubilant FoodWorks and they've removed Zomato. So that's a change in the consumer basket. In the industrials, they've reintroduced Adani Ports after the sharp correction in the last few weeks. Similar is the case in telecom as well. They've reintroduced Bharti Airtel after the recent correction there. Within the financials, that's interesting. You know, while they've retained ICICI Bank, they've added IndusInd Bank into the model portfolio, largely on back of the sharp correction that they've seen in IndusInd Bank in the last couple of weeks and months. Within utilities, while they've removed REC, they've retained NTPC in that top holdings. Now, within the large deletions, which is Reliance and HDFC Bank, it's basically you know, they're looking to add the stocks which can have a bit of a pullback rather than looking at downside support. So that's the reason why they've removed, while they continue to be bullish on those names, they've removed from a tactical point of view. Within the insurance space, they continue to own SBI Life, and within the utilities, they still have they're still retaining L&T as well as NTPC. So these are the few changes that they've done. But to me, I think what they've done is they've added stocks which have recently corrected very sharply, the likes of Adani Ports, the likes of IndusInd Bank, and also something like you know, Bharti Airtel, which has corrected very sharply in the last many weeks.
Absolutely interesting note out there. 11 bottom-up ideas, few additions and a few deletions as well. So that Nimesh brings up the outlook for 2025 from Bernstein India portfolio. The list up for you once again on the screen. But speaking about the screen, you know, the Nifty has actually seen a bit of a decline from the highs, down almost 100 points from the highs of today's trading session, and that's led by the Nifty Bank. So perfect time to get you an update coming in from the F&O space itself. Yes, the indices have seen some respite. So if you look at the Nifty Bank and the mid-cap index, compare it to what we saw the same time yesterday, there is some green, but the greens have come off highs as well. The only, you know, positive takeaway for today is that the Nifty Bank, one, is leading the gain, and secondly, it's crossed yesterday's high. So the Nifty Bank, which was making lower highs, has managed to cross yesterday's high. Today's high is 48,806 as against yesterday's high of 48,606. But that hasn't sustained, and as a result of which, the Nifty is unable to cross yesterday's high as well. So the first sign of recovery for our markets are likely to come by only when the Nifty crosses its previous day's high, which is, it has failed to cross for the last 9 trading sessions. We've been making lower highs itself. Today's high on the Nifty 23,265 as against yesterday's high of 23,341. There had been some respite for the India VIX as well, which has seen a minor cool off. But from there as well, it's seen a bit of an up move once again, sitting with a cut of just about 0.3 points itself. The mid-cap index is doing a lot better. After a big decline yesterday, the advanced decline ratio tells you that the broader markets are in slightly better health, maybe a bit of a bounce back after the big sell-off that we've seen. But the 23,200 mark, now that seems like a bit of a, a fulcrum for both the bulls and the bears. We did see a lot of writing at the 23,200 put for a premium of 95 rupees, telling you that 23,100 would be an important support. And were we to break that, 23,000 as a psychological level is important as well. So there too, there are put writers fairly active. The put call ratio, which had fallen to 0.72 yesterday, has come back to 0.87. On the way up, however, 23,200 call writers are equally active. Almost a crore, open interest, crore shares in open interest for a premium of 100 rupees, telling you that 23,300 would be a bit of a resistance. So if you're looking for a range on the Nifty, 23,100 to 23,300 is what the option writers are betting on. 2 individual stocks that I'm pointing out today. Yesterday we had pointed out Aarti Industries entered F&O band. Today the prospect of Angel One entering F&O band are high, and the prospects of Manappuram exiting F&O band are high as well. So those are the stocks that we'll watch out for.
It's been a very choppy day for Angel One. At one point was down 7%, turned positive, and now is down again 3% after some management commentary that came in on the earnings call. But what are the charts indicating for the benchmark indices? Sachitanand Uttekar of Trade Bulls joins in to answer just that. Sachitanand, good afternoon. Thank you for joining in. How important is that 23,000 mark now for the Nifty? If we go below, or for more importantly, would you call this a bounce which can be used to exit your longs if there are any left, and couple that up with your stock recommendations as well?
Good afternoon, almost. Good afternoon, Mangalam. Clearly, I think there has been a respite, but I think for a firm reversal to develop, the Nifty has to, trend confidently at least above its 5-day exponential moving average, resistance, which is placed somewhere close to around 23,350 as of now. So until unless we don't see a very firm closing on this above this level, the chances of a relief rally look bleak. On the lower side, I would say that 23,000 remains a very important support, at least for this particular week. But there are chances that we may see further slippages going forward towards 22,800. So I think the major trend for the last couple of weeks has been on the lower side. So every respite has been utilized to create some short positions. When we look at the Nifty Bank data as well, today again it made an attempt to reconquer that 5-day exponential moving average resistance, which is placed somewhere close to around 48,880. From that point itself, we have seen some profit booking. So probably there's a chance that Nifty Bank may again revisit that 48,000 mark. So I think both the indices are sell on rise mode. For the Nifty, I think we need a very confident closing above that 23,350 mark to reinitiate some long positions.
I take that point. And what about individual stocks?
Mangalam, we have to keep a long short equation. Even last week, we discussed a short setup in DLF. But right now, if you look at the data set, there's a good short covering move which unfolded today. We have seen a very strong build up somewhere close to around 700 mark. So I think the final decline towards 705, 710 would be a good zone wherein some long positions on the counter side can be added in DLF. There's a chance that this short covering may unfold and push the stock back towards 770 levels. So we are recommending buying DLF from here on with a stop loss at 698. It can be accumulated only on a decline up to 710 for our immediate target of around 770. And on the short side, there's a fresh breakdown in Titan. The support at around 3,400 was held very well throughout last week. But if you look at today's data, not only that particular support has been breached, but if you look at the RSI, which was holding above the 50 mark, has slipped below, and the ADX has started trending about the 25 mark, which is again a good strong sign of bearish momentum. So we are expecting that this particular decline that we are seeing in Titan may extend towards 3240 immediately, but a pattern target is placed somewhere close to around 3160, and hence we are recommending fresh short positions in Titan, keeping a stop loss at 3410.
For at the lows of the day now is Titan. Sachidanand, thank you so much for joining in, sharing with us your views on the index and on specific stocks as well. We'll take a short break, continue our coverage on the markets. We also connect with Akash Agarwal, who is the whole-time director of V2 Retail, to discuss their third quarter business updates and a lot more. Stay tuned, back on the other side.
So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it. I mean, wins and losses, and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. When you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Yeah, recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, I was feeling bad, where if I have to think, I lost an opportunity, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match.
Welcome back. Let's talk about V2 Retail. That's the stock on our radar right now. Remember, over the last 12 months, the stock has surged over 400%, or a 5x return is what we've seen, notwithstanding the muted performance in the stock market that we're seeing right now. Last 12 months, there you have it, really 400%. The company has reported a good set of the third quarter business update as well, where the revenue surged 58%, same-store sales growth of 25% as well, much higher than what they've guided for the entire year. The first half was 36%, followed up with 25% in the third quarter as well, which is seasonally strong. Akash Agarwal, who's the whole-time director of the company, joins in now. Akash, thank you so much for joining in. First half, your revenue growth, if we add the third quarter performance to that, the implied 9-month performance is nearly 60% on the top line. If you could give us a sense on what you are expecting for this year on the top line, on SSSG and FY26, if you could give us a guidance as well.
Yeah, hi, thanks for having me. So I think we showed a growth of 59% in the first 9 months of the year. So we are expecting a similar revenue growth number in the coming quarters. And for FY26 as well, we want at least a 50% revenue growth. And when you talk about SSSG, then I think in Q4 of this year, we expect to do about 20 to 25% SSSG. And for next year, our target is a 15% SSSG.
Akash, good afternoon. Thank you for joining in. What are you targeting when it comes to the sales per square feet per month? Because when do you reach that targeted 1250 per square feet per year now? And how many of your stores are currently doing over that 1400 figure? If you could share some number on that.
So yeah, we were at 680 rupees per square feet per month 2 years back. And this year we're going to do upwards of 1000 rupees per square feet per month. And the target of 1200 rupees, I think we should achieve in the next 18 to 24 months. So even if we get an SSSG of above 10% for the next 2 years, we should reach that number. And talking about the number of stores that are above 1200 rupees per square feet, I would say about 40-45 stores are above that number already.
And what does that do to your margins? Because if revenue per square feet of the store increases with a similar cost, one would assume that the margins are going to be higher. But at the same time, you will have to invest in manpower and new store opening, operating expenses, etc. What does that do to your margins?
So when we move from 1000 rupees to 1200, the pre-Ind AS EBITDA margins should move from about 7% to 9.5%.
What about inventory days, Akash? You had earlier mentioned that you are expecting it to come down by 10 days over the next 2 years. What does the current figure stand at, and do you stick to this, that it will come down by 10 days?
So currently we maintain an inventory level of about 90 to 100 days. And our target is to get it down by 10 days in the next 12 months. So I think we would start seeing some sort of improvement in the inventory days from the next quarter onwards.
All right, because March 2024, your inventory days were at 155. So just wanted clarity on that. What does it stand at right now? 90 to 100 is what you're saying.
So because it's a cyclical business, you have to look at the inventory days, average inventory days of the 4 quarters. So usually the third quarter is the highest revenue quarter, whereas the fourth quarter is a little muted. That is why you see a huge change in inventory days. So when you look at the average inventory days of the 4 quarters, it's around 90 to 100 days.
Right. Let's talk about things that concern shareholders. I'm looking at a couple of data points here, and that tells you that for a company that has seen such phenomenal returns, over 5,000 crore in market cap, such bright prospects like you're talking about 50% plus sort of revenue growth, there is not major institutional shareholding. I mean, it was just 2 quarters ago that you had, Motilal Oswal buy about 4.88% stake in the company. Why is it that institutions haven't, taken some of the stock? Because on the other side, the people who are buying the stock, the number of public shareholders from last December to now have increased from 16,000 to close to around 27,000. The street would get a lot more confidence if major funds, etc., who are bullish on the retail space, participate in your stock as well. Why is it that that's not happened?
So we want to focus on our performance, and we want to focus on the good numbers that we've been delivering. We don't know the complete thought process that goes behind these institutions and, getting into a stock. But we have seen a lot of interest from a lot of institutions, and we have been in touch with a lot of them. But I think it also depends on the overall macro picture, the overall state of the market. So I think, we just have to focus on performing as well as we have been performing. And I think it should convert in the near future.
Just to finish that point, Akash, have you met any institutions in the recent past? If you could shed some light on that. And part 2 of my question is, what is the what are the cash on the books currently, and what is the operating cash flow that you are currently generating?
So we do an investor conference every quarter. So we held a conference, I think, 2 months back, and we met about 30 to 40 different kind of investors, and we saw a lot of interest also. And talking about cash flows, the growth that I'm talking about and the 100 stores that we want to add in the next financial year, we've already added 48 stores this year. And in the 3 months that are left, we're going to add another 25. So that's about 125 more stores in the next 14 months. So that will all be funded through internal accruals. And it will all be funded through the cash flows that we generate internally.
No, another concern, I'm looking at your annual report right now, and if you could give us some clarity on this, what proportion of the purchases you make are done from related parties? Because there's this entity called V2 Smart Manufacturing Private Limited, In FY24, purchase of traded goods against advance payments was close to 190 crores. The advance that you made for, purchase of traded goods was close to 206 crores. Again, the advance against purchase of traded goods was close to around 28.7 crores. So net, or rather gross value of close to 500 crores, which is almost as much as, your first half's revenue. If you could give us a sense on what your purchase policy from related parties is.
So it is a 100% wholly owned subsidiary of V2 Retail. So it has the 3 manufacturing units that we own. So about 20% of what we sell, we manufacture in our own manufacturing units. So that is the sales that you're talking about. So we save about 10% cost in those goods that we manufacture in our factories, and we pass on the complete benefit to the consumers. That is why we get such a competitive advantage in terms of price.
And no purchases made from unlisted, unwholly owned subsidiaries which are still perhaps owned by related parties? There is none of that?
No.
So do you expect that number to remain as it is right now, Akash, or do you see an increase in that number?
No, that number will decrease because we are not opening any more manufacturing units. And as our volume increases, the capacity remains constant. So basically that 20% will come down to 15%, and next year I think should be less than 10%.
Right. Just a final question before we let you go. You did say that there would be rising contribution of in-house designing and private labels. If you could give us what the number is right now and what you're targeting it to be. And you are getting 90% of your revenue from apparel. Over the last 2 years or so, what we've seen is also a big trend of large conglomerates doing value fashion and going into the same areas as you are. There is Zudio, there is U-Star, there are others as well who have come up with those value fashion options. How do you tackle this competition?
So India is a big enough market to have multiple big players operating in different price segments. So the models that you mentioned are at a slightly higher average selling price than us. So we operate at a 300 rupees average selling price level, whereas Youthstar and Zudios, the likes of them, operate at around 500 to 550. So it's a different class of customer, but in each price segment, there is enough space for 4 or 5 big national players to actually operate, because still more than like 75% is unorganized retail. So the shift from unorganized to organized has accelerated, and it will keep on happening in the next, decade. So retail, especially value fashion retail, is poised to grow at more than 13-14% CAGR over the next 5 to 10 years.
Indeed, we leave it at that. Akash, thank you so much for joining in and sharing with us your views on the road ahead for the company. Wish you good luck for the quarters ahead as well. The management of V2 Retail, the stock currently trading a % lower, but has been an outperformer over the last 12 months. Time to take a short break. The Nifty still remains 100 points higher. Continue our coverage of the markets on the other side. Stay tuned.
And obviously, I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back
yeah,
even harder.
I think the belief is very, very important. Just believe in yourself.
We'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, is it important that you play so many hours, or is it important that you play only for a few hours? So even that debate keeps going on at times, but whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important, and I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, you know, there are a lot of youngsters who are doing really well, but, you know, not able to prove themselves. I think leagues, now if you see there've been Coco, and then there've been tennis and pickleball, a lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, you know, a lot of people get a recognition in terms of, you know, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that yes, even we can do it. Because a lot of people are doing really well, are working hard, but they're not getting that opportunity or not.
Welcome back. Now, the Finance Minister, Nirmala Sitharaman, will present NDA 3.0's first full-year budget on the 1st of February. Now, India Inc. wants a higher capex allocation along with incentives to boost India's consumption appetite. Now, we spoke to the top industry leaders at CNBC-TV18's budget town hall, and here is their wish list for the Finance Minister.
Right now, the rebate starts from 7 lakhs. So I think if they can take that up to 8 lakhs, I think that will provide some relief to people. And the maximum, you know, at least slab rates, you know, 30% rate kicks in from, say, I think 20 lakhs of income, from 15 lakhs of income. If that can be accelerated to, you know, 18 lakhs, 20 lakhs, and likewise, you know, you trickle it down. And maybe you can cap it at a certain level so that people in the higher income brackets may not, you know, of that certain level don't get that full relief. But if you provide that, I think that will provide a tremendous spurt in consumption. I think the lower and middle income people do deserve it.
Manufacturing depends much on the consumption by various sectors. And if you really look at what are the positive tailwinds which you're seeing, the tailwinds are coming basically from rural demand, which we think will pick up going forward. But if you look at the headwinds we are facing, it's basically the global uncertainty, the high real interest rate, and there are currency pressures which will be on this. So our real understanding of continuing to boost manufacturing would be to focus on policy reforms and continue to ensure the ease of doing business is further. We address that.
We've also spoken about coupons or vouchers which can be given for consumption, especially to the lower income earners. And we can direct it specifically in areas which are good for them and good for the economy. I think that's one way in which you could enhance consumption and direct it for the social good as well.
Consumption demand, and seeing how consumption demand is boosted through better income tax cuts, and say, for instance, cut even on the excise on fuel and stuff like that. The third, I would think capex and in focus, the greater focus, 25% over last year on would be important. It's important for us to keep doing that year on year. It's picking up space, but I would think that it is important that the focus on the government heavy lifting helps the private sector to come in a big way. And if you've seen certain countries, I mean, they've gone in for decades of heavy lifting.
Right, with that, we'll slip into a short break, come back on the other side. Our special segment, Quarter Say, Quarter Duck, we bring you earnings expectations coming in from the banking sector. Also keep an eye out on NALCO, as the bottom of your screen suggests that there has been a sharp fall in alumina futures. Prices are down 3%. Remember, NALCO gets a lot of their revenue from alumina. We'll keep an eye out on that stock, which is currently holding with a gain of almost 3%.
Have that platform where they can prove themselves. So leaks that like these will definitely help them to come up and think that yes, we also have something to actually look up to.
The market's trying to stage a bit of an up move once again, but what's at the bottom of your screen, dollar rupee, holds the key to where it goes from here on. The Nifty Bank, though, is still up almost 600 points. When he started the show, it was up just about 450 odd points. So trying to move higher. The Nifty too inching closer to that 23,200 mark, which is the fulcrum. Speaking about the Nifty Bank, let's get you what the street is expecting from the banking space itself in the third quarter. We've got a lot of quarterly updates from the entire financial space. Abhishek's put all of them together to give us an update on what the expectations would be in our special segment, Quarter Se Quarter Tak.
To begin with, deposit growth on a year-on-year basis was at 9.9% at the end of Q3 FY25 and about 2.6% on a sequential basis. So YOY, the deposit growth is the lowest that you are seeing since March of 2023 as per RBI data. Advances growth was about 11.2% YOY and 3.6% sequentially. So loan growth has outpaced the deposit growth this time around as RBI has brought down the cash reserve ratio requirement for the banking sector in the previous MPC meeting. Hence, you saw the loan growth outpacing deposit growth this time by the end of Q3 FY25. Now, credit deposit ratio for the industry is at all-time high of about 80.5%, reflecting a more aggressive lending stance by the banking sector. Now, this augurs well in a high interest rate scenario for some lenders to maintain their net interest margin at healthy levels if at all they are able to curtail or contain their slippages. Now, net interest margin is expected to remain largely unaffected for most of the large lenders. We may see marginal decline for some of the lenders who have been aggressive on deposit growth, and net interest margin will also get impacted for lenders with higher slippages in Q3 FY25. Now, the net interest income growth over here is expected to be sluggish, particularly for PSU banks. So, PSU banks have largely raised deposit rates at high cost while their loan growth is lower than the industry levels. On credit costs, certain sectors, especially those with unsecured lending like personal loans, credit card loans, as well as microfinance, they are expected to face higher credit costs in Q3 FY25. Now, this could be as a result of higher defaults and hence incrementally increased provisioning requirement for Q3 FY25. There is a need for more evidence to confirm whether these higher credit costs are stabilizing or not. Now, with respect to earnings outlook, overall earnings are expected to remain weak for the banking sector, particularly for PSU banks, because largely the treasury gains that they have had in the previous quarter will be missing this time. For some lenders, higher credit costs can impact their earnings momentum as well. Overall, earnings are expected to see weak momentum for the banking sector in Q3 FY25. Now, asset quality, while it may be generally stable for large players, concerns remain around the unsecured lending portfolios, which are expected to see continued deterioration like they did in the previous 2 quarters. X of unsecured loans, asset quality is largely expected to remain under control or see marginal improvement for the banking sector. We have some of the key estimates coming in from Kotak Securities. For SDFC Bank, they estimate NII growth of about 9% YOY, and for PAT, they estimate it to be at 16,591 crore, which is up 1% on a YOY basis. For ICICI Bank, the NII is expected to be up 9% YOY, and profit is expected to be up 14% YOY. For Axis Bank, the NII is expected to grow at 10% YOY, but profit to be up only 3% YOY. For SBI, the NII is expected to be up 6% YOY, and profit is expected to be up 59% YOY, but a decline of 21% nearly on a sequential basis. For Bank of Baroda, Kotak Securities estimates NII growth of 7% YOY, while profits are expected to decline by 13% on a YOY basis. Back to you.
Abhishek, thanks a lot for that. All eyes will be on how these banks fare in the quarter gone by in terms of the other parameters as well. But with that, it's a wrap on this edition of Halftime Report. We leave you with a choppy but in the green Nifty from Mangalam, me and the team that put this show together. Thank you so much for watching Business Lunch for the next 30 minutes.
Stocks gain with mid-caps leading the bounce after the big sell-off on Monday. Utilities and metals are the biggest gainers, even as IT and pharma FMCG drags. Rupee recovers a bit in early trade as dollar index falls from Monday's highs, but demand for dollar pullbacks and the Indian currency to fresh lows. India's December CPI inflation comes in lower than expected at 5.2%, but bond yields continue to inch up as street fears RBI may skip a rate cut in February. HCL Tech stock sees its biggest daily decline in almost 10 years on profit booking following a big run-up after its mostly in line Q3 numbers, but tempers its outlook. JSW Energy gains on winning the bid under the IBC's process to acquire the 3.6 gigawatt KSK Mahanadi power. The resolution is also a positive for large lenders to the ailing utility, including PFC and RDC. Soon after, Avenue Supermart announced a change of guard at its helm. United Spirits has said that CEO Hina Nagarajan will move to a role at Diageo, with Pepsi veteran Praveen Someshwar set to take the charge. Hello, good afternoon. You've tuned into Business Lunch on CNBC-TV18 and I'm Vinny Motiwala. Markets today, as of now, have fallen a bit from the day's highest point, almost near the day's low is what we're seeing, around that day's low, near that mark. The day's low was 23,134 for the Nifty. Right now, we're at 23,147. So, yes, just holding on to gains of 0.2% in trade. Just look at it in the last few minutes. You've seen that sharper fall coming in. Now, let's wait and watch out how the second half of the trading session is going to pan out, because from the day's highest point, we've seen that bit of a fall coming in for the Nifty. Sensex, as of now, is just managing to hold on to gains of around 180 points. So that's also something that we should be watching out for. 76,480 levels is where the Sensex is at. Broader markets, which were very strong in terms of performance and outperformance, they're still outperforming the benchmark indices, but that also has come off from the day's highest point, though Nifty Midcap managing to hold on to gains of almost 1.7% in trade. Small cap also managing to hold on to gains of more than 1% in trade. Nifty Bank, let's see what that is also doing in trade. 1% gain seems like is holding on to as of now of the day's highest point. So overall, the market has come off at the day's from the day's highest point. Sectorally, when you're looking at Nifty Metal, that's the top sectoral gainer. We're seeing a buzz coming in around all the metal names. PSU banks managing to hold on to good gains. Loser-wise, we have Nifty IT that's not doing well. HCL Tech, in terms of the numbers that have come in and post that, we've seen that sharp fall for HCL Tech. So Nifty IT overall also is seeing a bit of a subduedness, down 2% in trade. And other than that, we have FMCG. That's also very subdued in trade today. Trading mainly in the negative territory is what we are watching out for in terms of the Nifty. FMCG down almost 1% at the day's lowest point. Adani stocks, keep an eye on that. They are buzzing in trade. Shipbuilder stocks, they are managing to hold on to good gains as well. So that's where some of the green is coming in from. But let's move on. And the Indian rupee, that has recovered a bit in early trade as dollar index is down from Monday's high. Now, demand for dollar pulls back the Indian currency towards fresh lows. India's December CPI inflation also comes in lower than expected at 5.2%. While overall the wholesale price index for December comes in at just 2.4%. Lata is here to decode all this for us in terms of give us details in terms of inflation numbers, what's happening to the rupee, update on that front as well. Lata, good afternoon.
Well, let me start first with the inflation number and the CPI number, because that's the index which the Reserve Bank watches to set rates. That came in, of course, yesterday at 5.2% for December, lower than the CNBC-TV18 poll of 5.3, lower than the November 5.48. So a good number on the whole, largely pulled down by core CPI, which has fallen to 3.6 from 3.7 in the previous month. The one that didn't move as low as people would like, food inflation, 8.39 was what we got. Our poll said 8.3. Of course, it's lower than the November 9.04, but not low enough. Vegetable prices, of course, were the ones that has really helped in pulling down food. They've declined sharply, but they still remain high at about 26% up year on year. But again, it's a 4-month low. The cereals and eggs and fruit also were slightly higher, which was a bit disturbing. But vegetables are expected to decline sharply in January. We have some nowcast numbers for tomatoes, onions and potatoes, and that looks like we're going to see the inflation falling a goodish bit. Very quickly on the WPI wholesale price front, that has never been a big bother. It has been around the 2-3% mark, but it's come in at 2.37, in line with what our poll said. Food wholesale index also has fallen, not as much as we would like, 8.5%, still looks high, but it is a 4-month low. And it's the manufacturing inflation, or core WPI, which is really low, 0.7%. I mean, prices have hardly moved on the manufacturing sector at the wholesale level. So what does all this mean for rates? Now, there is a growing section in the market which believes that there is space for a Reserve Bank rate cut in February, because, of course, WPI and core CPI are way below the 4% mark of the Reserve Bank. I guess much will depend on how the currency markets behave in the first week of February, whether they give some consolation to the Reserve Bank that the worst of depreciation is over. Well, with that, let me come to the rupee. The currency was expected to appreciate today after a terrible Monday that it had when it had the sharpest fall in 2 years. The expectation that it would do well was because the dollar index overnight had fallen from 110 to 109.6 on some talk that Trump may not rush all the tariffs, but would do it gradually. The rupee has appreciated, but it is still appreciated less than the other EM currencies. They've appreciated between 0.2 and 0.5%. We've appreciated just 0.02. And at one point, the rupee lost all its gains and even touched a new low of 86.60. But it's about that range. The expert opinion that we have got is from Goldman Sachs. Their belief is that this is going to be a dollar strength year. Stronger for longer is what they think you will get in terms of the dollar. And that the rupee needs to fall more. It will probably move towards the 88 mark, but it will still outperform all other or most other emerging market currencies. Maybe you want to hear out Kamakshi Trivedi, the Goldman Sachs FX expert.
What you're seeing now is a little bit of a release of the very tight management of the rupee that you've seen. I think that's part of why you're seeing the weakness. And I also think, India itself is having a little bit of a cyclical slowdown. If you think about the rupee in comparison to the dollar, where, as I just mentioned, you're seeing kind of pretty exceptional growth, it makes sense that you see a bit more weakness in the rupee. But I do think that, ultimately, as we look across the year, relative to other Asian currencies, the rupee will still be an outperformer, but I think there's more weakness to come versus the dollar. We think the dollar is going to be stronger for longer. We have just marked our forecasts in that direction. We think there's another 4-5% upside still to the broad dollar trade weighted index. So, this is a combination of continued firm U.S. growth, U.S. exceptionalism, and, shifts that are occurring on the rate side, but also tariffs. Tariffs are coming, and I think that's a key part of our view of dollar upside from here.
And amid the weakening of the rupee, the governments also say that US sanctions on Russian oil will not have a big impact on Indian currency. Now, government sources point to the large dollar reserves as a hedge against further depreciation in the rupee. They also point out that a weak rupee will help exports, bringing in more dollars to the coffers, while the growing renewable sector will reduce the country's dependency on oil. Also, let's bring you a crude check now. And crude prices have stabilized today after jumping on the back of the tougher US sanctions against the Russian oil tankers and a strong dollar in the last two trading sessions. Now, Brent crude fell nearly 0.5% to reach around $80.53 per barrel is what we saw, while WTI crude oil fell around 0.4% to reach around the $78 per barrel mark as well. So interesting to watch out for crude moves going forward in terms of trade. But in fact, my colleague Sapna joins us to tell us more about how the government is preparing itself to safeguard against the sanctions. Sapna?
Yeah, hi. So basically the sense that we have gathered is that at least, in the upcoming 6 to 8 weeks, the disruption that will be caused by the U.S. sanctions against the Russian ships and freights and stuff, that's not really going to be felt, simply because, there is going to be a small window for people to come up with new arrangements. Plus, the government has also indicated very clearly that the cargoes which have already set sail, those supplies are definitely going to be received. Of course, any of these sanctioned entities, be it oil major or be it any of the ships, post 10 Jan, those supplies will not be taken by India, of course. So in this limited period of around 6 to 8 weeks, some new arrangements, some new equilibrium is likely. Refiners are also looking at the market very closely. So your supply terms can be renewed. It can be or negotiated. It can be Middle East. It can be Brazil, Mexico, Venezuela. There will be two factors that, of course, the refiners will watch out for: the pricing of the oil supply as well as the kind of crude that you want to take. So these are the factors. So 6 to 8 weeks is what is there to watch out for. Of course, in the long term, nobody is ruling out a disruption. That's what even government is gearing up for. That definitely there will be disruption. But the 6 to 8 weeks of window needs to be watched closely. Second point is that we also have a stake of our own government-owned oil cores in the Vostok oil project of Russia. So that is also something that needs to be studied. Government is going to look at it in terms of what's going to be the impact.
Okay, Sapna, thank you so much for the latest update coming in there. But on that note, we're going to slip into a very short break. After the break, we'll focus on HCL Tech, what the numbers were looking like, because the stock has seen its biggest daily decline in almost 10 years. So we'll get you more details on HCL Tech after this break.
We don't make arguments in a vacuum. It's always relative. So a company has to do what it needs to do to be competitive, and that unfortunately is dictated by the marketplace. But having said that, my point of view to start with would be simply this, that putting in enough work is obviously important, be it 70 or 90 hours or what have you. But at first, to be clear that the hours we are putting in, what is the quality, the efficiency and effectiveness of that? I think that is more critical than the sheer number of hours. For me, qualitatively, it is a more important issue than quantitatively.
Welcome back to Business Lunch on CNBC-TV18, and now let's talk about HCL Tech and on to those earnings, because seeing its biggest day fall is what the stock is doing right now in 10 years. After reporting the third quarter numbers, constant currency revenue growth came in just at 3.8% versus expectations of 4.1%. Margins also rose by 90 basis points, but there was no change to the midpoint of the organic growth guidance for the year, which is something that disappointed the street. The management, however, tells CNBC TV18 that they expect Q4 margins to be slightly lower than the Q3. Now, on that note, also let's listen in to what they had to say.
I think our momentum across all the verticals is continuing to pick up. And there will be some impact because of a large program coming to an end in the retail CPG segment, where we had a 14% sequential growth last quarter. Now, to backfill that project with new projects, it will take some time because some of the deal wins have happened towards the end of the December quarter. So that pickup will happen towards the second half of the March quarter, and that will continue into the Q1 of next year.
Impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
Okay, now let's introduce Growth Code, a special initiative by Grow and CNBC TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gathered at Grow's Trading Right event on November 9th, and this was to share their valuable insights and strategies. Here's a snippet of what pro trader Aditya Pachwaria, the co-founder of Fintoric Capital, had to say about limiting your risk while trading. Listen in.
मेरा पर्सनल रिकमेंडेशन रहता है कि आप अपना ग्रॉस एक्सपोजर लिमिट कर दो. इन अदर वर्ड्स आप अपना लेवरेज लिमिट कर दो. इंस्टेड ऑफ आप हेज लेने के बजाय अपना लॉट साइज को आप आधा, मतलब 3,25,000 पे एक लॉट चलाओ आप, इंस्टेड ऑफ 75,000 पे एक लॉट चलाने के बजाय. और जैसे जैसे आपका लॉस आ जाए, आप 5% लॉस हुआ तो उसके बाद आप 3,25,000 के बाद आप 2.5 लाख पे आ जाओ, आप 2 लाख पे आ जाओ, और 5% और लॉस हुआ. इस तरह से आप धीरे धीरे अपना एक्सपोजर बढ़ाते जाओ, क्योंकि अल्टीमेटली मार्केट जब ऊपर जाएगा आप इकट्ठा रिटर्न पूरा सबका निकाल दोगे उनसे भी. प्लस आपको म्यूचुअल फंड्स, एफडीआर का रिटर्न आ भी रहा है, तो आप 6% अगर एफडीज में भी इन्वेस्ट करते हो, फिर ये ऑप्शंस करते हो, तो आप अपना वैसे ही 7-8% तक का तो ड्रॉ आप ऐसे ही ले सकते हो, तो भी आप अपना साल के एंड में 0 पे ही छूटोगे.
Okay, let's move on, and just a quick highlight coming in on Concor, because they have come out with a 9-month FY25 business update that we're seeing coming in. Exim volumes have come in at 5%, and like you can see flashing on the screens as well, it seems like they've all remained much below the guidance of FY25. As of now, the stock is trading with gains of 3.5%. But yes, do keep an eye out on Concor. We're seeing overall domestic volumes also seeing a growth of around 18%. Total volumes up by 7.8% versus guidance, something that is below. That's what we're seeing flashing on the ticker as well. But on that note, we're going to slip into a very short break. When we return, we'll get you the latest from Mahakumbh Mela. Lakhs of devotees take their first holy dip.
So today I'm announcing that the federal government will cover 100% of the cost for 180 days. This is going to pay for things like debris and hazard material removal, temporary shelters, first responders' salaries, and all necessary measures to protect life and property. And folks, I want to underscore, I told the governor and local officials, spare no expense to do what they need to do and contain these fires and in their communities that have really been devastating.
Well, they called for an appeal, and as you know, they acknowledged what the judge said about no penalty, and there's no penalty. But we're going to appeal anyway, just psychologically, because frankly, it's a disgrace. It's a judge that shouldn't have been on the case. He's a highly conflicted judge, and they called for an appeal. So I read it, and I thought it was a fair decision, actually. So I'll do my little thing tomorrow. They can have fun with their political opponent. As you know, I'm under a gag order from a judge. This is the first. This was an attack of a political opponent. And if you take a look at it, I'm not supposed to be talking about it, so I won't. I'm the first president and probably one of the first candidates in history.
Welcome back, and thanks for staying tuned into Business Lunch on CNBC-TV18. Now, actor and entrepreneur Abhishek Bachchan has invested in ICC-sanctioned European T20 League, expanding his portfolio of a sports investment. Speaking to Shireen Ban, he describes his journey into sports and entertainment ventures, his passion for cricket, and what lies ahead in his journey as a sports entrepreneur. Listen in.
Let me go back in time, because we had this conversation 10 years ago when you had just invested in the Kabaddi League. And then, of course, football happened. And when I asked you then about this journey to becoming an entrepreneur, you said it was more of a hobby. 10 years on, and 10 years for Kabaddi and 10 years for football, and now cricket. It's no longer a hobby, is it?
No. Thankfully. It is becoming a bit of an expensive hobby. Maybe the next time we sit down, we can talk about the legacy that ETPL has left behind. And hey, you know, Abhishek, you were part of that and you made a difference. I want that to be part of my story, that, you know, you made a difference. As all Indians, we're all cricket fans.
Yes.
And I think the gold standard in sports and sports entrepreneurship in India is still, I think, cricket. The dream was always to be involved. I had certain criteria when I first started working in sports. Those criteria, some of them have been achieved. And now I felt that I was ready for the next big leap, which is cricket. I wasn't sure when I started with Kabaddi in the Pro Kabaddi League and ISL with Chennai NFC, whether I could contribute anything to cricket. First of all, my cricketing knowledge may not be as good as some of the pundits. And I felt cricket already is an established and set up sport in and around India. And yes, there's always room for improvement, but I think we're at the top of our game over there. I didn't know what I could bring to the table. Last year, you know, my father and I invested in the ISPL and took the Mumbai franchise, which is the Street Premier League. That was my, you know, litmus test, testing the waters of cricket. And after that experience, I feel, okay, now I was ready to take the next big leap. And that is when the ETPL came about. And we started discussing it. And I felt prepared to be able to, you know, do something with it. Then came the question of, you know, how you want to get into it. With the ISPL, which is a very exciting new format of cricket, which is street gully cricket, tennis ball cricket. And we all thought it's going to be very playful, but it's actually immensely competitive. And the players are fantastic. And I really enjoyed that experience of running the, you know, help run the Mumbai team with our partners. I felt if we had to do something with the big leagues, then you need to, are you able to compete with the best team owners in the world? I think the IPL has set the standard for how teams should be run. And I think they do a great job. I'm not sure whether I wanted to get into that equation.
Why not?
I want some more time before I can do that. The ISPL, I'm good at running a team. I'm thankfully, by the grace of God, I'm good at not losing money with my teams. But cricket is far more complicated than, say, Kabaddi or football or Street Premier League. There are a lot more variables involved, and you're playing with the big boys then.
And it's bigger money.
Yes, it is. The opportunity presented itself to become part of the ownership group of the league. That's where the excitement came into me, because it was not going to be in India. We're doing it in Europe. Here was an opportunity to bring T20 entertainment and cricket
to Europe.
To a market which doesn't have that already, in a sense. I mean, yes, England does,
Yeah.
but Scotland, Netherlands, and Ireland perhaps don't to that scale. We have a few players that play here and there. So the first criteria was, can I make a difference? And I feel these are markets where I can make a difference. And if I can make a difference with the ownership of the league, then I felt that was the one big leap that I needed to take, as opposed to just being a team owner.
Okay, and now bringing you some national news updates. The second day of Mahakumbh Mela saw millions of devotees converge at the Triveni Sangam before sunrise to take the holy dip on the occasion of Makar Sankranti today. This marks the first Amrit Snan of the Mahakumbh 2025. For the event this year, the Yogi Adityanath-led government has initiated 549 projects, from infrastructure development to sanitation, at the budget of 6,990 crore rupees. And with that, it's a wrap on this edition of Business Lunch on CNBC-TV18. We leave you with some visuals from both North and South India, where many are celebrating the harvest festival of Makar Sankranti and Pongal, which is marked by the traditional bullfight. Thank you for tuning in to the channel on CNBC-TV18 and Business Lunch. Up next, you have Midcap Radar.
Under attack with a gag order, where I'm not allowed to speak about something. And they ought to find out what that's all about. And this is a long way from finished. And I respect the court's opinion. I think it was actually a very good opinion for us, because you saw what they said. But they invited the appeal, and the appeal is on the bigger issue. So we'll see how it all works out. I think it's going to work out well.
A flying car that will begin mass production in 2026. No issue of parking or where to take it off from, but you need to have $300,000 in your pocket. Xpeng Aero HT, the aerospace company under Chinese EV startup Xpeng, unveiled at CES 2025 its modular flying car. The Landcraft
Good afternoon, it's Midcap Radar time. I am Hormas Patakia. With me is Mangalam Malu. The Nifty is exactly where it is. We left the studios at 1 p.m. So there's no change, but the bulls are fighting to hold on to the very little recovery that we have managed to see post the sell-off that we saw yesterday. Mangalam, good afternoon.
Good afternoon, Hormas. That's exactly what's taking place right now. Maybe a bit of a snooze in the afternoon for the market before we resume, action in the last hour of trade so far. Holding with gains of almost 75 points. The Nifty is now down a good 120 points from the highs of today's trading session. So let's get you all the top stories that we're tracking this afternoon. The market rebounds after a 4-day losing streak. Midcaps stage a 1,000-point recovery, now up almost 940 points. We also see gains coming in for most of the stocks, whereas there is some pressure in the Nifty Midcap 100.
JSW Energy gains on winning the bid under an IBC process to acquire the 3.6 gigawatt KSK Mahanadi thermal power plant. The resolution is also a positive for large lenders to the ailing utility, including PFC and REC. Shares of both are up in today's session.
Biocon surges after brokerage firm HSBC upgrades the stock to buy amid expectations of a turnaround for the drug maker. HSBC also raises target price on the stock to nearly half, to about 430.
BSE climbs over 3.5% after brokerage firm Jefferies upgrades the stock to hold and raises the price target to 52.50 on expectations on improving quality of premiums. The stock, though, is already above that target price.
Metal stocks rebound after a sharp correction. Softer dollar is an additional tailwind. However, alumina prices continue to slide on excess supply.
Well, just as we mentioned, the Nifty is still where it was, still managing to hold on to gains of about 80 points. It is off the highs of the day, but still managing to fight that 23,150 mark on the downside so far. The broader markets continuing to recover. The Nifty Midcap Index lost 4% yesterday, is gained about 2% today, so it's recovered almost half of what it had lost in yesterday's trading session. And a similar trajectory for the small cap index as well, was up around 1.75% just a few minutes ago, and that too had lost 4% yesterday. That too is slightly off the highs of the day, but still holding on to gains of 1.5%. The Adani Group companies, though, are the ones that are leading the charge today, almost 15% higher for Adani Power, 11% each for Adani Energy and Green Energy as well. But there are plenty of other movers in the broader markets today, and Vamakshi is here to highlight just that. Vamakshi, good afternoon.
Well, good afternoon, Hormas. Yes, much needed respite for the markets, right? Let's first look at some of the stocks that are gaining momentum in trade today. First up is Piramal Enterprises. That stock is seeing a surge of almost 7.82% after the company announced that they will be receiving deferred payment from its unit. Minda Corp is another counter. Again, there's a news flow out there. Stock is up nearly 6.5%. Biocon continues to gain in trade, up nearly 6.6% today, and Mascow Dock as well, up nearly 8% in trade today. Apart from that, metal stocks are some of the counters that are buzzing in trade today. NMDC is seeing an uptick of almost 5%. SAIL, Jindal Stainless as well as NALCO are some of the other counters that are gaining momentum in trade today. But apart from that, a lot of stocks gaining on the back of strong volumes as well, and that includes Inox Wind. That stock is seeing an uptick of nearly 4%. All of these other counters, Olectra, Green Tech, Tejas Networks as well as BSE are surging in trade. Keep in mind that BSE is also surging on the back of an upgrade that has come in from Jefferies. Apart from that, there are stocks that are reacting to their numbers. Angel One and Anand Rathi as well as Delta Corp reported a dismal set of numbers. Resultantly, we're seeing a fall in all of these counters. Lastly, let's focus in on some of the stocks that are losing in trade. These are some of the stocks that are bucking the trend. KFIN is seeing a downtick of almost 6%. ITI, Sham Metallics as well as Signature Global all of these are down nearly 3% in trade today.
Take that point, Vamakshi. Thanks a lot for that. We're also seeing some traction in a lot of these pharmaceutical names. Divi's Lab currently, for instance, up at the high point of trade with a 4% uptick. Sun Pharma is picking up pace as well. So the pharmaceutical index actually comes up for you. That tells you the entire story of the sector, which is currently at the high point of trade. And alongside that, we have a bunch of others in the broader markets as well. Keynote is one of them, which is up about 10%, locked in that temporary upper circuit. And at the high point in trade are REC and PFC as well, understandably on account of a resolution of the deal for Mahanadi project from JSW Energy, and the lenders to that project also benefiting from that. Good time to get in Shrikant Chauhan of Kotak Securities for a quick technical check on the market. Shrikant, there has been a recovery. I mean, it's from oversold levels, but it's not really sustaining, or it's not like up in a way. It's just up as of now. Where do we go from here?
Good afternoon, Mangalam. Yeah, unfortunately, when the market was recovering, it failed at 23,265, 263, which was its previous lowest level for the market. I'm to say yesterday the market has broken that level, but it was like consolidating above this level for almost 2 months. And this particular lowest level the market has made in the month of November 21st something. So this time it was like the failing at 23,263, 265 is something which is again negative for the market. And even if we see the overall trend of the market, then it is forming lower top and lower bottom sort of series. But the way it has fallen since last 4-5 days, I think it is consolidating, and we may see some rebound, but I'm not expecting market to sustain at higher levels. So for the day, today's lowest level, that is 23,140, 130 is going to act as major support. And in case if we see the market is dropping below the same, then we could see further more weakness. Otherwise, there may be the possibility of some more relief in the near term.
Shrikant, good afternoon. Thank you for joining in. So what are the specific stocks that you're recommending this afternoon?
Yeah, good afternoon, Harmas. I think, see, all these pharma companies, they are doing well. They are recovering from their lows. And most of these stocks are still into uptrend. Even when the market was falling, these stocks were like above their important support levels. And broadly, if we go through with stocks like Biocon or maybe Divi's Apollo Hospital, I think in that Biocon looks really good. It's not only because it is quoting at its high, but if we see the entire pattern of the stock, then it is forming some rounding bottom sort of formation. And I think now the volumes are drying. So we could see trending up move in the near term. It is currently at 390. We are expecting stock to move towards 440, 450 sort of levels. So it's a buy at current levels. And if there is any trading position, then one can keep stop loss around 370. But it's a positional buy with a target of 450. The other stock which we like is Chola Finance. And if we see all these finance companies, NBFCs especially, they are doing relatively better than the banks. They are recovering whenever there is a recovery in the market. So Chola Finance looks good at current levels, around 1267, 1270. We are expecting stock to move towards 1350, 1375 levels in next maybe few days or weeks. It will take some time, but it's a buy at current level. And again, for trading position, one can keep stop loss at 1240.
Right. You know, Shrikant, the indices being where they are, the broader markets are the ones that have seen a significant correction, right? 7, 8, 10% in just a matter of 6 to 7 sessions. Do you think that with such oversold setups, the mid-cap and the small-cap indices are due for a bigger bounce compared to the Nifty? Or would you ask your clients to utilize the rebound in the broader markets too to reduce their positions?
See, like after breaking the levels of 23,250, we are expecting further more pain for mid-cap and small-cap companies, because now the trend of this mid-cap and small-cap companies have turned down very clearly. They were like holding with the sentiment only because the market was not breaking the level of its previous low. But now after this dismissal of the psychological level of 23,200, we could see further more pain. And we are advising our clients to reduce position if there is any rebound in the market.
All right. Are you looking at any shorting opportunities, or you think that we're not in the phase where you can make more money after shorting after a 900-point decline on the Nifty?
Yeah, I think, see, Mangalam, there are like several stocks which are like trading below their important support levels. And because they are like oversold in the near term, if there is any rebound, then we should look for creating some short positions. But stocks like Dixon Technologies or maybe Trend, they are showing a very clear-cut weakness, and we could see further more pain in these stocks. Like Trend, which is currently around 6,200, 6,300 levels. There we are expecting a stock to fall towards maybe 5,500 sort of levels in next maybe few days or weeks. It will take some time, but gradually we are expecting stock to correct further in the near term. We also feel that Dixon Technologies, Sambar Enterprises sort of stocks can fall from here. DMart, which is currently trading around some 3,500 levels, there also we could see further more pain, maybe up to 3,000 sort of levels.
All right, those are interesting levels that you're talking about. 5,500 on Trent, DMart going to almost 3,300 odd. We'll keep an eye out on that. With that, thank you, Shrikant, for joining in and putting some perspective. Let's get you Growth Code, a special initiative by Grow and CNBC-TV18. This empowers retail investors and traders. Renowned investors and professional traders convened at the Grow's Trading Right event on November 9th. They shared valuable insights there. Here's a snippet of what Aditya Pachwaria, who's the co-founder Fintoric Capital, had to say about the risks of trading penny options. Listen in.
पेनी ऑप्शंस का जो प्रोबेबिलिटी होता है जीतने का वो बहुत ज़्यादा होता है, 99% से ज़्यादा प्रोबेबिलिटी होता है उसके जीतने का, बट इसके साथ उसके इतने सारे नेगेटिव्स आते हैं कि उसमें जो सबसे पहला है कि उसका रिवॉर्ड बहुत कम है, आपको मिल सिर्फ 1 रुपये रहा है। अगर आप यही काम 100 रुपये वाला ऑप्शन बेच के करोगे और फिर वहाँ पे आप रखते हो कि मैं 10 रुपये का टारगेट रखता हूँ, तो वहाँ आपका विन रेशियो भले ही कम हो जाता है बट आपका साइज 10x है। दूसरा कि अगर आप पेनी ऑप्शंस देखो, आप कहते हो कि मैं तो 1 रुपये के 2 रुपये में ही काट देता हूँ, तो अगर आप उस ऑप्शन को देखोगे उसका नेचर भी थोड़ा सा डिफरेंट होता है। तो जैसे 1 रुपये का ऑप्शन है, मार्केट ऊपर जा रहा है, आपने पुट राइट करी है, मार्केट ऊपर जा रहा है, वो फिर भी वो 2 रुपये हो जाएगा। अननेसेसरी हो सकता है कोई ऊपर जा रहा हो तो कोई उस हेजेस को खरीद रहा हो तो आपका वहाँ पे एसएल हो जाएगा। तो जब आप उसको 1:2 देखते हो, उसकी जो प्रोबेबिलिटी है 1:2 होने की वो बहुत ज़्यादा हाई है कंपेयर टू 100 रुपये का ऑप्शन बेचते हो उसके 200 रुपये की होने की। तो इस तरह से आपका वहाँ पे जो प्रोबेबिलिटी ऑफ विन है वो भी कम हो जाता है।
Essentially an electric minivan with a small folding eVTOL electric vertical takeoff and landing vehicle, which is right behind me over here, which can be rolled out and tucked in the back of this particular truck. The price of it $300,000 and it will be yours. There are already 3,000 intent orders for the vehicle. Rather than requiring an expensive hangar, in fact, Aero HT's invention would allow you to simply drive the eVTOL to a takeoff location and a landing site and deliver a single command to detach it and unfold this small aircraft and then take off. Once you have had fun in the skies precisely for 20 minutes, the mothership reconnects to the eVTOL, folding its arms and storing it at the back of the truck. So how does the mothership look like? Almost like the Tesla truck. It's a 6-wheel vehicle. It's got a floating roof, dark wheel arches and foldable rear view mirrors that retract into, in fact, fenders when parked. And even with this eVTOL inside that particular truck, there is still room for 4 passengers, which is an entire family. Now, this particular eVTOL is made of super lightweight materials. It's made of carbon fiber and has dual duct 6-rotor design. Can be easily controlled to take off and land. I in fact sat inside the vehicle and it's very, very cool. It has room for 2 people.
Singapore has retained the top spot as the world's most powerful passport. According to the Henley Passport Index, holders of the Singapore passports enjoy visa-free access to 195 countries out of 227 destinations around the world. In second position is the Japanese passport, which can open the doors to 193 destinations. Japan has moved up after it regained visa-free access to neighboring China for the first time since the COVID-19 lockdown. The EU member states of France, Germany, Italy and Spain are at number 3 along with Finland and South Korea with access to 192 destinations with no prior visa needed. So what about India? Well, India has dropped 5 places to be ranked at 85 over the nearly 2 decades. India's ranking has experienced notable fluctuations. It reached its highest rank of 71 in 2006 and has seen several years of decline, particularly between 2015 and 2021. Last year, India moved up to the 80th rank, but it has fallen back down to 85 in 2025. Noticeably,
Mazagaon Dock is picking up pace right now. Mazagaon Dock is actually up around 8.5%. Remember, it's still corrected a fair bit from its highs, down almost 25%, so making a bit of a recovery out there. The stock which is not making any recovery is United Spirits, despirited after Hina Nagarajan's decision to not continue as the MD CEO in the India vertical, but move on for other moves in or other positions in the global front of Diageo itself. Let's talk about JSW Energy. That's the one which is doing extremely well after it's won the bid to acquire KSK Mahanadi Power Plant. Sudarshan joins in with more details. Sudarshan, there is some respite coming in, not just on JSW Energy, but the lenders to it, PFC, REC, both of them at the high point as well.
That's true. That's the reason all the three stocks are high in today's trade, because JSW Energy has announced that it has received letter of intent to acquire KSK Mahanadi Power under insolvency resolution process, and the bid amount that company had mentioned was around rupees 16,000 crore. It was exactly rupees 15,985 crore. But the deal completion would be subject to the regulatory approvals, two approvals that JSW Energy would require out of NCLT and CCI. But why it's positive for JSW Energy? Currently, KSK Mahanadi Power owns 3,600 megawatt of thermal power capacity, of which first 1,800 megawatt capacity is under operation and second 1,800 megawatt capacity is under construction. And company believes that post this deal, its thermal generation capacity will increase to 7.5 gigawatt and will help achieve company's total generation capacity of 20 gigawatt much before its target of 2030. But apart from JSW Energy, it's positive for two main creditors, and those are PFC and REC. Why? Before August 2024, total dues of KSK Mahanadi Power was of around 32,243 crore, of which after NCLT order in August 2024, company made the payment of around rupees 6,200 crore, and post this total dues outstanding were of rupees 26,000 crore, of which PFC's amount admitted was of more than rupees 3,400 crore, and of REC's it's around 2,700 crore. So now brokerages believe that once the deal is completed, both PFC and REC will be getting the amount, and that's the reason you are seeing big move in all these three names.
Indeed, both of them have also declined almost a third from their peaks. So Sudarshan, stay on, because MGL is also something that you are tracking after that Morgan Stanley note. Tell us more on that.
So MGL is also higher in today's trade because Morgan Stanley has come out with a note mentioning that it has initiated coverage on MGL with an overweight call, and target is rupees 1,606 per share, implying an upside of almost 25% from current levels. So what does MS say? It says Mumbai is an ever-expanding city with rising travel and energy needs, with natural gas being Mumbai's fuel of nature. It goes on saying that it is both MGL and Mumbai's Tesla-like moment for gas adoption. And MGL has fifth of its gas sourcing linked to LNG, which might impact its margin. But as per Morgan Stanley, key of re-rating for MGL would be the structural growth in volume that MGL might see going forward, and that's the reason it's positive on the stock. And you can see MGL is currently higher, more than 3% today's trade.
Take that point indeed. Thank you, Sudarshan, for joining in. With that, let's talk about a stock which is under pressure, though off lows and also off highs. It's been a volatile stock after reporting its third quarter numbers. Mamakshi joins in. The stock that we are talking about on your screen is Angel One. Mamakshi.
Well, absolutely, Mangalam. The stock has declined in trade today. We are seeing a downtick of almost 17% sequentially in its revenue. The margins too have contracted by nearly 500 basis points for the company. They now stand at 39.3%, and the net profit has come in below the street expectations. Is seeing a downtick of almost 34% at 281 crores. Now, the decline in revenue is largely being led by the net broking income decline of nearly 10% sequentially, and this is mainly on account of the F&O regulations, as well as some weak market sentiment seen in the cash segment as well. Net interest income saw a downtick of almost 6% sequentially, and however, it was much better than what the analysts were largely penciling in. When we look at the margins, it is the higher operating expenses that has led to the decline. We're looking at a cost to income ratio of almost 60.71% in the third quarter as compared to 55.65% in the second quarter of the, FY25. Now, apart from that, the company also held a con call, and in fact, they said that the impact from the new norms, that is true to label as well as the F&O norms, was higher than expected. They're expecting a one-time hit of almost 18 to 20% to the top line, but they do not expect any long-term impact on the lifetime value of their customer. They've also added that they will be monitoring the impact from new norms for the next 1 to 2 quarters before they decide on whether or not they have to go ahead and take a price hike or not. AMC and wealth management business, they're quite positive on that. They appear to be very bullish. They believe that they can scale up substantially as well. So overall, it's a weak set coming in from Angel One. Resultantly, the stock is down and out in trade today.
Bamakshi, thanks a lot for that. Interestingly, all these capital market linked names, those that have at or near record highs, Angel One is down 40% from its peak that was close to 4,000 rupees. Now it's trading at around about 2,300. We take a short break. More on the markets on the other side. Stay tuned.
It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
Is the US passport, which now sits in the 9th position, a significant drop from its traditional first and second ranking from a decade ago. In contrast, China has actually risen from a lowly 94th in 2015 to 60th in 2025, largely after removing several pandemic restrictions. Now to the least powerful passports, Pakistan, Yemen, Iraq, Syria and Afghanistan are at the bottom of these rankings. And in terms of openness to other nations, Singapore allows visa-free entry to citizens from 164 countries. Pakistan allows visa-free access to 64 nations. China extends the same courtesy to 58 nations, but India allows visa-free access to just 5 countries. That's Bhutan, Nepal, Maldives, Mauritius, and Seychelles.
Welcome back. Now, the Finance Minister Nirmala Sitharaman will present NDA 3.0's first full-year budget on the 1st of February, while India Inc. wants a higher capex allocation along with incentives to boost India's consumption appetite. We spoke to top industry leaders at the CNBC-TV18 budget town hall, and here is their wish list for the Finance Minister.
Right now, the rebate starts from 7 lakhs. So I think if they can take that up to 8 lakhs, I think that will provide some relief to people. And the maximum, at least slab rates, 30% rate kicks in from, say, I think 20 lakhs of income, from 15 lakhs of income. If that can be accelerated to, 18 lakhs, 20 lakhs, and likewise, you trickle it down. And maybe you can cap it at a certain level so that people in the higher income brackets may not, of that certain level don't get that full relief. But if you provide that, I think that will provide a tremendous spurt in consumption. I think the lower and middle income people do deserve.
Manufacturing depends much on the consumption by various sectors. And if you really look at what are the positive tailwinds which you're seeing, the tailwinds are coming basically from rural demand, which we think will pick up going forward. But if you look at the headwinds we are facing, it's basically the global uncertainty, the high real interest rate, and there are currency pressures which will be on this. So our real understanding of continuing to boost manufacturing would be to focus on policy reforms and continue to ensure the ease of doing business is further. We address that.
Welcome back. There is a correction of almost 0.5% from the highs for the Nifty. 23,150 is where we are at right now. And, you know, the draggers aren't the banking stocks which are off highs. In fact, the Nifty Bank is still holding in the higher end of the range. The stocks which are dragging the Nifty lower are, you know, some of these FMCG heavyweights. Reliance, the intraday chart should come up for you. Company is reporting its numbers day after tomorrow. And that's the one which is actually, you know, at the low point and dragging the Nifty. So you pull up Reliance, there it is at the lower end of today's trading range. The FMCG heavyweight that I was talking about is ITC. So pull up the intraday chart of ITC as well. Yesterday, the shares of ITC hotels got credited in a lot of people's accounts. That's got nothing to do with the listed ITC stock right now. The ITC hotel shares list sometime before mid-Feb as per the management. So keep an eye out on that one. We also have Britannia, Nestle, both of them at the low point of trade. And finally, we have Bharti Airtel as well, which is pressurizing the Nifty. So now the Nifty is holding on just with 63 points of gains, a far distance, almost 110 points from what we saw at the high point of today.
HUL too, Mangalam, that's too down to the lowest point of the day now, 3% down on HUL. It's been a sharp fall from the opening highs that the stock had made. LTI Mindtree is another one after a few brokerage upgrades that the stock had received in the recent past. That too is trading 5% lower now. Actually, the entire mid-cap IT space after those results from HCL Tech is bearing the brunt in today's session. It has stocks like Vijaya Diagnostics, was one of those small-cap names that has outperformed even after the index has corrected from its peak. And of course, there are names like Sham Metallics is down 4%. KFin Technologies is also at the lowest point of the day, 6.5% lower on KFin Technologies as well. So if there are gainers in the broader markets, it's not as if there is no dearth of any losers. There are plenty on the downside as well. But with that, it's a wrap on this edition of Midcap Radar. From Mangalam, me and the team that put this show together, thank you so much for watching. MF Corner on the other side.
At the Consumer Electronics Show, I found out an espresso-like cocktail-making machine. To tell us more about this, I'm joined in by Ryan Close, who's the founder and CEO of Badminton. Tell us more. How does this machine work?
Yeah, so this is the Bartesian. It allows anyone to have a fantastic cocktail in the comfort of their own home by allowing them to load their own alcohol in here. So that's very clearly marked. Vodka goes in vodka, whiskey, whiskey. So you simply take these bottles out, you fill them with your favorite spirit, and you pop them in. And then the machine itself, you have a water source at the back.
Sure.
And then the cocktails all come in these capsules.
Okay.
And they're recyclable cups.
Okay.
And there's no artificial colors or flavors. And they contain all the bitters, liqueurs, and juices you need to make a perfect cocktail.
So how many cocktails or how many alcohol varieties of alcohols can you load in this particular machine? So I can have whiskey with vodka. How does it work?
Right, so right now it's 4. There's 4 reservoirs, so you add 4 spirits, right? Whiskey, tequila, rum, and vodka. So you load those 4, and that'll make you over 100 cocktails, no problem. Yeah. And then you can swap out gin and rum, so it actually comes with a 5th reservoir, so if you want to swap it. But in the cocktails, we have, again, over 65 different cocktails. And again, customers don't always want, they don't have pineapple juice, they don't have liqueurs or bitters at home. So with Bartesian, you don't have to have all these ingredients on ready. They're all inside these capsules.
So that's what the pods do. Like, for example, if you want to have a blackberry margarita, all you need to do is just load a tequila on the side and just insert the pod and you get the flavor of the blackberry along with that.
Well, that's it. I mean, the best way to show you is just by making a cocktail. So there's a barcode on each cocktail, right? And so that's going to tell the Bartesian what alcohol to pull. And what's even cooler is when you put it in, it'll tell you what glass to put underneath. So in this case, a lowball glass with ice. And then you hit next and you can select your strength. So you can customize whether you want a mocktail, light, regular, or strong. And you just twist this to pick the version that you want. And then you hit mix. And so what it's going to do, and I don't know if the camera can see it, but it's going to pull the tequila in this case.
Sure.
Again, the unit knows that you put in a margarita and it needs tequila.
Okay, I'm going to try this one out soon, but before that, how much does this machine cost?
This is $369.
$369, available in which all markets?
It's in the US market, and the UK, Germany, Italy, France, and Australia.
Perfect. And how much do the pods cost?
They're $19.99 for an 8-pack, so about $2.50 per capsule.
As good as like an espresso machine,
Well,
right?
that's right, and I mean, saves you $18 from a cocktail going out to a lounge. These are lounge quality cocktails in your home.
Thank you so much, Ryan. Thanks for sharing all of these things with us. Thanks for joining us today on CNBC-TV18.
My pleasure. Thank you.
Hello, good afternoon. You've tuned into Mutual Fund Corner on CNBC-TV18 and I'm Vinny Motiwala in the Mumbai studio. Today we're actually going to dive into a very exciting topic and an opportunity for investors that you will see. Now, a Bandhan Nifty Alpha Low Volatility 30 Index Fund, which is an open-ended scheme, will be opening, and this is tracking the Nifty Alpha Low Volatility Index. Now we'll break down, its investment objectives, the unique strategy that this will be following, and how it balances the risks and returns. And before we go across to the guests, what I want to actually talk about is factor investing. That's also forming a part of this. So just to explain our viewers what factor investing is and how it actually works, there are 5 common factors that come into play. So when you look at it, there's momentum, low volatility, quality, value, and size. Now we'll be talking about all of this with our guest for today, and to guide us on this discussion, we have our special guest who is Shishyendu Basu, Head of Products at Bandhan EMC, to talk to us about all of this. And let's get started and uncover what this fund has to offer. Very good afternoon, Mr. Basu. Thank you so much for joining in with us on CNBC-TV18. It's a pleasure having you on the show. Like I was just talking about right now, before we dive into the fund, basic concept of factor investing, that's also very important to understand. So, if you could start by explaining factor investing, how does that actually differ from traditional active as well as passive strategies that we see?
Sure. At the very outset, a very good afternoon to all of you, and very happy to be on the show. Now, factor investing, if you look at it, it's an investment strategy that selects securities based on certain special attributes of factors. Like you mentioned, value, momentum, low volatility, etc. And unlike traditional active strategies, which focuses and relies on stock picking by managers, or even passive funds, which intends to replicate an underlying index, factor investing by systematically and in a rule-based manner investing into specific attributes tries to generate returns. And that's how it becomes a unique strategy for investors.
Okay, those are the factors, and that's how it actually becomes a very unique strategy for investors versus just active or passive strategies that you normally see. But Mr. Basu, what makes, and getting to the fund now, so what makes that Nifty Alpha Low Volatility 30 Index a very unique investment option for the investors? And given the current market situation, why is it so important right now?
Well, actually, this strategy, which is the Nifty Alpha Low Vol 30, combines 2 core factors, right? And, more importantly, 2 complementary factors, namely alpha and low vol. Now, alpha performs during up cycles and low vol outshines during market downturn or down cycles. And therefore, this strategy ideally blends across these two complementary factors to generate a portfolio or a strategy which actually focuses on superior alpha return with lower volatility. Now, at this current market scenario where we are all reeling and concerned with the heightened volatility, this strategy makes uber sense because on one side, low volatility tries to protect the downside in this strategy, and on the other side, alpha readies the strategy for a pullback once it happens, making it a very, very relevant strategy at this point in time.
Okay, and just furthermore, in terms of how does the fund combine, a bit more in detail, the alpha as well as the low volatility factors, and are they, what are you expecting in terms of benefits because of this coming in?
Oh, absolutely. And in this case, now the two factors actually add up to 11 rather than 2. Now, if I look at the Nifty Alpha Low Vol 30 Index, the underlying universe comprises of the top 150 top 150 market capitalized companies, which includes all the 100 large cap companies, alongside that 50 mid capitalized companies out here. For each of these companies, their individual alpha score as well as a low volatility score is calculated. Then a composite score is derived, and from that score, the top 30 stocks are chosen to create this index. And this index is actually rebalanced semi-annually. And therefore, what we get is a very balanced strategy focusing on risk as well as optimizing return.
Okay. Mr. Basu, let's just talk about the Bandhan fund now, the new fund that you all are coming out with as well. Talk to us more about this. It is following this, volatility index, right? The Nifty Alpha Volatility 30 Index. So what is the new fund about?
Absolutely. So the Bandhan Nifty Alpha Low Vol 30 replicates the Nifty Alpha Low Vol 30 Index. The NFO began on 8th of January and will be on till 20th of January. And an investor can invest in this fund in a lump sum as with as low as 1,000 rupees and can begin a SIP with as low as 100 rupees out here.
Okay, that's about the fund right now. But on that note, we're going to actually, slip into a very short break. On the other side of the break, we'll continue the discussion with Mr. Basu on the new fund offering and what more is there for that. So stay tuned in for that. Welcome back to MF Corner on CNBC-TV18. We still have with our guest with us, Mr. Shirsendu Basu, on their new fund offering that's coming in from Bandhan side, and to talk to us about that. Mr. Basu, let's continue our conversation. And now, since you've introduced the fund to us before ending the last segment, now we'll get into it and deep dive into it. The Nifty Alpha Volatility 30 Index. that is flowing. And what is the bottom-up approach that you're following here in terms of a strategy? Could you explain how does this actually impact in terms of stock selection? What is it and why is it that this is the method that is selected for this?
Sure. See, by taking this bottom-up approach to this multi-factor strategy, each stock is judged here basis of the underlying factors. And the stock that scores the highest in both the factors are actually selected. In the case of our fund, which is the Bandhan Nifty Alpha Low Vol 30, the underlying factors of alpha and low vol each score for the funds and for the stocks are taken into account. And once we have the composite score and the top 30 from the 150 stocks universe are selected to create this. Now, what we get in the process is a portfolio which is focused on, or stocks which focus on delivering superior alpha, but with lower volatility. A very ideal kind of a combination which one looks at with optimization in return, maximization in return and optimization in risk, as we can see. Now, this strategy, if I may give an analogy on how this is very kind of an opportune and apt, is when one is driving in a highway, right? We want to cruise at a higher speed and we accelerate, right? Alpha part in the strategy is the accelerator in this car. And to ensure that the journey is safe, we have the brake there, and that's the low volatility. This combination of accelerator and brake, which ensures a smooth journey, is what is replicated in this strategy by combining the benefits of focus on higher return through alpha and being grounded and taking care of risk through the low volatility. And therefore, each of these stocks which are selected out here tend to score higher in both these factors. And therefore, that kind of adds up to this portfolio's whole endeavor to provide a better risk-adjusted return. This is how we feel that this strategy is reasonably unique in its approach towards risk and return and can form part of an individual's portfolio.
Right. Mr. Vasu, with a tilt coming in towards more on the FMCG and healthcare sectors, how does the fund ensure more diversification? And, in the current market scenario, how do you see that moving as well?
See, one of the interesting part of this strategy is that it does ensure sectoral diversification. While, since the strategy optimizes on risk and return, there are certain sectors which historically have generated superior return with lower volatility. And by virtue of that, those sectors tend to have a higher weightage in this strategy and in this index. But having said that, depending upon the market cycle, there are sectors which come up, the sectors which outperform at certain point in time do find their way in this portfolio. As you rightly mentioned, that FMCG and healthcare tends to have a higher weightage out here, but we have seen sectors such as consumer discretionary, information technology, and even financial services having higher weight. When we look at the trend of the sectoral weights, we have seen that, depending upon the sector's cycle, individual sectors have got higher weights in this portfolio. So therefore, there is a very strong sectoral rotation which tends to happen out here. That's one aspect of it. The other point is that it also takes into account market cap rotation. Since it comprises of a universe of large cap and mid cap stocks, the market cap rotation across large and mid is quite evident out here. Case in point, if I may take an example, in, let's say, September 2022, at that point in time, this fund had about 93% allocation towards large cap and about 7% towards mid cap. Cut to the current situation, it has about an 84% allocation towards large cap and about 16% allocation to mid cap. So within that universe, there is this rotation across market cap as well as the sectoral rotation which we spoke about is there, So which enables an investor to take care of the various aspects of an economic cycle, be it from a sector angle or from a market cap angle, being taken care of in this strategy.
Right, obviously you gave us that sector exposure as well and how we are actually diversifying on that front. Mr. Basu, just one quick follow-up that I want to also know in terms of how does this measure up against something that you look at it in terms of a large cap fund? How do we put that in place?
See, the universe, as I mentioned, is 150, of which it has the top 100 market capitalized companies. So therefore, the tilt is towards large cap. Definitely outshare, because mid cap has 50 stocks outshare. But during periods, we have observed that the mid cap exposure going up to about 25% as well, 20-25% as well, and the large cap being around 70-75 as well. And in extreme situation of volatility and market scenario, the large cap moves up to about 93-94% as well. So therefore, what an investor should look at through this strategy is one which is anchored towards the large cap, a strategy which looks at the companies which are generating alpha or superior return vis-a-vis the market and are hawk-eyed on the volatility aspect and scoring high on low volatility parameter as well. This combination, in fact, at this current market scenario, makes it a tactical strategy as well.
Okay. Just in terms of the fund, what I'm seeing is that the minimum application amount for the fund is relatively low. Was this specially designed to attract more retail investors, and how does this align with the Bandhan Mutual Fund's broader strategy?
Well, thanks, Vinny, for that. That's a great observation. In fact, we endeavor to keep the minimum investment as low as possible to ensure and promote inclusion out here. And it also augurs well with Bandhan Mutual Fund's, whole philosophy of helping savers to become investor by keeping the, entry point very, very low. So that's how, we look at the minimum application amount, both for lump sum, which is 1,000 rupees in this case, and for SIP is as low as 100 rupees.
Right. Mr. Basu, what I'm also noticing, when you look at the Nifty Alpha volatility, the low volatility 30 index, that seems like, that has actually historically outperformed that broader indices when you look at it. Can you share some bit more in terms of this retail, specifically in terms of risk as well as the adjusted returns? And if you compare that to something like a single factor indices?
Sure. So firstly, I'll deal it with the broader market indices. This particular index has outperformed the Nifty 100 as well as the Nifty Midcap 50, which forms its universe, on a rolling return 3-year, 5-year basis, quite distinctively, right? And quite consistently as well. Now, what is even more heartening to note is that when we compare this index with the standalone factors of alpha as well as low vol, it actually has, been able to deliver superior risk-adjusted return. Now, let's take and compare it with alpha. When we compare a standalone alpha factor with the, alpha low vol 30 index, what we observe that the volatility in this index is 50% lower than the standard, a standalone alpha factor. And the return is reasonable when compared, not as high as alpha, but quite reasonable when compared with alpha. On the other side, let's compare with low volatility. While the volatility is little higher when compared with low volatility, but the return is more than commensurate to that, right? Now, in the process, what do we get? We get a strategy which is, quite better from a risk-adjusted return standpoint across most time period when compared with those individual factors of alpha and low volatility. And that's the reason why I mentioned that it is not alpha plus low volatility, which would make to 2. It is alpha and low vol combined together, which makes it 11.
Okay. Mr. Basu, how does the fund aim to actually provide stability during this market volatility that we're seeing currently? How does that work?
So This inclusion of low vol, as we mentioned that low vol forms an integral part of the strategy, and low vol in fact performs better during market correction or in down cycle. So during periods of market volatility such as what we are witnessing currently, the low volatility part of the strategy ensures that the impact on the downside is kind of in control and reduced. At the same point in time, alpha aspect, which is outperformance vis-a-vis market, ensures that once the market stabilizes and we start seeing a pullback and up move, that factor takes the lead and ensures that the returns are superior. So therefore, during uncertain market scenarios, during volatile period, as well as during periods of up move, this strategic combination of two core and complementary factors of alpha and low volatility ensure that we have a strategy which stands tall across all market scenarios and across all market cycles.
Okay. Mr. Basu, a quick one is in terms of, I want to know, top 3 reasons for investing and, for an investor to look at this fund.
Well, absolutely. The low volatility part of the strategy ensures that the risk reduction and risk optimization is kind of is very well taken into account. On the other side, alpha, which by itself focuses on generating superior return versus the benchmark, ensures that the return maximization aspect is taken into account. And both put together makes a very, very, I would say, pertinent strategy and more importantly, as I mentioned, a tactical strategy at this point in time for investors to look at in one single fund, have the benefit of, higher return with lower volatility. As I mentioned, for a smooth drive, you need the accelerator, which is alpha out here, and you need the brakes to control risk. Low vol is that brake in the strategy, ensuring you have a smooth investment ride.
This is going to be ensuring you have a smooth investment ride, a mix of both, right? You are going to get good returns as well. Volatility, adjusting and managing the risk, as well as there's alpha also. So yes, that is something that will drive the car further. But Mr. Basu, firstly, thank you so much for joining in with us this afternoon on CNBC TV18. It's a pleasure having you on the show and having a quick chat with you on the new fund that is launched by Bandhan. That is a Bandhan Nifty Alpha Volatility 30 Index Fund that is opened up on 8th of January 2025 and will be continuing till 20th of January 2025. This is mainly in terms of an investment objective is the scheme will be replicating the Nifty Alpha Low Volatility 30 Index by investing in securities that are the Nifty in the Nifty Alpha Low Volatility Index. Same productivity. This is going to be a mix of both alpha as well as low volatility index, and obviously this will be adjusting to risk. Now in terms of the pricing also, SIPs can start at rupees 100 and lump sum purchase price is rupees 1000. We spoke about all of this in terms of details with the manager, the Bandhan AMC, Mr. Basu as well in terms of the details. But with that, it's a wrap on this edition of Mutual Fund Corner on CNBC TV18. Thank you so much for tuning in. Up next, you have Closing Bell to take you through the action of the markets in the last hour of trade.
2024 has now become the 9th consecutive year of positive returns for the Indian equities, and that's the record. In fact, 24 was a year of record in many ways, the highest fundraise in a single year, the ever-growing domestic pool, and so on. But the big question is, what is in store for 2025? Will the rally sustain? Will the mid and small cap continue to outperform? These are the questions in the minds of the investors. So now, crystal gazing is always a challenge, but CNBC-TV18 has reached out to the biggest market experts to bring to you an Outlook 2025, the biggest market poll for the new year. In fact, it was a poll across 61 participants, including fund managers, HNIs, as well as institutional dealers. So let's begin with the first and the most important question. What kind of return should investors expect in 2025? Majority of the respondents expect a single to mid double-digit return in 25. Only 11% of the respondents expect a negative return on the Nifty next year. In that case, will the broader markets continue to outperform in 25? Surprisingly, 50% of the respondents believe that 25 will be a year of large caps. Only a small percentage are still betting on micro cap and small cap stocks, which brings to the next big question, and that is the biggest theme to bet on in 2025. Here there is a surprise. First surprise, financial has emerged as the biggest theme to bet on for the next year, and that is despite the macro challenges that the sector is facing and the fact that they have been an underperformer. The other surprise was the stellar outperformer of 24, which was capital goods. That's been considered as the least preferred bet.
While we're seeing Hang Seng, that is holding on to good gains right now, 0.6%.
Resistance comes in at 23,383 and then at 23,490.
The trend is weak, but I think there's a strong case that we see a bit of a bounce, particularly on the headline Nifty index. Company has acquired KSK Mahanadi Power under corporate insolvency resolution process.
Some green at least. Nifty Bank is up about 0.75%. That's clearly the weaker of the two indices.
This year's earnings growth is also relatively muted. And I think some recovery is required.
You know, they've done some changes to the model portfolio and they've identified 11 bottom-up ideas.
Barring some one-off things that might happen quarter to quarter, but the general theme is positive.
What you're seeing now is a little bit of a release of the very tight management of the Rupee.
Sensex is inching towards a 400-point gain.
Food inflation continues to remain stagnant. There is no change on a month-on-month basis. The Nifty is exactly where it is. We left the studios at 1 p.m.
Sharpest strategies, top market trends, unmatched perspectives. The trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell. Broadcasting live from the CNBC-TV18 Motilal Oswal Studios in Mumbai.
Well, we've got a bit of a green out there, and I think that is good to see. This is closing bell, last hour coming up, and the day so far has been pretty okay, all right, little by way of volatility, and broader markets doing much better than at least the Nifty. Banks, which is the beaten of the two indices between the Nifty and the Nifty Bank, is also bouncing pretty nicely. I'm Prashant, with me my colleague Surbhi and Nigel. Guys, hi, good afternoon.
Hi, afternoon, folks. It's good to see some green on the screen, right? And for a change, people haven't rushed in to sell this bounce. I mean, I'm just relieved to see that it's still holding. 60 minutes to go. Don't want to jinx it, but not bad.
Well, that's right. And the Nifty Bank that's been making lower lows and lower highs every day, suddenly it's made a higher low and a higher high. That's a bit of a change in terms of trend. So that's good news because that is the largest constituent of the Nifty, and that's being the biggest underperformer. And what's more encouraging is your portfolio will be feeling good. The Nifty, yes, it's up only around 100 points or thereabouts, but the mid cap and the small cap indices, both of them are outperforming. So after a while, the bulls are feeling the festivities. You know, Pongal, Makar Sankranti, they're saying, yeah, thank God. And that's some good omen.
Bumper harvest, I can't say, but some harvest. I mean, it's...
Tilgol gyan, god bola and god karapan.
Well, feeling better, definitely, as compared to yesterday, because yesterday was painful. Actually, there are individual stock-specific news-related moves as well, and we'll talk about some of them, BSE, etc. But, yesterday everything was sold. Today everything is coming back up a little bit. That's broadly the story that we need to track. So, stronger recovery in the banks index, which has also, of course, fallen more sharply. Both Nifty and the Nifty Bank. The Nifty, by the way, is still some distance away from its first hourly average, which is the 20 hourly average, which is about 23,300 or so. We're at about just under 23,200. Bank Nifty is climbed up above its 20 hourly moving average. So that is sort of also bouncing back, but it's very early, many days of fall, and today you got a bit of a bounce. Mid and small cap indices, the last I checked, anything between 1.7 to 2% gain. Mid cap doing better than small cap space, and it's all, of course, supported, I'm not sure, but at least not hurt by what's happening with the dollar. Maybe at the margin does help. The dollar index is down meaningfully. I think not 0.3, I think it's a little more now, about 0.4, 0.45 odd percent on the dollar index at this point. And that is, of course, on the back of, there was a Bloomberg story which said that the incoming administration may impose tariffs in a staggered kind of way. But that same report also said that that proposal has not been presented to incoming President Trump. So, we've seen what's happened to some of these earlier reports from the Washington Post, etc., and how they've been dissed. So we'll just wait. We'll have to wait out for it. But we're not at 110. We're closer to 109. And I think that is some relief. Rupee.
Oh, absolutely. And then there's the Adani trade. I mean, no explanations behind it, but suddenly there's a massive move on all Adani Group stocks, including the cement majors, ACC and Ambuja. That's Enterprises. That's up about 7.5%. But look at even the others. I mean, Adani Energy Solutions, 13%. There is, like I said, ACC and Ambuja themselves are up between 4-5%. There's Adani Ports, which has been doing really well as well. So that big trade is on. Ports is up about 5.5%, and Adani Power is now up almost 19%. And that's Total Gas on your screen as well. 9%. Massive move on some of these Adani Group stocks. That's one part of it. But anyway, the large cap screen otherwise has been, beyond the Adani trade, has been looking very, very good. HUL is the only disappointment, so to speak. And then there is a bit of a follow through on other IT stocks as well. For instance, Infosys, etc. are also down. Consumer is largely weak, but yeah, that's HUL, consumer and IT. But barring that, the screen's been looking really good. The Bank Nifty, as Nigel's been pointing out, it's been making it's been making higher highs and higher lows. Look at the individual components. SBI is having a great day, 3.5% higher. Look at HDFC Bank up about 1% or so. ICICI Bank is also managing some green, and IndusInd Bank has been one of the best performing stars. You saw the discussion we had with the Bernstein analysts as well. They're quite optimistic, saying perhaps the worst of it in terms of the MFI stress is all in the price. So IndusInd, which is a stock they like, has done really well today. So good looking large caps, but better looking mid caps.
Well, that's right. When some of these stocks, they got pummeled. So they're pulling back some of the losses. NTPC Green, I recall the stock listed, it went all the way to 150, 160. From there, it pulled back 25%. And in the last few minutes, that's moved to upper circuit. So NTPC Green is locked up close to around 10%. Another one is Vare Renewables. That's a smaller one. And the stock has come off, I think, from 3,000 rupees to 1,000 rupees. From there, that one has seen a bit of a bounce. It's Vare Energies. There's another Vare Group company as well. I think there's a technical factor out play. I think the circuit filter got, expanded as well. So that could be another reason why that stock is up close to around 18%. So a few of these stocks are bouncing back, but you need to keep in mind that some of them have seen a very, very sharp correction from the top. So it's actually making up some of those losses. The good news is the Nifty Bank. You'll want the Nifty Bank in the last 60 minutes to hold on to these gains and go home closer to around the 49,000 odd mark, because even from the highs of the day, we've seen it slip close to around 150 points or thereabouts. So keep an eye out on that. Well, let's get in Mitesh Thakkar back with us. Mitesh, what do you make of today's trading action? The follow-through buying is not happening on the Nifty, but the Nifty Bank, that was an underperformer, that's doing an outperformance today, and this market is net short from the FIs. So that could work in our favor as well.
So two factors. One, extremely oversold, and some kind of short covering is happening because of that, especially given the fact that the gap upon both the indices has managed to survive. Though the Nifty isn't very exciting for the time being, but I think at least it's not getting sold off, and the Bank Nifty is leading the way. My sense is that the Nifty could possibly, if it sustains about 23, 180, 190 zones on this spot, then I think 23, 325, 350 is what I'm looking at. And the Bank Nifty, 49,000 was the first pivot. It's tested that, and above that it's 49,700. So maybe it's heading towards 49,700. There will be choppiness because this is still a pullback. But yeah, I think the immediate bias looks like trending with some kind of a positive sentiment.
And what about stocks, Mitesh? Individual names, what are you trading today?
Yeah. So I have a buy on DV's Lab with a stop below 58.90, and a target of 61.80 can be eventually looked at. The other one which I like is Biocon. Disclaimer that I have positions on the call options side, so there's a vested interest. But the stock is sustaining about 378, 380 zones. That's a positive sign. So keep a stop at 378. I think 415, 420 could be the target here.
Okay, all right, Mitesh, got that. Thanks very much. We'll come back to you for some more ideas and more calls in a bit. Let's move on now and look at some of the newsmakers of the day. JSW Energy has been buzzing around right from the morning. The company has won the bid to acquire KSK Mahanadi power plant. Sudarshan is here with the details. Market's quite excited with the prospects of them having this asset. Sudarshan, 6% up now.
That's correct. So JSW Energy has announced that it has received letter of intent on January 13 to acquire KSK Mahanadi Power, and the bid that we assume that it's likely around 16,000 crore rupees. And completion of this deal would be subject to regulatory approvals, and two approvals that company would require are of NCLT and Competition Commission of India. But why is it positive for JSW Energy? So KSK Mahanadi Power has total thermal power generation capacity of 3,600 megawatt, of which 1,800 megawatt plant is under operation and 1,800 megawatt plant is under construction. JSW Energy believes that once the deal is done, it will add, and its thermal generation capacity will increase to 7.5 gigawatt, and it will help company achieve the target that it has set by 2030 of 20 gigawatt, and that would be much before the 2030 that company has targeted. But apart from JSW Energy, this news is positive for two power financiers, and those are PFC and REC. Why? So ahead of before August 2024, total dues of KSK Mahanadi Power that company owed to creditors, including financial creditors, was of almost rupees 32,243 crore. An NCLT order came out in August, and after that company was asked to make the payment, and company made the payment of around rupees 6,000 crore, and after that dues were outstanding dues were of rupees 26,000 crore, of which PFC is likely to get around rupees 3,400 crore and REC is likely to get rupees 2,700 crore. Brokers believe once the deal is done, these companies are likely to get the payment, and that's the reason this news is positive for JSW Energy as well as both PFC and REC, and that's the reason you are seeing a big move in all these three names.
Okay, all right, got it. Thanks very much for that, Sudarshan. So that's JSW Energy hitting the headlines today. We've got Prakash Diwan joining in on the show this afternoon. Prakash, hi. Many stocks to discuss. Let's start with this one because Sudarshan just gave us the details. Any interest in JSW Energy?
Good afternoon, Rupee. So I think very clearly we saw the kind of effort they are making in scaling up their portfolio. Last week also there was news around them acquiring a renewable side of the business unit, and now of course this. But over a period of time, whenever companies go around on an acquisition spree, growing inorganically so rapidly, you have to give them time to execute some of these things. So I think JSW is reaching that stage very soon, and the market will probably look at giving it time rather than kind of lapping it up. Because 60,000 crores is not a small quantum, and the balance sheet will need to be kind of restored to to be able to run that. So, as Sudarshan very rightly pointed out, it's the financiers who are going to actually be benefited, because this is money which was written off, it's come back, gives them more leverage to kind of grow faster. Especially, I like REC. We've spoken about this in the past. It's a boring business, but I think going forward, it's going to definitely stand out as one of the winners.
All right. Yeah. In fact, I understand that REC has already booked the write-backs, while PFC is yet to do that. So for both of them, actually, it will be pretty good news. We'll have to see the quantum, and we'll try to understand more about that. Prakash, good afternoon. Good to see you, Vin. What about Nalco? Today, after a while, you have alumina prices that are down 3.5%, but Nalco is still strong. That's giving you a sense that now the street, they believe that alumina is moved to the lower end of the band. I was looking at the Chinese producers. They have released more supply into the market, which is pushing pressure on alumina prices. And I think there's, one mine also in Indonesia that has started producing. Nalco has corrected from 250 all the way to around 190, but today it's still strong. Your view at these levels?
So I think we were anticipating this bottoming out on the alumina prices. And that's kind of probably a phase. It's not an event. It's going to be a little bit of a long, quarter of sorts that you'll see this happen. But remember, the demand side on alumina is still not tapering in any which way. So even if supply comes back, I'm sure there's enough absorption out there, Nigel. And the other good thing is that the street has started delinking Nalco with just alumina prices. So that's a very positive thing because it's an overall scale that is growing on. Revenue growth that's coming in or likely to come in. The EBITDA is going to be 40% higher than last year. So you have all that salience and it just becomes more attractive at sub 200 levels. Forget about the 250 move and all that. That was a bit too rapid. But I think organically in the next 1 year, it could give you 30-35% from here as well.
All right. No, absolutely. So we'll, of course, have to wait and watch what happens. BSE, by the way, I saw 7.5% gain. So it's cooled off. It's up about 5.5%, but still going strong. Biocon is the other one that we're going to talk about. Is trading up. Vinny's here. There's a brokerage note. Vinny, take us through it.
Absolutely. So we have a positive brokerage note that's come in on Biocon, where HSBC has upgraded the stock and this is to buy. They've raised the target price to 430 rupees per share. Previous target price was 290 rupees per share. Now, obviously, do not forget a couple of days back, Biocon's Malaysia facility, Biocon Biologics Malaysia facility had gotten a clearance coming in from the US FDA, and this was at the VAI, and it is an important facility for the company. So on the back of that, what HSBC is saying that they believe that the company is actually set for an operational turnaround led by the key biosimilar launches as well as the recovery that they're expecting to see from the company in the generic sales. Now, they're seeing multiple triggers that are coming in for the company in terms of earnings growth. Biosimilars and biologic side of the business is expected to start doing well with both the clearances coming in for two of its plants in the recent time, Bangalore as well as Malaysia. And obviously, US FDA clearance for Malaysia unit has improved the GMP, good manufacturing practice overhang that was there for Biocon. Other than that, the launch of generic Aspat for Malaysia from Malaysia is going to be the next driver and growth driver for the company, and that is why they're positive on the stock, and we're seeing Biocon passing in grade.
Okay, all right. That's Biocon. Vinny, one more stock, Sun Pharma, that's been surging around on the back of, I think, a Macquarie note. What is Macquarie saying on Sun?
So absolutely, what we have as a news flow that has actually come in for Sun Pharma. Now, this is Sun Pharma's marketing partner that is there, Almirall, which has revised one of its drug that is there, Ilumya. The peak sales expectation for this drug has been revised upwards. So the revision is now they're expecting euro 30 million, more than euro 30 million sales coming in. And the previous guidance for peak sales from this drug was going to be 250 million. Now, obviously, do not forget the marketing partner that is a company, Almirall, is actually Sun Pharma's partner for this, especially this drug. And that is why it's a big one in terms for Sun Pharma because it markets it in the European region for the company. Now, because of this, do not forget the drug has generated almost a revenue of 153 million euros in the first 9 months of calendar year 2024. So it is a big drug for the company. Sun Pharma had outlicensed this to the company and the marketing company in July 2016. And Macquarie is saying that they are maintaining the outperformance rating for the company because of this. The target price is 2,100 rupees, and the guidance revision they are highlighting represents a cumulative upside that could come in as a potential of 45 to 50 million euros from royalties over the next 5 years. They expect this as a very positive news up move coming in for Sun Pharma in terms of the stock move. And do not forget that Sun Pharma has been a bit of an underperformer versus other pharma companies. So that correction, they believe, is a good entry point to enter Sun Pharma right now.
All right, got that. Thanks very much, Vinny. So two pharma stocks in the news, and Biocon has been getting a sort of a string of positive data points, and the news flow has been so optimistic on the Malaysia facility, and I think now you've got this latest note coming in. Big move on Biocon. Let's pull out maybe a year-to-date chart on Biocon as well. In a market that's been falling relatively, Biocon has been relatively unscathed, you can say. Prakash, any interest, pharma, Biocon or Sun or any other name for that matter?
Oh, lots. So I think 2025, even before it started, we started getting some sort of premonition that pharma is one sector that won't probably let you down for the simple reason that it's resilient, and the CDMO CRAMS segment for India is far more robust as compared to what it was when Donald Trump assumed office last time around. So the tariffs might not impact this segment very negatively. But let me straight away tell you what I like is Syngene out here. If Biocon is getting this whole string of positive news flow based on developments which are extremely favorable to consolidate its position in biologics, Syngene is the vehicle that actually does a lot of that work as well, not just for its parent, but for a lot of other companies. And remember, biotechnology companies in the US had slashed their budgets 2 years back, and that's when Syngene actually went into exile of sorts. But if you see the news flow in the last couple of days, the US biotech companies have made a big comeback. And as soon as that happens, you'll have a lot of order flow coming through for Syngene. And I think it's done its bit. It's, as I said, it was range bound, it's consolidated, and the earnings will probably start growing rapidly from here. Maybe, on a CAGR basis, on a quarter basis, actually, we are already anticipating on the last call. The indications are that, year on year, they'll probably grow about 28-30%. So, that's really positive for a company that's not yet done much, and you're not overpaying for it. So I would definitely want that as a value pick within the pharma complex.
Okay, all right, got that. Prakash, wanted to ask you about a few more names. Kalyan Jewellers, decent numbers, but then in fact, the stock just collapsed, and a lot of rumors. We had them actually on the show, and Mangalam had asked them all the key points with regard to business, with regard to their flying pans, so to call it, where an aeroplane is coming in or a helicopter is coming. They clarified on all of that, and they said that they promised they'll be divesting that one aeroplane. That's happening as well. But, it still was under a lot of pressure. This morning, they'd done a con call, and I think they managed to clear the air. Now, a stock that was 200 rupees higher has come down, drastically in just a week. Today, it's up 4%. Would you buy into this weakness, or do you think the stock has already had a good run, that most of the good news is in the price?
Yeah, I think, what happens is the market is usually not charitable with these kind of, errors of commission made by management, because it tells you that, today it's an aircraft or a private jet that is a moot point. It could be anything else in terms of capital allocation or misallocation, which becomes an issue. So, and you have, fortunately, you have a huge choice in that jewelry space. So, if you look at a TV that very sleepy company has started reviving itself, why wouldn't I buy that? Of course, it's not as big as Kalyan, but at least you're safer in terms of what's going to happen with your money in that sense from a capital allocation. So Kalyan's had its glory run of sorts. So I believe, some of these narrative stories will probably have to kind of go sideways before things look up for them.
Okay, all right, Prakash, we'll leave it there. Thank you very much for joining us. It's a pleasure having you here with us. Well, let's introduce a growth code, a special initiative by Grow and CNBC-TV18 with the aim of empowering investors and traders. Prominent investors and professional traders gather at Grow's Trading Right event on the 9th of November to share their valuable insights and strategies. Here's a snippet of what pro trader Aditya Panchvaria, the co-founder of Fintoric Capital, had to say about limiting risks while trading. Listen in.
मेरा पर्सनल रिकमेंडेशन रहता है कि आप अपना ग्रॉस एक्सपोजर लिमिट कर दो. इन अदर वर्ड्स आप अपना लेवरेज लिमिट कर दो. इंस्टेड ऑफ आप हेज लेने के बजाय अपना लॉट साइज को आप आधा, मतलब 3,25,000 पे एक लॉट चलाओ आप, इंस्टेड ऑफ 75,000 पे एक लॉट चलाने के बजाय. और जैसे जैसे आपका लॉस आ जाए, आपका 5% लॉस हुआ तो उसके बाद आप 3,25,000 के बाद आप 2.5 लाख पे आ जाओ, आप 2 लाख पे आ जाओ, और 5% और लॉस हुआ. इस तरह से आप धीरे धीरे अपना एक्सपोजर बढ़ाते जाओ, क्योंकि अल्टीमेटली मार्केट जब ऊपर जाएगा आप इकट्ठा रिटर्न पूरा सबका निकाल दोगे उनसे भी. प्लस आपको म्यूचुअल फंड्स, एफडीआर का रिटर्न आ भी रहा है, तो आप 6% अगर एफडीज में भी इन्वेस्ट करते हो, फिर ये ऑप्शंस करते हो, तो आप अपना वैसे ही 7-8% तक का तो ड्रॉ आप ऐसे ही ले सकते हो, तो भी आप अपना साल के एंड में 0 पे ही छूटोगे.
We spoke about the returns and the big themes. Now, what's going to drive all these returns? And the near consensus answer is earnings, earnings, and earnings. That's going to be a dominant factor for the Indian equities to outperform going into 2025. There was a small portion who also believe that the Trump policies could be interesting to watch out for. Now, we spoke about the micros and the themes. Let's focus on some of the macros as well. Q2 was a bit of a shocker as far as the GDP figure is concerned. And after that, many on the streets have trimmed down their growth forecast for the country for next year. But will the growth surprise on the upside? We asked that question to majority. Most of them believe that the GDP growth will be between 6.25 to 6.5% in 2025. Only a mere 3% expect the growth to fall below 6%. So that's the big GDP growth forecast. So what's going to drive the GDP growth? And that's where the consensus seems to be, and that is the government spending. 77% of the respondents believe that government spending, which was lackluster in the first half of this year, will pick up in 2025. So that's going to be the big driver as far as the GDP growth is concerned. We had a record year as far as rupee is concerned. So we asked the question as to will that be a spoil sport into 25 as well. Most of the experts believe that the rupee is going to be range between 85 to 87 a dollar, while a small segment expects the currency to appreciate below 85 as well going into 2025. Also, we saw a new RBI governor taking charge, and that the first policy will be in 2025. So we asked the experts what to expect in terms of RBI action. It's a divided house there. 50% believe that the first rate cut from RBI will be in the Q4 of this financial year. However, a small portion believes that the stretch line could be as late as the third quarter of FY26. So that's the RBI action. Indeed, if the RBI has to cut rates, then how much is the rate cut that the street is penciling in? Half of the respondents, which is 50%, believe that the rate cut going into 25 would be at least 50 basis points. So 50 to 75 basis points is what a lot of people are betting on. So that's the rate cut expectation.
Welcome back. So later 2 points up on the Nifty. And of course, a better looking screen if you're looking at the Bank Nifty or the mid-cap index. That's the story. By the way, we've got some exclusive information on the screen on a whole clutch of PSU banks. It seems that they are getting approval for fundraising. This is a story from our colleagues in New Delhi. And also a mandate to sell stakes in 5 PSBs via an OFS. This could be big news. Government willing to sell some stake in PSU banks via the OFS route. It seems that DIPAM has finally given its blessings, and big reactions playing out on those stocks. We will get our colleague Sapna in, I think, on this in just a bit. But this could be, of course, a new lease of life. Some excitement, at least, on PSU stocks.
Point is, look at the prices, right?
Yeah.
I mean, you would have done this 6 months back.
Yeah.
And,
when the market was,
50,
gunning for PSUs, absolutely.
The price would have been 50, 60% higher. That is essentially simply how much more you could have collected by selling the same amount of stock. But that is what is getting done.
And just telling our audience out there, be careful. There's a very, very limited float on all of these names. So just be careful on that front. Extremely limited.
So I don't know who's the merchant banker who's been advising on these sales in terms of timing.
We did that with the budget economy town hall yesterday. Lata and I did that, and I actually, disinvestment for the last couple of years has been absolutely out of off the radar.
Which is when the market has been so hungry for PSU stocks, is willing to lap it up. That's when they didn't sell.
Because the point is, after you do the math, there's only about 80,000, 1 lakh crore odd, which is left to spend. So, अब उस पे सारी चर्चा होती है कि 80 to 1 lakh crore, how can you spend best? Can you give a boost to this? So what can you do? You should raise non-tax revenue, which is one of the major sources is divestment.
Yeah.
But last few years, nothing really has happened. But maybe something will now.
I think that they've been very, very slow on. You would like to see more action, particularly when the markets were rocking. And I'll just give you one example. Hindustan Zinc. Mr. Anil Agarwal said they are taking time.
We'll go in and
I'll come and he diluted before the government. So he took advantage of the price.
I mean, something which, and we've had the biggest bull market in PSU stocks in at least 2 decades, right? I mean, we've not had this kind of a rally. Now, of course, I mean, we just have to look at all these, the listed ones at least, and how much they're off the highs, and all of them are off. PSU Bank Index, by the way, is the biggest loser. I think it's lost about 25-30% of its value from the highs. But this is what is coming through. We'll have Sapna join us a little later. Stocks, of course, are jumping up as we speak.
24%. The PSE index is 24% off.
The PSU Bank Index is down even more.
Yeah, that would be even more.
And I think we should wait by, because now HDFC AMC's numbers as well are hitting the screen. So we'll just get those numbers up for you in just a bit from now. That's another stock to keep on our radar. Just try to pull out some numbers.
Let's get the discussion going, and we'll come back with HDFC AMC as well. Let's get Rashi Talwar, portfolio partner and portfolio manager at Ashmore. Rashi, good to have you with us here. Good afternoon. Thank you for joining us. Sapna will take us through this exclusive which is coming in, OFS, in a few PSU banks, government raising resources. Your thoughts?
Should have been done a little while ago, I think, but let's just wait for the details and all of the fine print to come out. I think Nigel's point is very valid, that these stocks are typically ones with extremely low liquidity. So I think, in general, people should be careful, not just jump in based on some news that comes out.
There's Punjab Sind Bank, there's IOB, UCO, Central Bank, Bank of Maharashtra.
And Sapna is just clarifying that amount is, the OFS is 2,000 crores for each of the banks. They're looking to sell,
so there's basically
that much.
So 10,000 crores, and there are five of them. So that's essentially what's coming through.
But Rashi, expand on the point further. Not just on these 5 stocks, but in general, what is your stance on PSUs? It was a mother of all bull runs, like Prashant rightly said. Now they're off. Would you venture in again? I don't know if you have some exposure already to PSUs in general and PSU banks. What's your stance?
So, so we don't really have much exposure at this point of time. And our style of investing typically is to look at some, we discussed this the last time when I was there with you, is to look at where we see price dislocations, right? So I think given what we do, this really doesn't fall into that kind of style of investing per se, where we're looking at price dislocations and we're looking for opportunities where stock prices are significantly below what we believe is the intrinsic value. So not there right now. Not that I haven't been there in the past, but generally a space which, we don't tread in pretty easily.
Yeah, absolutely. No, I remember that conversation we had in our Diwali special show, that your style is that you look for significant price dislocations where the narratives and the price is simply not running away, and that's the space you look to play. I'm going to come back. We're going to ask you about where you see those dislocations now, but let's just complete the story on PSU divestment, because it seems to be happening after a long gap. Sapna is here with the details. Sapna, the stocks are flying away. What all are you picking up?
So basically, of course, the entire effort is to, bring the government stake down, in the remaining 4 to 5 banks, especially 4 among the 5, because if you look at Bank of Maharashtra, it has been doing QIP quite, they have done fair bit in the previous financial year, also some bit. So the focus is more on UCO, Central Bank, IOB, and Punjab and Sind Bank. These are the banks which have not been doing much of fundraise since quite some time. So it's a twofold strategy. One, of course, via QIP, automatically the government stake comes down. So we give to understand somewhere around 2,000 crores each actually has been okayed for each of these banks. And it's likely that these 4 that I just mentioned are likely to do some small tranches of QIP starting from the current quarter. So individually 2,000 odd crores for each of the banks, but the 4 of them that I just mentioned, they should be starting ideally in the current quarter with some small tranches. That's one. The second thing is that, basically a government stake sale in the PSBs, the administrative ministry, or rather the administrative department and Department of Financial Services. So we give to understand that now Deepam, which handles the entire work actually, they have been given some kind of a mandate to go ahead with stake sale in these 5 banks, which is basically Bank of Maharashtra, UCO Bank, Central Bank, IOB, Punjab and Sind Bank. So that's where the situation is. Now, whether Deepam will do that, not do that, will depend on the market situation. But, in principle, mandate is there. So it's a twofold strategy. As we are aware, this has been going on since quite some time. These banks have been given an extension by the government up to August 1, 2026 to try and bring the government equity below that 75% benchmark that we are looking at.
Oh, they're a long way off from it right now. Sapna, we put out the data as well. the point on low float, barring Bank of Maharashtra, which is at around 79%, we can see the others. The government holding right now is ranging from 93% to as high as 98% plus in some of these names. Thank you very much, Sapna, for getting us the story. A lot of excitement on those stocks. But of course, that low float point that Nigel made is well taken. So that's the story on PSUs. Now, Rashi, coming back to now, the dislocations, which is your style of investing. Well, earlier we were in a market where there was hardly any dislocation. You could argue maybe there is this, maybe staples that no one wants to touch, or maybe some of the bank stocks. But now we've been in the midst of a time and price correction for several months now. Where do you see opportunity?
So, I think opportunity is starting to emerge in a bunch of places. And if you ask me, I do believe that the next 2 or 3 quarters at least the next 2 quarters are going to be really volatile. We have so much changing globally, so much uncertainty as to what the Fed is going to do, what RBI will do as a result, what's going to happen to the rupee, what's really going on, a whole bunch of factors. So I think all of these things, you can be certain of one thing for sure, and that's volatility. As far as mid-cap and small-cap earnings estimates go, I think we've still not seen them really get cut. I think those cuts are ahead, and the current quarter and the next quarter, we will see some more cuts on mid-cap and small-cap earnings, and I'm hoping there we see the opportunity emerge. Even now, we're seeing more opportunity in the large-cap space than the mid and small space. The mid and small space, mid-caps are still trading at 30 times one-year forward earnings, significantly ahead of 2 standard deviations versus the average. So I see opportunities more in the larger space rather than the small and mid space, and I think those opportunities will come, and they're going to come pretty soon. We just have a very uncertain, volatile time ahead, and that works when you're looking to pick stocks.
Well, hi Rashi, good afternoon, good to see you. And Rashi, the small and mid caps, they re-rated, but that was backed by earnings, because the earnings growth as well was better. Now the problem is that the earnings growth could lag the large caps, and that's what could give an additional reason for large caps to outperform, given valuations, given the earnings that we're likely to see as well between the two. Let's get a little bit more specific though on the large caps. What do you like? Tech, we've got a couple of numbers that have come out. And it appears at least we'll see some growth in FY26, some kind of visibility out there that discretionary spends will pick up as well. While banks that everyone says that valuation-wise, well, they are looking attractive. But it seems that has actually been the recent big underperformer. Your take on particularly these two?
So, Nigel, the difference is you can't look at it as a sector-wide story, right? Even tech is going to play out very stock-specific in this earnings season. One thing we know for sure, that after a long lull, we've started to see order flow come through in the US, and people actually go in and place the orders with these guys. But at the same time, you're going to see a very different margin profile across the companies. You're going to see some of them which have weaker numbers because they're either losing a client, and it's going to be stock specific. So yes, tech is a sector we do have an overweight on and we are positive on, but I think you have to be very specific in terms of what you own. Same thing with the financials. I've been saying this for a while, large private sector banks, because for the last 8 months, we've been really worried about the asset quality cycle, especially in the urban, retail, unsecured space, credit card space. So, a smaller bank, a smaller private sector bank, more leverage to say credit cards or MFI or anything will not play out in the same way as a larger one. And you are absolutely right. On the upcycle, the small and mid companies have the ability to beat earnings or beat their large cap counterparts on earnings because they have more leverage to play out. But the same thing works in the negative when things are going down. So large cap earnings do, come in better than the small and the mid cap stocks. And that's exactly what my point is, that we haven't seen that happen in the mid and small as yet. So the earnings cuts to consensus have still not happened.
Rashi, I just want to ask you one more point with regard to the financialization theme. here in India. And that's likely to have a big runway. Some of these stocks, they ran ahead of themselves. Case in point being a BSE that ran ahead, and then in fact we saw a sharp pullback. But yet again, in the last few days when the markets have pulled back as well, that's closer to a 52-week high. What do you like from this space? We had the management of Anand Rathi that joined us earlier today. Tomorrow we'll have Angel One as well. Some of these stocks have come in for profit taking. HDFC EMC a few minutes ago came out with a set of numbers. That one's moved to the low point of the day. So from this financialization theme, what do you like?
So, we've picked commodity exchange very early, and that's done really well, and we continue to like that a lot. I think you pick your bets where you feel that there is. We saw a price dislocation in it when you had, they went through their own issues with their tech space, and that provided an opportunity. You're absolutely right. A lot of these stocks, and it's not just the financialization space. Pick EMS space, right? Some of them are trading at 100 times earnings or 70 times earnings, and I don't believe it's the right time to invest in them.
Okay, so valuation is a big concern in some of these spaces. All right, Rashi, good to have you on. Next time we'll try and get your inputs on more specific niche pockets where you see those dislocations, price dislocations, perhaps. Thank you for being with us today. Well, on that note, let's quickly move on to some global opinion. This is coming in from Ruchir Sharma, chairman at Rockefeller International. He spoke about his expectations from Trump's second term as president. He believes that investors are overestimating the development. He also finds that the anti-China sentiment has reached its extreme. Take a look.
Well, I'm in the camp which thinks that we're overestimating the importance of the next president, and also the fact that the way that he will his policies will play out. I think that that is also being misread. Just two reasons why. One, that if you look back at his first term, it's worth keeping in mind that even though he had so much negativity against China, the best performing equity market in the world during his first term was the Chinese market, if you look at the MSCI China. Secondly, that when he came to power in 2017, just before that, after he won the election, a lot of the financial community was very negative about what he would bring. The initial knee-jerk reaction was the equities sold off, and people expected a lot of volatility. Instead, what we got was one of the least volatile years in history for the US stock market in 2017. I've been a big bear on China, as you know. I've written so extensively about, the fact that, why I'm bearish on China, given the problems of demographics and problems of debt. But what I find very curious now is that those very arguments that I have laid out all these years in my writings and in books, those arguments are now being quoted back to me and have become so mainstream. And my point here is not the fact that the Chinese economy is set to revive in any big way, but the fact that the negativity about China has become almost extreme. And that's also reflected in the equity market valuations in China. That just look at a stock like BYD, which is one of the leading producers of EVs around the world, that it trades at a fraction of the valuation of, let's say, a Tesla, even though BYD sells many more cars than Tesla sells and has a profitability that is higher than that of Tesla. So the negativity about China, is just that being a case in point, to me has become extreme. And I'd say that there are diamonds to be found in the rough. The economy has been growing very rapidly, and there are two main factors for it. One, obviously, is the AI boom, which we all recognize and appreciate America's edge on it. But the second part is the deficit, which is that America is running a budget deficit today of over 6% of GDP, which is about 5 times higher than it is run in the past when it has a similarly low unemployment level. So the fact that you're running such a massive deficit when you have close to full employment, I think is an unsustainable situation. And so America's deficit numbers today are way higher than any other developed country, as you know, or at least on average. And in countries from France to UK, we have seen as to how that has come to bite. And I think that this year in America too, if Trump in particular tries to push any more stimulus packages through tax cuts, I think the bond market is going to revolt, and we're already seeing the impact of higher rates in terms of at least having some dampening impact on equities.
In fact, 24 was a very volatile year. We had a budget, we had general elections, multiple state elections, and so on and so on. But 25 could be a year of moderate returns, but the expectation is that the positive returns would continue going into 25 as well. That's the big poll from CNBC-TV18.
India is in vogue for a number of international brands this season. Rupee Upadhyay, CNBC-TV18, Mumbai. Hello, I'm Rupee Upadhyay and I am going to be joined by trailblazers who are transforming the banking and finance sector in India and around the world, only on CNBC-TV18.
Celebrating 25 years of CNBC-TV18.
From sharp insights in the political arena to all the excitement from the world of sports. We are here at the CNBC-TV18 budget headquarters as we've done for the last 25 years.
Celebrating 25 years of CNBC-TV18.
Welcome back. Markets holding in the green, but not a convincing uptake, as you would have to say. The Nifty Bank as well has now come off close to 300 points from the high point of the day. But green, we'll take green after a while. Nimesh joins us to help us out with what he's picking up in terms of dealing rooms. Nimesh, what are you picking up? Flows are better, or is it just a pure short covering bounce?
Extremely oversold levels. It's nevertheless just a pullback. There is no big participation from the FIs on the buy side. In fact, it's on the sell side. Having said that, the good part is that the mid caps have recovered very sharply today. So the mid cap index is up over 2%. A lot of individual names have seen a sharp pullback from the very extremely oversold and those kind of levels. So that's the thing. Even in the large cap names, well, the Nifty is just up 80 odd points. A lot of large cap names too have seen a sharp pullback. So is the case with the Adani pack. That's rallying pretty hard. A lot of the PSU names have rallied today from the extremely oversold level. So looks like it's more of a short covering dead cat bounce and not much on the buy side. In fact, the buy sell ratio still seems to be 1:2 on the sell side. And today, for a change, I'm getting a sense that in the broader markets, the FIs are participating on the sell side. So there are a lot of names where FIs are looking to sell the mid cap stocks in cash mid cap stocks in today's market. So looks like it's an opportunity to sell this kind of illiquid cash names from the larger institutions. Technically, we are still below that crucial support of 2300. In that sense, 22,800, 900 seems to be a very crucial support to watch out on the downside. So that's a technical level. But today, from a flow perspective, it's still FIs are still better sellers and close to 1:2 on the sell side.
All right, Nimesh, in terms of specific stocks, what are you picking up?
Well, so the first name on my list today is NTPC. Well, the stock has recovered in today's trade, up 3%. But I guess the selling pressure continues from the larger FIs. So a very large FI holder has been a big aggressive seller in NTPC of late, and that selling continues in today's market as well. The second is a couple of stocks where there is buying interest. Zomato has seen a bit of a buying interest after the recent correction. And Tata Consumer stands out for me today because after a very long time, there seems to be some interest back from larger FIs in buying into Tata Consumer. So that's why it's part of my list. The third stock is Mazgaon Dock. Well, the stock is recorded in today's market. It's up 8%. Volumes are higher on the higher side. There is a buzz of a large order win for the company. But do remember, while Sapna also highlighted that the government is looking for some OFS, and I picked up this that maybe there could be a supply in Mazgaon Dock. The government holding is still 84.8% in Mazgaon, so there could be an OFS very soon in that particular name. And the last is Bharti Airtel. While the stock has been consolidating, we saw that Bernstein adding back Bharti Airtel into the model portfolio. But the buzz is that there could be a large block deal in Bharti very soon. Potentially, the large FDI holder could be a seller in Bharti via block deal.
Okay, all right. Nimish, thank you very much for that. So those are individual names that we'll keep an eye out on and look at. That order from Mazgaon should be interesting. We'll invite the management over as well to talk about that and, of course, business per se. Mitesh is with us with what to buy or sell today for a reverse trade tomorrow. Mitesh, what's coming up on your list?
Prashant, the way HCL Tech has fallen, I think the way it's closing, good chance that we'll see continuation. So take a stop at 1824, look for targets of 1790 here. While Maruti is something which I like, it's given good reversals. So BTSC there, keep a stop below levels of 11720, look for 11785 as the target.
Any thoughts on this Mazgaon chartically, Mitesh? I mean, has been range now for many months, almost 6-7 months. Yeah.
In fact, I was just looking at the chart when Nimesh was discussing the stock. One is bounced back from near the 200 average area, which is around 90, which is today at 1990, and yesterday it made a low of around 2005. The stock, as of now, looks like giving a bounce back, but if it can sustain above levels of 2260, 2280, good chance that we are looking at 2410 to about 2430 on the upside, and beyond that, I think the stock, if that breakout happens, and there's certainly a good chance of that, then I'm looking at a new high. So I'll wait out for the stock to get past 22, 50, 60, and then start adding the position slowly.
And all the Adani Group stocks, Mitesh, they're all fallen very. There's no news, but just, everything has fallen quite a bit. So there's sharp bounces, right? Power is up some 18%. Anything stands out to you?
So Adani Green is something which has come on a lot purely because of simple, chartical pattern or technical pattern, you can put it that way. Adani Green, if you look at the price history, it made a closing of around 898 on the 26th of November, and yesterday the closing was around 885. So technically looks like a double bottom kind of formation. It's just started reversing from there, so I think slowly can be accumulated. First target is around 1100, and once it clears that, I would even look at 1220, and in a good case scenario, 1345.
Okay, all right, Mitesh, thanks for that. So just a few names and how they're looking chart-wise. Well, let's talk about the insurance space now. This is a CNBC-TV18 exclusive. Sources tell us that parent entities of large insurers are likely to submit public listing plans with their regulators soon. That is the IRDAI, and this is going to happen very soon. Yash is here with details. Yash, take it away.
Well, Prashant, as you rightly pointed out, parent entities of particularly large life and general insurance companies are expected to submit the public listing plans of their insurance subsidiaries with the insurance regulator by January 31st. Which are these parent entities? HDFC Bank, Bajaj Finserv, Tata Capital, SBI. These are the entities which are likely to submit the public listing plan for the insurance subsidiaries. In fact, what we've been picking up is that the insurance regulator, IRDAI, had met the chiefs of some of these parent entities very recently to speak to them about their plans for listing their insurance subsidiaries. And in response to that, after the discussions, these parent entities have submitted to the regulator that they will be giving that listing plan soon, in fact, as soon as by the end of this month. Just to point out the insurance subsidiaries, the large subsidiaries that we are talking about, Bajaj Finserv's both insurance subsidiaries, Allianz Life as well as Allianz General, are unlisted. Tata Capital's unlisted insurance subsidiary is Tata AIA Life. HDFC Bank's unlisted subsidiary is HDFC Ergo. SBI's unlisted subsidiary is SBI General. So, of course, a listing plan with respect to all these large life and general insurance companies could be submitted very soon. The chairperson, just to highlight, in an old interview just about 2 months ago given to us, had alluded to this fact, saying that IRDAI is looking at age and size of insurers to draw out a list of players which are ready for IPO. They will have more intense discussions with these players, and this is exactly what has materialized.
Okay, all right. Got that, Yash. Thanks very much for the details there. That's an interesting story with respect to insurers. We'll take a break right now, come back with more on the markets in just a bit. It's been over 2 decades of tracking the global power shifts at the World Economic Forum. Starting from our first story reported 20 years ago to last year's groundbreaking coverage of the world's most important economic event. From discovering era-defining ideas to connecting you with the world's visionary thinkers and doers. From decoding blueprints for growth to driving collaboration to make a better future. We've been bringing you a wealth of information through 20 seasons. Tune in to Davos Diaries at Davos 2025, live and exclusive on India's most trusted business news platform, CNBC-TV18.
The markets are betting big on affordable housing. You look at the kind of stocks that have risen.
We are stepping into our Silver Jubilee year, our 25th year, and we wanted to have the best of India Inc. with us.
Celebrating 25 years of CNBC-TV18.
Make informed decisions with comprehensive analysis on the go.
Strengthen your portfolio with real-time market updates on the go. Create effective strategies with insightful expert opinions on the go.
How about listening to global market maestros before crafting your investment strategy? How about getting deep insights into their businesses from top Indian honchos before putting your money on the line? How about making every trading day profitable with strategies from the market masters, macro pundits and chart wizards? Only one show gives you a head start to your trading day. Get ready to profit. Get ready for business with Bajar at these times on CNBC-TV18 and CNBC-TV18.com.
What does it take to build India's largest startup platform? It takes a journey of starting out as an unknown and ending up as unforgettable. It takes more than 2 decades of celebrating the most influential and influencing the most celebrated entrepreneurs. From chronicling the stories of India's startup universe to becoming a success story in itself, as India's longest running show on startups and entrepreneurship, celebrating 21 action-packed years of building India's biggest startup community. Young Turks at 21, only on CNBC-TV18.
Okay, just 5 minutes to go for market closing. Jay Bala is now with us of cashthechaos.com. Jay, good to have you with us here. You're saying the fall may take a bit of a breather. Explain that with levels.
Yeah, that's right, Prashant. See, the market is a bit oversold and it's come to a very important support. And like I pointed out last week, it did break the November low of 23,263. But the important support is about 22,600. I don't know, 23,000. It's 54 and change that we saw yesterday. That's the final. Probably one more low. Post that, I see a breather coming for the market. That takes the market to somewhere close to about 23,600 to 23,900. And the support, the important support below the 23,000 levels is 22,600. But the higher time frame objective of the June 4th low of 21,280, that remains the focus for the market when the market pulls back.
So immediately is what, down or up? First, another fresh low and then a bounce.
Yeah, very little downside below yesterday's low, and tradable rally for intraday to swing traders to about 23,600, and then bigger sell-off to about 21,280.
What time frame?
We are looking at this market, as I pointed out a couple of weeks back. I have an important time pivot on the 23rd of January and also 18th of February. So anticipate the market to drop to the June 4th low somewhere close to one of these dates. So, it's just about a couple of weeks.
Jay, must congratulate you, really. I remember when I think it was a couple of months back when you first called out the possibility of the June 4 low getting tested. It seemed completely sort of out of whack. It was beyond the realm of imagination, but look at where we are today. So the way things have played out. So kudos on that. Let's get down to some trades then. Since you're saying that, we'll probably have a bit of a dip to yesterday's low, then we'll have a bounce to, 23,400, you're saying, right? And then and then the next bigger leg down. So some trades that one can work with. Will you play for anything on the upside for this small bounce, or will you just wait for the bigger downtrend to resume?
Yeah, the problem is, we attempted some longs in the last few weeks, and they generally tend to, either meander or tend to fail. So, if you're going to attempt longs, it has to be very small, like I've been pointing that out. And so I would rather wait for the bounce to come through and then short. I have two shorts today. Even that, only one of them is a high confidence trade. One of them is a low confidence trade. The Titan is a more higher confidence trade. Here too, I would advocate, half your normal position sizing. An objective of about 3,000. If it breaks 30.50, it will clock a double top. So, one can hold on if it breaks 30.50. And the objective right now is 3,000. It can expand if it breaks 30.50. And the stop loss is 35.76. We had a short on L&T Technologies in November, and it's got nothing to do with the 90 hours. But the short we had about it was about L&T Technologies was about 5,300, and the objective was 4,600. It reached those levels, and I'm reiterating the view. It's not bottomed at 4,600 and change. A stop loss at about 50.25 with a price objective of 4,200. It can probably even drop to about 3,900. So but this is a low confidence zone because we already shorted this in November.
Now, Jay, the stock price of L&T is 3,500 rupees. So, what is the view on that one?
Yeah,
the L&T Tech numbers we have stop loss at 5,025. Objective is 4,200. But on L&T as well, you wanted to give us some numbers besides the 90 hours. You want to give us some levels?
Yeah, Nigel. The question in front of the Danish Prince Hamlet was to be or not to be, but the question in front of people in L&T seems to be to stare or not to stare. So I would say, not only just stare, bring you the whole package, take on the romance and be with the family more than 90 hours. I pointed out last week that L&T is poised on a long-term trend line and is breaking below it, and it's come down below that. So 35.50 is an important resistance for L&T. And, as long as it stays below it, I think it's heading much lower.
On L&T, by the way, just a side piece of info, I think two of the senior members of the HR team, two senior lady members, they've come out in support of Mr. Subramaniam. I'm not sure how the L&T quarterly conversations and calls will happen on the business, on just the numbers, with so much of 90 hours going around. But okay, anyway, very quickly on the yield, the US 10-year yield and the dollar, which have been relentless. Today, they've taken a pause. What do you see ahead? Just very quickly before we get into the market close, Jay.
Yeah, I see the yields easing off a bit, and then somewhere about mid 450s, and then maintain the trajectory higher. The dollar index again, if it has to pull back from 110, if it doesn't, it's heading to a much quicker and higher move past 112 and 113. I don't anticipate that. That's not the base case. I'm anticipating a pullback to about 107 to 105.
Okay, all right, got it. The bell has gone. Let's quickly recap the day. Relief for the bulls, 23,200. It's back on the board. That's a 120-point gain. The mid-cap index has done even better. Pullback there, 2.7% higher. Ports are up between 5 and 7%. There's been traction across the board on stocks like Hindalco and Tata Steel. Also JSW Steel. So metals doing really well. NTPC, BEL, State Bank of India. A lot of the PSUs have pulled back. BPCL as well. ONGC. So good day for PSUs. On the downside, on the large cap screen, the biggest headline obviously was HCL Tech because of the guidance. 8.5%, actually 9% gone from HCL Tech. It took down the others like TCS and Infosys down with it. And finally, consumer stocks have been slightly weak. HUL down about 3.5%. Britannia also on the lower side. So that's the large cap traction. A very quick mention on the mid cap screen would be stocks like, again, a lot of the Adani names like Adani Power, Adani Energy Solutions. Biocon had a very good day. BSC on the back of optimistic brokerage commentary, 5.5% on the higher side. So all in all, a good day for the bulls. We'll take your leave on closing bell on that note, but don't go away because Nigel and I are right here. We'll pick it up on Markets Forward in just a moment.
CNBC-TV18.com. CNBC-TV18's most comprehensive and award-winning news show, India Business Hour, drops first on YouTube. So get the first access to the most influential architects of policies and politics, the key newsmakers of the day. Discover the big themes as we decode the business of markets, macros, and more. Be the first to go to the heart of all the top stories that drive the day's agenda. Catch the award-winning India Business Hour live every night on YouTube with me, Shireen Bhatt.
India Business Hour live on YouTube at CNBC TV18 weeknights at 7 p.m.
So you've been playing international level badminton for almost 15 or more than 15 years now. Do you feel it also defines who you are as a player now, how you've matured as...
When you're right there, you know, when you stand and people, when they look up to you, they also need to understand that, yes, you know, she has done a lot for the country. And that itself shows that how confident you are when it comes to the way you are, the way you show up, the way you prepare and the way you stand yourself in terms of, let's say, when it comes to style, when it comes to your personality, when it comes to your confidence levels. It is very important.
Right.
Yeah.
You know, when you're speaking about your career, one thing when I was hearing you speak, how would you define a winning mindset, both on court and in life?
I think it's very important to believe yourself. I think that itself defines who you are, what you are, and what you stand for, whether if it's on or off court. I know people might say that, you know, you've been very successful, what else you need in life? But I think to get till there itself was a tough task, but I have been very fortunate to have people...
The market rebounds from 7-month low levels led by a sharp recovery in mid-caps and financials. The rupee remains near record lows on strengthening dollar and weak FI inflows. Crude too is near a 4-month high as the markets weigh Russia sanctions impact.
Tech giant HCL Tech tanks despite reporting an in-line third quarter. But no changes to the midpoint of the organic growth guidance for the year disappoint the street. Nuvama downgrades the stock to a hold while CLSA and Jefferies maintain their hold rating. The management expects fourth quarter margins to be marginally lower than the third quarter.
BSE surges after Jefferies upgrades the stock and sets the target price at 5,250 rupees. Angel One and Anand Rathi were under pressure owing to the third quarter numbers. JSW Energy stock jumps over KSK Mahanadi power plant acquisition. Hello and welcome to a fresh edition of Markets Forward, your go-to show. We'll tell you all went on today in trading action and set you up for tomorrow. I'm Nigel and with me is Surbhi. Surbhi, finally Some green somewhere on the screen. Well, I'll tell you what, the bulls will take it with both hands.
Absolutely, and they could, hold on to it today. The bears didn't manage to, shake the bulls and claw their way back in. That was a good aspect of trade, and I think there was a relief rally playing out pretty much throughout the world, and India took part in that. So it was a pretty decent day after a long time.
Well, that's right. And since, it was Makar Sankranti as well as Pongal, there was a lot of God bola, ani karapi. So that was good. The festive spirit.
The festive cheer
did come in for the bulls at least. Some green on the screen. Well, the bulls were delighted. First of all, we started off trade with the global cues fairly positive from an India market perspective. The dollar index, it pulled back a little bit. The crude oil prices were a little bit weakish, and the 10-year yield was more or less unmoved. These three, the troika, so to say, was well behaved. So that's why, in fact, the bulls were quite happy with regard to the overnight cues that did come in. We'll try to get in some of those. The Nifty bounced back in today's trading session and ended with a gain of closer around 100 points. The bigger bounce, though, came in from the Nifty Bank. That outperformed from oversold levels in trade. So big bounce is what we saw in the Nifty Bank, and after a while, it made higher highs and higher lows as well. It moved closer to around that 49,000 odd mark. But your portfolio will be feeling better because it's not the bounce that you saw just on the Nifty or the Nifty Bank. The mid and the small cap indices, they did far better. There was an outperformance that came in from there, and close to 4 stocks advanced for every 1 stock that was declining. Wow, the bulls will be breathing a sigh of relief to see some green, to see their portfolios today. After a few days, you had the breadth of the market that was in favor of the number of stocks advancing.
No, absolutely. And not only across market capitalization, even across sectors. But barring tech, where there was an issue because of the way the market reacted to HCL Tech, barring that segment, most of the other parts of the market did well. And PSUs got turbocharged, particularly PSU banks, because towards the end of trade, our colleagues from Delhi came out with a report on possible divestment in a couple of these PSU names. So the PSU banking index, look at that, 4% surge on the PSU banking index. And individual stocks where this divestment might happen, they were flying 5, 10, 15%, and we'll tell you about that as we go along. So here's the lineup that we have for you today. We'll get you all the key movers and shakers of the day. Hormaz will join in to give us a stock-specific account of the day. And then we turn the spotlight, of course, on HCL Tech. So why was the market so disappointed that the stock pulled down almost 10% after the numbers? Other stocks today include BSE, Angel One, and JSW Energy, all of them in news. We'll tell you why. And then, of course, we'll, look at some of the key earnings and the events to watch tomorrow as well. But first, let's talk about today's shades of green. It's over to Hormaz.
A slow, tiring, directionless day for the benchmark index, but the mid caps and the small caps would be heaving a sigh of relief, recovering at least half of what they lost on Monday. But as Nigel mentioned, it was a good bola day, but PSU banks, and especially these ones, had a very good day today, considering the CNBC-TV18 news break and the impact you could see on the share prices. 15 to 20% higher on all of these names after that QIP news break from CNBC-TV18. And the Adani Group stocks too were in focus today, led by Adani Power and Adani Green Energy and Adani Energy Solutions as well. Those were the ones that saw double-digit gains. And the two Nifty names, Adani Enterprises and Adani Ports, also had a good day of 5 to 7%. The stocks that felt the earnings impact, of course, you spoke of HCL Tech. We'll talk about it more as the show goes by as well. Top Nifty loser, Angel One as well. It was a volatile day for Angel One after the management commentary as well on that one-time revenue impact. Anand Rathi was cushioned by that bonus issue announcement. Den Networks too had a choppy day, and HDFC AMC, after the announcement that came in towards closing, fell to the lows of the day but recovered equally fast, ending 2% higher. The news makers today, aside of the PSU banks, were JSW Energy, of course, and the relative impact that it had on both REC and PFC. Piramal Enterprises ending at the high point of the day, and United Spirits conversely ending at the low point of the day, 5% lower there on that stock. And lastly, stocks that did well on the back of strong volumes, it was these electric bus manufacturing companies that did very well, be it JBM Auto, be it the likes of Electra Green Tech, and Shriram Finance and CG Power too had a good day at the office in today's trading session. Back to you guys.
All right, thanks a lot for that, Hormuz. So, well, those are the top stock movers. And let's get in our experts. We have Jay Bala, who will help us out with the technicals, and Mayuresh Joshi as well. Hi, gentlemen. Thanks a lot for joining in. Jay, you go first. You have been spot on from, I think, 25,000 plus levels. You have been telling us you're a little bit cautious on the markets, and you're talking about the lows that we saw in mid-2024. How are you feeling now about the markets? A bounce today? How much can it stretch on the upside from here?
Yeah, thanks, Nigel. The market's got a little bit of upside to work with, probably a very short-term low, intra-week low, and then recover to about 23,600 to 23,900. That's the thesis I'm working with. So once again, as the market bounces, it'll be an opportunity to sell. And I mean, you've spoken about a Nifty PSU index just now. I think it's come to a very important support at about 5,800, and if it can manage to hold, it has got some potential. But looking at the heaviest weight within the PSU named SBI, it doesn't look good. So probably I anticipate 5,800 to break for the Nifty PSU index. So I see a very deep cut potential for SBI, somewhere about 500 to mid 400. So I will be very cautious about the bounce, but it's still not at a return in stone. I mean, nothing is, but we'll watch for the bounce. The character of the bounce will tell us and give us more clues.
Okay, all right, let's focus on the top loser today. HCL Tech was down close to 9%, marking its biggest fall in the last 10 years. Well, the numbers were more or less in line, but the street seemed to have wanted something more from these numbers. Rima's here to analyze the numbers and tell us what a brokerage is making of this tech giant. Rima?
Well, you know, what's causing the stock to fall is the positioning that investors went into going into HCL Tech's numbers. Last year, HCL Tech rallied 30%, while its peers say TCS was up only about 9%. HCL Tech's PE re-rated by 20%, and by the end of it, HCL Tech was actually trading at a premium to TCS and Infosys. So that's the reason why it went in with very high expectations, and the numbers failed to meet that. So the numbers in Q3 were a miss on the company's top line. The revenue growth was at 3.8%, lower than consensus expectations of 4.1%. Margins were in line, so no beat over there. Q4 guidance, the implied guidance on the top line, because the company has held on to its, given the tweaks to the full year revenue guidance, the Q4 implied guidance is minus 1.3 to plus 0.6%. So no acceleration seen in Q4 growth. The company also said that Q4 margins will be slightly lower than Q3 margins. Also remember, the company has a lower exposure to BFS, Banking and Financial Services vertical, which is where we've seen the maximum pickup in discretionary spending. Brokerages, now Kotak has cut the FY25 to FY27 dollar revenue estimates by 1 to 4%. They say the stock trades at full valuations. They've got a reduced call. CLSA, Jefferies and Morgan Stanley, all of them have an equal weight or a hold call, again on the back of the re-rating that we've seen and the valuations HCL Tech is trading at. Nomura, though, is still bullish, buy call with a target price of 2,000 rupees. So in a nutshell, the numbers failed to excite the street. There were a few misses in terms of the fact that the company didn't raise the upper end of the revenue guidance. Q3 was a miss on the top line, and plus full valuations and the recent run-up in the stock and outperformance. All these are reasons why the stock is under severe pressure today.
Okay, all right, Rima, thanks very much. We, of course, caught up with the HCL Tech management earlier today. The company is projecting strong overall growth for the fourth quarter. However, on the margin front, they do anticipate a slight dip compared to Q3.
I think the way you should interpret this is, every vertical has some dynamics that plays into every quarter. But is the new additions adequate enough to kind of offset some of those reductions is what we should see. We are quite positive of an all-round growth in Q4.
Impact is going to be somewhere between 50 to 60 basis point. Yes, the margins in next quarter are going to be slightly lower than Q3 because Q3 has an impact of seasonality of the software. That's the only variation I can see. Otherwise, rest I think it should be fine.
I think there is a good momentum in a number of small deals, and that has a potential to convert to revenue quicker. Some of the large deals conversions continue to be a little slow, but we expect that to pick up with some of the uncertainties behind us. We think the large deal momentum should come back in this quarter and maybe Q1 of the next financial year. All verticals, it looks good. And maybe a little bit in energy and utility, some softness, but financial services is good. Tech vertical is looking good. Telecom also, there is a lot of efficiency-led improvements that clients are looking for. That is also creating good demand.
Okay, all right. So that was HCL Tech. Let's move on to some other stocks and stories now. Actually, before we do that, let's take a call on the IT sector. We've got, of course, Jay as well as Mayuresh with us. Gentlemen, afternoon. Naresh, on HCL Tech specifically, do you think the market's reaction was a little overdone? Or was it justified given how strong the stock was going into earnings? And between TCS, HCL Tech, or let's say even Infosys, would you buy anything now?
Afternoon, Surabhi. No, I think the price strength was obviously very, very obvious before earnings. And obviously how the guidance has come off for HCL Tech, the price reaction was very, very obvious on the stock. Having said that, I think a large part of the IT sector, the valuations are sky high as we speak. A few stocks are in late stage basis as we see it in markets by India. And therefore, I think within the large names, our own sense is that the results which have come so far, I think TCS has definitely beaten estimates by a decent margin on the EBIT front as well. The commentary was very, very positive as well. And if they continue to execute well, I think TCS can probably hold out. As far as the sector is concerned, our own take is mid-cap IT might continue outperforming large-cap IT in terms of not just how the dollar revenue growth will play out, but expectations in terms of EBIT margin actually holding up, order wins remaining healthy with a very robust pipeline, with very healthy EBIT margins as well. And commentary should be very, very supportive as we head into calendar year 25. Valuations again sky high for a lot of mid-cap IT companies. But our sense is that a lot of these companies are doing good work when it comes to AI, Gen AI in particular, which can be a game changer over the next 2 years. So our sense, mid-cap might continue outperforming large cap.
Okay, all right. Let's focus on the capital market players. BSE was higher in trade. Angel One and Anand Rathi, they reacted to their set of numbers. Vamakshi joins us to tell us about all these three names. Vamakshi, take it away.
Well, Nigel, BSE was in focus on the back of a brokerage note that came in from Jefferies. They highlighted that F&O measures impacted industry-wide option volumes by almost 70%, but the average ticket size for the industry has risen by nearly 3 times in the second week of Jan. Thus, the impact on industry premiums is seen at almost 10% in their opinion, which is much lower as compared to their own as well as the street expectations of a nearly 25% impact. Jefferies believes that the drop in clearing and SEBI regulatory fees is expected to expand BSE operating margins by nearly 10 percentage points to 64% in FY26. And given those factors, they've gone ahead and upgraded their rating on this counter to hold and increase the target price to 5,250 rupees per share. Angel One is the next counter that was in focus today, and that is because the company reported a weak set of numbers. Net broking declined nearly 10% sequentially due to impact from F&O regulations as well as weak sentiment in the cash market segment. Higher operating expenses also led to a decline in margins as well as profitability for the company. In the con call, the company highlighted that the impact from the new norms was higher than expected. They saw a one-time hit of almost 18 to 20% to the top line. However, they highlighted that they have not yet seen any long-term impact on the lifetime value of the customer, but they will be monitoring the impact coming in from the new norms for at least the next 1 to 2 quarters to ascertain if a price hike is necessary. Lastly, Anand Rathi was also down and out in trade today. AUM and revenue growth slowed down sequentially. AUM saw an uptick of only 1.76% sequentially. Revenue was lower as compared to analyst estimates, and PBT margin improved sequentially. However, net profit came more or less in line with estimates, so a subdued result is what we saw from Anand Rathi this time around.
Yes, got that. Some red there on Anand Rathi. Well, thanks very much for that. Vamakshi, we'll quickly move on to Sudarshan, who's been looking at the performance of JSW Energy today. Now, shares were almost 6% higher. The company has received a letter of intent for the acquisition of KSK Mahanadi Power Company. Sudarshan, tell us more.
So JSW Energy today has closed with a gain of more than 6% after company announced that it has received letter of intent on January 13 to acquire KSK Mahanadi Power, and bid amount by JSW Energy was around rupees 16,000 crore. Now, 2 approvals that company would require are of NCLT and CCI. Now, the question why it was positive for JSW Energy. So currently KSK Mahanadi Power has total 3,600 megawatt of thermal power generation capacity, of which 1,800 megawatt power of capacity is under operation, and another 1,800 megawatt power capacity is under construction. Now, JSW Energy believes that once the deal is done, its total thermal generation capacity will increase to 7.5 gigawatt and will help achieve company to achieve the target of 20 gigawatt that it has set by 2030. Now, apart from JSW Energy, this news was positive for 2 power financial, and those are PFC and REC, and you would have seen that both these stocks have closed with a gain of 7% each. Now, why it's positive for both these companies? So before August 2024, total dues of KSK Mahanadi Power was of around rupees 32,243 crore. And after the NCLT order came out in August, company was asked to make the payment, and it made the payment of around rupees 6,000 crore. And after that, dues came down to rupees 26,000 crore, and of which PFC is about to get around rupees 3,400 crore, and REC is likely to get rupees 2,700 crore once the deal of JSW Energy acquiring KSK Mahanadi Power is done. And that's the reason you have seen big move in all these three names.
Everyone's happy. JSW got the acquisition. PFC and REC will receive their money. It's a happy lot, all of them, in today's trading session. Thanks a lot for that, sir. Well, Jay, if coming across to you, what about these stocks? BSE is making a good fight back. Everyone was fearing the worst. Good move out there. So technically, how is it looking?
Yeah, Nigel, we had discussed this in October and November, and I anticipated higher highs to come through for BSE Limited. And right now, I mean, in fact, today's, I wanted to, for the closing bell, I was contemplating picking BSE Limited for a long, but, the structure wasn't completely clear. So I'm avoiding it. So there is some bullish potential there, but it's a bit ambivalent. That's the reason for avoiding it. So and most of the power stocks that you've just discussed, all of them looking like counter trend bounce. So they are all looking. Even Tata Power is looking like a counter trend bounce. But the PSC power names, they are good in the medium term, but they still have one more sequence of lower low to complete. And post that, we can look at them more bullishly.
So Jay, what you're saying is BSE as well, you're not expected to trend further from here, right?
Yeah, it's as I said, it's a bit ambivalent. So we can take it as with a benefit of doubt bullishness. So if you're holding it, maintain a stop loss at about 5,100 and hold on.
Okay, hold on to BSE, but you believe that these power-related names, they could have one more leg on the downside, right? Got that. There was some good news coming in for Biocon, though. HSBC upgraded the stock. Vinny joins us to help us out with more details on that. Vinny?
Yes, so we've seen a good upgrade coming in from HSBC on Biocon. They've upgraded the stock to a buy, and the target price also is what they've increased. For 30 rupees is the new target price versus the previous target price of 290 rupees. What HSBC believes is that now the company is set for an operational turnaround. Mainly this will be led by the key biosimilar launches as well as the recovery that they are expecting in generic sales. They're also saying there are a lot of multiple triggers that could come in for the company that will support the earnings growth. And do not forget, just a couple of days back, we're seeing the clearance coming in even for the Malaysia facility for Biocon Biologics, which is a big positive because this actually caters to the US market, and that is what even HSBC is highlighting, that this is actually removing the overhang that was there in terms of regulatory actions that were expected coming in for the company. So yes, all the regulatory actions and all the regulatory negatives are behind them, and now they're going to be stepping forward. Good manufacturing practices, that is also something that they are watching out for. Other than that, launch of the generic aspart from Malaysia is a key catalyst and the next catalyst of growth for the company going forward, and that is why HSBC is positive on the stock.
Okay, all right, got it. So good going for Biocon today, Vinny. Thanks very much for that. Let's now come to the news that really moved, about 4 or 5 PSU stocks in a big way just before market close. And this is, of course, the CNBC-TV18 exclusive news that we told you. The government has cleared plans to dilute its stake in 5 state-run banks to raise as much as 10,000 crore rupees. Sources say the plan to pair stake in Punjab and Sindh Bank, UCO Bank, Central Bank, Indian Overseas Bank and Bank of Maharashtra has been cleared. Each bank is likely to raise 2,000 crore rupees through a OFS or a QIP. The sources also say that the stake sale will happen in the current 4th quarter of this financial year. Government stake in all of these entities is currently above the 25% minimum public shareholding threshold, which is mandated by the regulator. So that's on the PSU banks. Mayuresh, very quickly, there was some flutter and excitement around these stocks. Do you like any of them? Beyond this divestment, would you, look at anything in a fundamental fashion?
It would be, I think, among the large names in the PSU pack, State Bank continues to remain in our global portfolio. So obviously, I think with the base that they're working out on, expectations in terms of stable asset quality, expectations in terms of stable NIMs going forward as well. And again, I think the sheer balance sheet size that they probably carry, their subsidiary performance as well, I think should be relatively better as we head into the next few quarters. I think out of the mid-cap names, Bank of Maharashtra is something that we continue holding in our global portfolios as well. superb EPS strength as we see it in markets with India. And therefore, I think if one has to go by earnings, earnings should be very, very supportive. The business update has been very, very good in Q3 so far. The advanced deposit ratio should be robust. Expectations in terms of stable earnings should provide better return ratios as we see it at markets. So I think a couple of names that we continue holding in our global portfolios.
Okay. All right, gentlemen, we will leave it on that note for this afternoon. Thank you very much for joining in and giving us your view on the markets. We need to take a very quick break, come back on the other side, and we'll get you the most important events to watch tomorrow.
Been very, very positive and very supportive. So I think for me, success definitely means everything, but I think initially nobody is born with a golden spoon. Everybody need to work hard and be smart enough to work hard. It's not just few months of hard work, but it takes years and years of hard work to come to a level. But I think coming to a level is one thing, but maintaining that level is a different thing altogether, and it takes even more time and hard work, and it takes a lot of your time to maintain that. So I think for me, success, I think badminton has been my passion. So I would do anything to be successful or to be at the top class level.
Right.
Yeah.
So just the way you handle a victory, how do you come over defeat and failure?
Definitely, I mean, every athlete or every person goes through it.
Welcome back. So positive green day for the markets after long. Lots lined up tomorrow as well, including several earnings. Let's go across to Vinny for the key events to watch.
Yeah, so important events to watch out for. Let me start with some of the global macro events that we have. We'll watch out for, in the US, the CPI data that will be coming in for the month of December. In Europe region, we'll be watching out for the industrial production data, as well as there's a NATO defense chiefs meet that will be happening in Brussels. So any important update on that front is key to watch out for. On the front of global earnings, we have earnings coming in from Citi, JP Morgan, Goldman Sachs, as well as Wells Fargo and BlackRock that also will be reporting their numbers tomorrow. Domestic front, earnings to watch out for. HDFC Life in the front, on the Nifty front. Other than that, we have CEAT, Oracle Financial Services, L&T Tech, Bank of Maharashtra, Aeroflex, among some of the other names that will be reporting numbers. Corporate action, Aditya Birla Fashions will be considering fundraising plans tomorrow. So what is the outcome of that is something to watch out for. IPO, we'll have Lakshmi Dental IPO that will be closing tomorrow. And another events to watch out for, we'll have the FinMin that will be meeting head of banks on Jan 15th, that is tomorrow. Obviously, we'll watch out for the launch that will be happening by SpaceX for 2 moon landers. So important to watch out for in terms of all these events.
Okay, all right, Vinny, thanks a lot for that. Well, before we wrap up on the show, presenting the Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we help you understand why mastery in trading isn't about capturing every move. It's about discipline to wait for the right ones.
Even experienced traders feel the sting of FOMO. A missed breakout whispers, this could have been yours. But you know what? Chasing trades isn't mastery. It's reacting to market, not controlling your approach. Chasing disrupts your edge. It increases risk, pulls you out of your strategy, and often places you on the wrong side of the move, buying into fading momentum or perhaps false breakouts as well. True mastery comes from restraint, knowing that missing one trade doesn't matter in the long run on the big picture. Your edge isn't about catching every move. It's about only executing the best ones. FOMO doesn't define a professional trader. Discipline does. Trust your edge, be patient, and let the market come to you.
Losses and I think ups and downs are part and parcel of life. It's important to let go. I know it does take time, and it is easy to say, but I think it's not just end of the world. You know, when you lose a match, you get to learn a lot more, and you need to come back stronger. That's what I've believed in, because I've had toughest matches where I was nearly there and then I just missed it out. But I think I've learned a lot from that, and for me it was very important to believe in myself and have that hope that I can do it again.
Right. So what's the Sindhu way of coming out of the defeat, getting your mind back on track? What's the mantra you follow?
Well, I mean,
you could tell us after any match that you remember which was very close to your heart and was difficult to get over.
Recently, I think, not recently, but Tokyo, I would say, where my Olympics, the second Olympics, I lost in the semi-finals. And of course, it was very, very hard, but I had mixed feelings, mixed emotions where, you know, I was feeling bad, where if I have to think I lost an opportunity, you know, I lost a chance to go to the finals. And on the other side, I was thinking, do I have another opportunity to play the bronze medal match? So I was like confused, I was upset, I didn't know what to do. I just had that, I would say, less than 24 hours to decide and come back stronger. So I think that was the perfect example that I could remember and tell you now, because it was really hard at that point of time, because you lost the semi-finals and you lost the opportunity to go to the finals and get a gold or a silver. Rather, you have another opportunity to prove yourself, right? So, yeah, I mean, my coach and my parents just told me that there's a lot of difference between the fourth and the bronze. So, at that point of time, my mindset was like completely like, I was like, no matter what. I couldn't even sleep that night because I had a match next day in the morning, and obviously I just gave my 200% and I got that bronze back. So
right, just come back harder. Just come back even harder.
I think the belief is very, very important. Just believe in yourself.
Didi, we'd also like to ask you about this debate over 70-hour, 90-hour workday. It's a rage on social media. People have different views about productivity, not being forced into 90 hours. Rajiv Bajaj has said that if you want to work 90 hours, it should really start from the top, and if it's successful, then implement it. And it's not really about the number of hours you work, but about the efficiency and productivity you show. What would be your view?
I would not say this is right and this is wrong. My only thing would be, you know, how many hours ever it is. I would say it needs to be useful, and there need to be a good change in whatever you do. I think that is the only thing I can say, because talking about hours, I think people ask me how many hours do I play, you know, is it important that you play so many hours, or is it important that you play only for a few hours? So
Hello and welcome to Business 360. I'm Ashna Solanki. Here are the headlines we're tracking this evening. Sensex and Nifty end with marginal gains after hitting 7-month lows yesterday. Mid-cap index sees a sharp recovery. Financial stocks also rebound. Indian rupee remains under pressure, hitting another record low in today's trade. $1 is now worth almost 87 rupees. Indian currency fails to hold early gains despite overnight weakness in the dollar index. Government sources say Indian refiners will not procure Russian oil from ships sanctioned by the United States, but also play down any immediate impact on supplies at least for 2 months. Crude oil prices are up over 9% since the start of the new year. Insurance regulator nudges large companies to go public. Sources say parent entities like HDFC Bank, Bajaj Finserv, Tata Capital and SBI likely to submit listing plans to the insurance regulator by the 31st of January. That's an exclusive. Government clears minority stake sale in 5 public sector banks to raise 10,000 crore rupees. Sources say Central Bank, UCO Bank, Punjab and Sindh Bank, Bank of Maharashtra and Indian Overseas Bank set to dilute stake and raise 2,000 crore rupees each. Industry flags multiple concerns over the draft data protection rule, says it is cumbersome to seek consent from existing users for personal data collections, called for detailed guidelines to implement parental consent for those aged below 18.
Israel and Hamas inch closer to a ceasefire deal even as the Israeli army continues to pound Gaza. At least 18 people killed overnight. Incoming US President Donald Trump says a deal may be hammered out by the end of the week. Wildfires rage in Los Angeles for the 7th straight day. Firefighters brace for potentially dangerous winds that can amplify the fires. With potential losses estimated at $200 billion, this is the costliest blaze in the American history. Pure fiction. TikTok denies a Bloomberg report that claimed Chinese government was considering selling the platform's US operations to Elon Musk. The US Supreme Court may soon uphold a legislation that bans TikTok in the country unless its Chinese parent sells its stake. The BCCI could soon treat cricketers like corporate executives. Indian Express reports the cricket board is considering performance-based variable pay after recent test series losses to New Zealand and Australia. All right, let's start with the market action. Sensex and Nifty ended with marginal gains. After yesterday's brutal sell-off, Sensex gained nearly 170 points. The Nifty gained 90 points after hitting its lowest level in 7 months yesterday. Mid-cap saw a sharper pullback. The mid-cap index gained over 2%. Financial stocks led the rally with Nifty Bank index gaining nearly 700 points. Prashant Nair is here with a market wrap.
Well, the backdrop was a little better as we came into trade this morning. And not another day of rise in the dollar, yields, oil prices, all a little well behaved as compared to, of course, the picture yesterday morning. And I think the market here, having been sold down quite a bit in the last 3-4 days, indices had come off between 3 and 4.5%. There was that room for a bounce, and bounce we got across indices. So the Nifty up on your screen, the Nifty Bank, a much bigger bounce, although their gains were paired towards close last 30 minutes. Mid-cap and small-cap indices between 1.5% and 2.25% gains coming through on those two. Remember, these indices had fallen between 3 and 4.5% yesterday. I'll start with the Nifty moves and what was up. So the Adani Group stocks, many have basically halved, and these stocks came back strongly, between 8 and 18%. So on the Nifty, Adani Enterprises and Ports made their presence felt. Hindalco, NTPC, Bharat Electronics, all old economy, infra kind of names really. There was one exception, Shriram Finance on the Nifty, which participated. Downside, HCL Tech, big casualty, elevated earnings expectations going into the numbers. And of course, the numbers per se on their own were not bad, but fell short. HUL, Apollo Hospitals were the other two. In the broader market, after a long time, advances outnumbered declines. Mazgaon Dock was the top volume-led gainer. PFC, NTPC green, so PSU is looking good. Names like Electra, recent listing, Transrail, Piramal Enterprises, big gains. Goldium, the lab-grown diamond maker. Motilal Oswal Financial Services, Bandhan, Tejas Networks was another one which came up very nicely. Losses in the broader market coming through in Angel One, K Fintech, Capital Market Plays, HUL, Shakti Pumps, LTI Mindtree, United Spirits, Zentech and MedPlus were some of the losses which really came through. It's a small reversal of the big everything down kind of the day we had yesterday, and we had a bit of a reversal, not very large, but some reversal that we've had today. For the market to recover in a real way, you need some base building, and for that, the global environment needs to be conducive, which I think we're not very sure of with what just a few days left to go for the 20th of January when the incoming President Trump takes over. Back to you.
Right, thank you, Prashant, for that. On to the money market action now. A day after recording its steepest fall in nearly 2 years, the Indian currency weakened further today. It ended at yet another record low against the US dollar, underperforming other emerging market currencies. $1 is now worth nearly 87 rupees. Lata Venkatesh is here with a wrap of the day's action.
Yep, that was the story of the rupee. Started higher but lost all its gains in a couple of hours and ended at a fresh low of 86.63. Now, the rupee started higher because the dollar was weaker overnight. The index fell from 110 to about 109.5.6. So all emerging market currencies recovered a bit, but there was such persistent dollar buying, mostly by funds, of course, the Reserve Bank was supplying, but the intervention was kind of tepid. It was not trying to protect any level like yesterday, and therefore the rupee gave up its early gains. Now, the attitude to the rupee was extremely well summarized by one of our guests from Goldman Sachs. He said that the dollar is not weakening anytime soon. Higher for longer is how they see the dollar because of a very strong US growth. A second point, the Indian rupee was outperforming other EMs, but it started losing because the Indian growth story became a little dull. For the rest of the year, they do expect that the rupee will go towards the 87 or 88 mark. It depreciates, but it will continue to outperform other EM currencies.
We think the dollar is going to be stronger for longer. We've just marked our forecasts in that direction. We think there's another 4-5% upside still to the broad dollar trade weighted index. So, this is a combination of continued firm U.S. growth, U.S. exceptionalism, and, shifts that are occurring on the rate side, but also tariffs. Tariffs are coming, and I think that's a key part of our view of dollar upside from here.
Right, India's wholesale inflation rose to 2.37% in December from 1.89% in November. The government attributed the rise to the increase in prices of manufactured items and a low base effect. Now, government data showed that inflation in food items declined slightly, led by a drop in wholesale prices of cereals, paddy and wheat. Meanwhile, wholesale prices of vegetables, fruits, milk and meat accelerated. The union government has cleared plans to dilute its stake in 5 state-run banks to raise as much as 10,000 crore rupees. Now, sources say the plan to pare stake in Punjab and Sindh Bank, UCO Bank, Central Bank, Indian Overseas Bank and Bank of Maharashtra has been cleared. Now, each bank is likely to raise 2,000 crore rupees through a qualified institutional placement. Sources say the stake sale will happen in the current fourth quarter of this financial year. Government stake in all these banks is above the 25% minimum public shareholding mandated by market regulator SEBI. Shares of JSW Energy soared after the company backed the KSK Mahanadi Power under the corporate insolvency resolution process of the IBC. The company offered almost 60,000 crore rupees to financial creditors, outbidding Adani Power and NTPC. The acquisition will give JSW Energy control of KSK Mahanadi's 3,600 megawatt thermal power plant. United Spirits fell 5% in trade after the announcement of a leadership transition as part of the firm's CEO succession plan. MD and CEO Hina Nagarajan will step down on the 31st of March to take on a new role within the Diageo Group. Praveen Someshwar has been appointed as CEO designate and will take charge from the 1st of March. On to a CNBC-TV18 exclusive, insurance regulator has nudged large companies to go public. Now, sources tell CNBC-TV18 that parent entities like HDFC Bank and SBI are likely to submit listing plans to the insurance regulator by the 31st of January. Yash Jain is here with more. Yash.
Parent entities of particularly large life and general insurance companies are expected to submit the public listing plans of their insurance subsidiaries with the insurance regulator by January 31st. Which are these parent entities? HDFC Bank, Bajaj Finserv, Tata Capital, SBI. These are the entities which are likely to submit the public listing plan for the insurance subsidiaries. In fact, what we've been picking up is that the insurance regulator, IRDAI, had met the chiefs of some of these parent entities very recently to speak to them about their plans for listing their insurance subsidiaries. And in response to that, after the discussions, these parent entities have submitted to the regulator that they will be giving that listing plan soon, in fact, as soon as by the end of this month. Just to point out the insurance subsidiaries, the large subsidiaries that we are talking about, Bajaj Finserv's both insurance subsidiaries, Allianz Life as well as Allianz General, are unlisted. Tata Capital's unlisted insurance subsidiary is Tata AIA Life. HDFC Bank's unlisted subsidiary is HDFC Ergo, SBI's unlisted subsidiary is SBI General. So of course a listing plan with respect to all these large life and general insurance companies could be submitted very soon. The chairperson, just to highlight, in an old interview just about 2 months ago given to us, had alluded to this fact, saying that IRDAI is looking at age and size of insurers to draw out a list of players which are ready for IPO. They will have more intense discussions with these players, and this is exactly what has materialized.
Right, thank you, Yash, for that. Crude oil prices hovered near 4-month highs as investors weighed the impact of outgoing US President Joe Biden's toughest sanctions yet on Russian oil. Now, oil prices have surged by over 9% since the start of the new year. On Monday, the US announced sanctions on 2 oil producers, including Gazprom Neft and 183 vessels that carry Russian oil. The move could potentially cost Russia billions of dollars a month. And speaking of the fresh US sanctions on Russian oil, government sources say they will not import oil from Russia using sanctioned ships. Sources also say there will be no immediate impact on the supply. Sapna Das is here with the details. Sapna.
That's right. The government, as well as I think the refiners themselves, are not expecting an immediate impact of the fresh US sanctions on Russian ships, so to speak, at least not for the next 6 to 8 weeks. So there is a kind of a window available, or a wind down period that will be available for everyone to rework arrangements, look at a new equilibrium to source crude oil, so to speak. So down the line, basically refiners are now going to study the market very closely. If some renegotiation is required in terms of fresh sourcing, maybe from some Latin American countries, or maybe even from the Middle East, West Asia. So, as you may look at it, that is a possibility over the next 2 odd months, so to speak. Of course, no sanctioned ship will be allowed to source crude oil to India. That's very, very clear. Now, it all boils down to basically also the pricing, the kind of crude that the refiners will be looking at, and also what happens with discounts. So basically, anything that is non-Russian at the moment appears that the discounts will not be there, or they will come down. There could also be some options as to if somebody is willing to sell at $1.60 and below. That is also something that can be considered. So various permutations and combinations will be looked at. Of course, the entire process in the long run can be disruptive if the issues that I'm talking about are not carefully addressed and not carefully handled. But as of now, at least for the next 6 to 8 weeks, do not expect a major disruption or any kind of a problem, so to speak. And also we'll have to wait and watch and see what happens to the discounts that we have been getting on Russian oil.
Right, thank you, Sapna, for that. Moving on, the industry has flagged multiple concerns over the draft data protection rules. Most stakeholders have called for detailed guidelines to implement parental consent for those aged below 18. Ashmit Kumar is here with more. Ashmit, tell us more about the industry's concerns.
Well, stakeholders like industry, academicians, advocacy groups, think tanks were here in full strength as they expressed their concerns on the recently released DPDP rules to the IT minister. Amongst the core concerns that have emerged is what about the personal data of existing users, of legacy users. For that, companies such as PhonePe and Paytm pointed out that giving individual notices for collecting all this data that has already been collected will be a long, tiresome process, will be a cumbersome process. Solution that they've given is that one comprehensive notice be issued to legacy users, to existing users, and unless the user chooses to opt out, the company should be at liberty to go ahead with processing of personal data. Another concern that emerged was with respect to parental consent. The DPDP rules provide for children to access online services only after getting parental consent. Number of questions raised about the mechanics of this. How will it function? What if children falsify their age? Will their access to online services be limited if the parents are not digitally aware? All these questions requiring answers. CII flagged concerns about how there's only a limited window of just 72 hours to flag the issue of data breaches before the Data Protection Authority. There were questions raised about what ideally should be defined as reasonable safeguards for security deployment for protecting this data, and also questions being raised about data localization. So clearly a whole host of issues. The minister assuring that they are fully invested in having extensive consultation, also hinting at perhaps a 15-day extension to the February 18th deadline for inviting public comments.
All right, it's time for a short break, but news and updates continue. Stay tuned.
keeps going on at times. But whatever it is, it needs to be in a very smart way, and it needs to be very useful for everyone, and everyone needs to be happy at the end of the day. That is it.
My final question, what do you think India as a country can do more in terms of encouraging sports and making sure we do better at Olympics year after year? Athletes like you work very hard. It's a tough journey. You go through injuries, defeats, failures, bounce back again. It's a constant journey. But what can we do to have a greater sporting culture all the way from top to the bottom, or from bottom up?
I think it's very important that you have a very good system. That is very important. And I think everything needs to start from the grassroots level. Not that when you come to a certain level, people then say that, okay, you know, we need support or we need the infrastructure or everything, but it needs to start from the grassroots levels. And I think I'm happy to say that we've been getting a very good support from the government, and there've been good support from the sports authorities. At the same time, I think there needs to be a lot more leagues happening, so that, you know, there are a lot of youngsters who are doing really well, but, you know, not able to prove themselves. I think leagues, now if you see there've been Coco, and then there've been tennis and pickleball, a lot of leagues are coming up, and I hope there will be a lot more in every sport, because these kinds of leagues, you know, a lot of people get a recognition in terms of, you know, they get to see a lot of athletes who take them as an inspiration and prove themselves and have that confidence that, yes, even we can do it. Because a lot of people are doing really well, are working hard, but they're not getting that opportunity, or not able to have that platform where they can prove themselves. So leagues that like these will definitely help them to come up and, you know, think that, yes, you know, we also have something to actually look up to.
Welcome back. Israel and Hamas are inching closer to a ceasefire deal, even as the IDF continues to pound Gaza. Outgoing U.S. National Security Advisor Jake Sullivan, who attended the talks in Qatar's Doha, has said that a deal may be signed by the end of this week. Incoming U.S. President Donald Trump has hinted at a truce deal by the weekend as well. His Middle East envoy was a part of the Doha huddle.
We also discussed a possible hostage deal.
Israeli Foreign Minister Gideon Sa'ar on Monday said negotiations toward a possible release of hostages in exchange for a ceasefire in Gaza had progressed. That comes as an official briefed on the negotiations described to Reuters a midnight breakthrough in talks between the sides in Doha. The official said the text for a ceasefire and release of hostages was presented by Qatar. The session included envoys of both outgoing U.S. President Joe Biden and U.S. President-elect Donald Trump.
Israel wants a hostage deal. Israel is working with our American friends in order to achieve a hostage deal, and soon we will know whether the other side wants the same thing.
We are close to a deal, and it can get done this week. I'm not making a promise or a prediction, but it is there for the taking, and we are going to work to make it happen.
A Hamas official who asked not to be named told Reuters on Monday that discussions over some core issues for a ceasefire deal in Gaza had advanced. The United States, Qatar, and Egypt have worked for more than a year on talks to end the war in Gaza, so far fruitlessly. Trump's January 20th inauguration is now widely seen in the region as a de facto deadline. The president-elect has said there would be, quote, hell to pay unless hostages held by Hamas are freed before he takes office, while Biden has also pushed hard for a deal before he leaves.
We're pressing hard to close this. The deal we restructured would free the hostages, halt the fighting, provide security to Israel, and allow us to significantly surge humanitarian assistance to the Palestinians who suffered terribly in this war that Hamas started.
The warring sides have agreed for months broadly on the principle of halting the fighting in return for the release of hostages held by Hamas and Palestinian detainees held by Israel. But Hamas has always insisted a deal must lead to a permanent end to the war and Israeli withdrawal from Gaza, while Israel has said it will not end the war until Hamas is dismantled. Israeli Finance Minister Bezalel Smotrich, a hardline nationalist who has opposed previous attempts to reach a deal, denounced the latest proposals as a, quote, surrender and a, quote, catastrophe. Angry family members of Israeli hostages confronted him at a Knesset session on Monday, accusing him of abandoning their loved ones. Bloodshed continued in Gaza on Monday, where medics said Israeli military strikes killed at least 21 people. That number includes 5 killed in an Israeli strike at a Gaza City school sheltering displaced families.
From one conflict-hit region to another, dozens of Ukrainian drones struck 3 Russian cities, including Saratov and Engels, overnight. Russian authorities said that 2 industrial sites were damaged. They also claimed to have downed more than 200 Ukrainian drones and US-made ballistic missiles. Earlier, the Kremlin had warned that Russia will retaliate every time Ukraine uses US-made weapons. Wildfires rage in Los Angeles for the 7th straight day. Firefighters brace for potentially dangerous winds that can amplify the fires, with potential losses estimated at $200 billion. This is the costliest blaze in the American history. More than 300 pilots at Akasa Air have been grounded for nearly a year due to a shortage of aircraft. Now, CNBC-TV18 has accessed an email written by the pilots to the company's management complaining about the lack of flying hours. Madiha Mujawar is here with the exclusive details. Madiha, what's happening at Akasa Air?
Well, right, as you mentioned, CNBC-TV18 has accessed series of emails allegedly written by Akasa Air pilots to the Aviation Ministry and DGCA, highlighting concerns over training clarity and lack of flying hours. Now, we learned from sources that over 300 Akasa Air pilots have been grounded for nearly a year due to a shortage of aircraft. The airline operates with a ratio of 30 pilots per aircraft, which is significantly more than the 10 to 12 pilots per aircraft seen with other narrow-body operators like Indigo, Air India Express and SpiceJet. Now, this has led to pilots losing flying allowances and missing their mandatory bi-yearly training like recency training or currency training. Now, pilots allege that bonds that they have signed while joining Akasa Air amounting to 18 lakh rupees to 48 lakh rupees for different categories of pilots is preventing them from quitting the airline despite not being able to fly. Now, we reached out to Akasa Air seeking their response on the issue. The airline maintains that its pilots have consistently provided exceptional feedback and are extremely satisfied with their roles and the work environment. The airline says it has the fastest aircraft order book in India, which is 226 aircraft in just 17 months of its operations. With a fleet of 26 planes currently, Akasa expects to receive its 27th aircraft by the end of January 2025. Now, responding to allegations on non-flying hours, the airline says that over 60% of the total 775 pilots have already started accumulating flying hours, and a vast majority is set to fly by the end of 2025. Now, taking this number into account, if the total pilot strength is 775, then 60%, which is 465 pilots, are flying 26 aircraft, which is over 17 pilots per aircraft. Now, the airline says vast majority, which is, say, assuming 90% of 775, that is 232 more pilots will get to fly by end of the year, according to what the airline has told us. Then, based on the current structure, the airline is expecting to add at least 13 planes in 2025 versus 4 planes that it received in 2024. So the total fleet expected would be 39 aircraft by end of 2025 for 90% of the 775 pilots to fly.
Right, thank you, Madiha, for that comprehensive update. Before we wrap up this edition of Business 360, here's the Growth Code, a collaborative initiative by Grow and CNBC-TV18. Our mission is to equip you with valuable insights and strategies to navigate the markets and make informed investment decisions. Today, we'll help you understand why mastery in trading isn't about capturing every move. It's about the discipline to wait for the right ones.
Even experienced traders feel the sting of FOMO. A missed breakout whispers, this could have been yours. But you know what? Chasing trades isn't mastery, it's reacting to market, not controlling your approach. Chasing disrupts your edge, it increases risk, pulls you out of your strategy, and often places you on the wrong side of the move, buying into fading momentum or perhaps false breakouts as well. True mastery comes from restraint, knowing that missing one trade doesn't matter in the long run or the big picture. Your edge isn't about catching every move, it's about only executing the best ones. FOMO doesn't define a professional trader. Discipline does. Trust your edge, be patient, and let the market come to you.
Hello and welcome to Commodity Champions. I'm Manisha Gupta. Well, we are in interesting, even critical times for that matter when it comes to agriculture as a sector. Well, we are looking at Rabi crop on one side, and on the other side, it also is about climate change, climate resilience, and the availability of seeds. And then there's another aspect to it, and that really is about import dependence, whether it is about pulses or edible oils. The government clearly has been doing quite a bit. The budget is round the corner as well, and that is something that we will also focus on the show today. And apart from that, it is about the currency volatility. Various Asian currencies have been declining, including Indian rupee, which has been making string of all-time lows since the last 3 or 4 months. And 2025 has started on a similar note as well, where 86 to a dollar also seems to have broken now. Well, the markets also are looking at, in sense of agriculture, imported inflation, if we can call you that. Well, to talk all of that, we are now joined by Mr. Sumit Gupta. He's CEO at Asia Business at McDonald Pelz Global Commodities. Sumit, hi, thank you for joining. And because the top conversation clearly is on currency, the way the dollar has been increasing, gaining, appreciating, and we've seen all various high-yielding currencies, commodity currencies, including the Indian rupee, continue to decline. First of all, your sense on currency and its impact on agriculture.
Hi, Manisha ji, happy Lodi, and it's a very important festival. It's a festival of harvest in majority part of the country. And currency, as you have mentioned, is a very important component of both export and import. And even whatever you measure the wealth of people, it is measured in dollar terms of per capita income and GDP. Now, as far as dollar is concerned, we have seen a trend where dollar index has already touched now 110, and dollar is getting strengthened against all other currencies. And we believe that this trend is going to continue for some time because as Trump is taking over on 20th and his three main focuses will always be tariff, trade, and Trumpism, and where he will talk about bringing onshoring, or bringing more investment opportunities into US. And potentially is going to give a little bit of hard time to Asian and emerging market currencies. And we will see, as you have rightly mentioned, we'll be importing inflation because of that in days to come. And we have lived through a very stable INR regime in last few years. And this kind of volatility is going to stay, it's going to happen at least